Okay, good morning, everyone. Good morning, or good afternoon, or good evening, wherever you happen to be in the world right now. This is a live global event, so I don't know where you're at right now. While we're on the subject, why don't you tell me where you're at right now? We've got plenty of people logged on already. We'd love to hear hello and hear where you're from. My name is Greg Lewis. I'm the marketing director here at MetaStock, and we're really glad to welcome you to today's live marathon event, the May 2021 Traders Summit. We have 8 great presentations. I know you're going to enjoy them. While you're waiting, please go ahead and make sure to like and subscribe our channel and click the little bell so that you'll be notified when we have events like this, which we do several times a week typically. Also, if you're watching this on YouTube, we're simulcasting today on YouTube as well. Hello, Scott Gow from Canada. Forgot what I was saying. Oh, we're simulcasting this on YouTube and GoToWebinar, and you can watch it in either place. The recording is actually in YouTube. So the experience is essentially the same, but the reason you might want to go ahead and register and go to webinar, and I've got the link posted pinned at the top right now, is because then you'll be eligible for the free bonus stuff that the presenters typically, I think almost all the presenters have a bonus giveaway they're doing today, and that will make you eligible for that. Not eligible, you'll get it. So go ahead and go to metastock.com/traders-summit, metastock.com/traders-summit, or just click on the link I provided in the chat, or just go to metastock.com and click on the big old banner right at the top, and go ahead and register for today's event. Then you can watch it here, go to webinar, or whatever you want. But remember, the recording will be here on GoToWebinar, and we will be starting here in about 8 minutes. This little pre-broadcast 10-minute thing will be... oh, actually, no. We typically edit them out, but when it goes this long, YouTube doesn't allow me to edit it out. So if you are watching this right now and it's recorded, you can just fast forward through this bit where I'm talking. No one's to listen to this. And I go to wherever you want. Go to any presentations you want. All right, so I think I'll go ahead and check in with Jeff Gibby, our host today. And while I'm doing that, you can watch this little video.
Hi there. Greg Lewis, MetaStock Software. As the marketing director, I get asked all the time, what is MetaStock? How can I help my trades? Well, stick around for about 3 minutes and I'll tell you. MetaStock is an award-winning software and data package that has been helping traders for over 35 years. Simply put, MetaStock is a tool for traders like you to analyze the markets. MetaStock helps you take the guesswork out of trading by offering a methodical, systematic approach to some key questions all traders come up against. Questions like, how do I decide which securities to trade when there are literally thousands to choose from? Which strategy should I use, and how do I test that strategy before spending my first trading dollar? When should I enter and exit a trade? How can I effectively manage the securities I'm interested in? And of course, how do I know where prices will go next? At the core of MetaStock are the Power Tools. The Power Tools give professional-grade analysis tools to private traders like you and me. You can scan the market with the MetaStock Explorer to filter and sort securities that show buy and sell signals based on your criteria. The MetaStock System Tester lets you test most strategies through a process called backtesting, which allows you to see how your strategy would have performed over time. You can easily manage and monitor the securities you are interested in with Quote Center. Quote Center lets you sort on a variety of criteria to view the data that's important to you. Then just double-click on a security if you want to see its chart. With the MetaStock Forecaster, you can even take advantage of patented technology to view probable future prices. If you're an options trader, you're going to love MetaStock's Option Scope. Option Scope puts all the critical info at your fingertips, displaying sortable, customizable, color-coded options data, including the Greeks. And MetaStock has solutions for traders of all levels and interests. If you're just getting into trading, you will appreciate the education offered by our many built-in systems. In addition to pointing out buy and sell signals, MetaStock explains how they work in an easy-to-follow commentary window. MetaStock has built-in systems based on popular strategies like MACD, Bollinger Bands, turtle trading, candlesticks, and many more. MetaStock even has the very popular and exclusive Rahul Mohindar oscillator system, or simply known as the RMO. And as you become a more experienced trader, MetaStock grows with you. Advanced analysts will enjoy the comprehensive list of trading systems and indicators and the ability to build their own systems. And if you're a day trader, you can't do better than Zenith, the real-time news, data, and analysis package offered by Refinitiv, a world leader in market data. Add on the world-class support, and it's not hard to see why MetaStock has won the Stocks and Commodities Reader's Choice Award for 26 consecutive years. To find out more about MetaStock and how it can help your trading, visit metastock.com or contact a product professional via phone, email, or chat.
Did you enjoy that? Do you know about, I can't talk while this is on my head because I can hear myself in my own head, and even though that's good sometimes, I suppose, if your conscience wants to tell you something good or bad, but it's hard when you're trying to broadcast. So, hey, I hope you enjoyed that video. I actually recorded that in my basement just about a year ago in the midst of the pandemic, right when it was at its height. We're doing pretty good here in the United States. Vaccinations are coming along pretty well. I know that's not the case everywhere in the world, and we do certainly wish the best to everyone, and I hope that what continues to be a trying time isn't horribly trying for you. So far as the markets are concerned, that's where today's event will come in. They'll tell you how to respond to today's current events, and it's really a good presentation today. I know you'll enjoy it. The first person up is Steve Bigalow, then we have Vince Vora, Kevin Nelson, Rick Sadler, our own Jeff Gibby, Force of Nature, Oscar Carboni, Dr. I can't think of his name, and Hema Reddy. What's his name? Top Dog Trader. I'm so sorry, I can't remember your name right now. I normally always have it. I'll think of it in a second. Barry Burns. Dr. Barry Burns will be here today. I'm so sorry, Dr. Barry Burns. I apologize. Anyway, we're going to be starting here in about 2 minutes. I see that we do have our first speaker all synced up and ready to roll, and Jeff looks like he's ready to go. So I'd like to finally remind you that we really do encourage your feedback and your input and your questions. Just chat away as much as you want throughout the day. It's going to be 8 hours. You don't, of course, have to sit here and watch the entire thing. That's why we're recording it. You can watch what you want to and then fast forward and move around as you please later on if you'd like. But it is good to watch the live events that you're interested in, because then you have a chance to ask questions directly to the presenters. And the presenters can't see your questions necessarily in YouTube, but Jeff passes them all along. So either they'll see it pretty quick or during the Q&A. And they usually get to most questions, so don't hesitate at all to ask questions. And they usually love your positive comments. If you're feeling positive, that would be great to hear too. So again, we're starting here in about 1:30, and I'll ask one last time to please go ahead and like and subscribe and click the notification bells so that you can get notification of all these events that we do, usually several a week. And if you do have questions along the way about MetaStock specifically, and you want to talk to somebody in private about that, and not in a public forum, you can talk to our sales guys who are product professionals who are available right now. And all you have to do is go to metastock.com/saleschat. That's metastock.com/saleschat. If you have any questions about MetaStock or any of the products that might come up today, they can certainly help you with that, and we encourage you to do that. Okay, I'm going to go ahead and make sure we're good over there, and we'll see you in about 40 seconds. Thanks so much.
All right. Good morning, everybody. I hope you're doing well. My name is Jeff Gibby. I'm going to read a legal disclaimer and then kick off to Steve over here. Let's go ahead and get started. Welcome. I'm glad you're here. Let's go ahead and get to the so-called promised legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators of features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So there you go. I hope you enjoyed that. I want to say thank you for Stocks and Commodities for sponsoring today's Online Traders Summit. They sponsor every single one of them that we've done since, I think we've been doing these like 8 years now. So they do a great job. I'm glad they're able to sponsor it. We really appreciate them. Of course, we're here, our MetaStock. MetaStock's an award-winning software program. It's been rated #1 in its price category by the readers of Stocks and Commodities magazine. And we're going to be talking a lot about it today. Let's get to the speakers. Today, our first guest is Steve Bigalow. Steve is a good friend of mine. I've been working with Steve for a decade probably now, maybe a little bit longer than that, but I love Steve. He has such a good way of kind of teaching and talking about candlestick patterns and formations and tying those to, really good trading opportunities, finding them. We've built with Steve one of our most successful add-on products to MetaStock. A very smart guy, absolutely have respect for Steve. So Steve, how are you doing this morning?
Doing good, Jeff. Welcome, everybody.
Let me go ahead and turn the camera over to you. So let's do that real quick. Or not the camera, but the screen.
All right, let's make sure we're getting to the right screen. Which one came up?
I see. Now you're connected to GoToWebinar. And so do you know how to change it, or should I walk you through that real quick?
Well, let's see.
Yeah, it'll be under sharing on the console.
All right, show screen. All right.
And there's a little down arrow next to screen.
Yeah, now I have to figure out which screen it is. So let's.
If you do highlight the screen, it'll put a big green mark around which one you're going to share.
Okay. Let's see. There it is.
Perfect.
Okay, great.
First try.
All right.
Steve, it's all yours.
Okay. Well, thank you for the invite. Welcome, everybody. I'll try to go through this with kind of the logic of candlestick analysis that, and we've narrowed it down, or for today's presentation, probably the 5 strongest signals and patterns. Now, remember, out of the 50 or 60 candlestick signals, over the last 40 some odd years, I've reduced it down to, I just lost the question and answer box. I always do that. So to the 12 major signals. Now, the reason I've reduced it to 12 major signals is because when I first started learning candlesticks many decades ago, when nobody knew about candlesticks, I would ask people when the chat rooms on the internet just started, I would say, why isn't everybody using candlestick signals? They're so logical and they're so accurate. And the answer was there's too many of them and they didn't always work. Well, I kept figuring if they didn't work, we wouldn't be looking at them 400 years later. And there were 50 or 60, which was a lot to learn. But as I discovered, when I went back through and analyzed which charts or what signals occurred at the bottoms and what signals occurred at the top, these 12 came up over and over to the point where they came up 99.9% of the time. So I tell people, don't spend mental time and energy learning all 50 or 60. If you learn 6 bullish and 6 bearish, you'll have more trades than you'll ever be able to handle. Then on top of that, the candlestick rice traders also showed how the different patterns that were produced because of one simple element, that investor sentiment works the same way time after time. So we have narrowed it down to where there's about 18 top ranked signals and patterns. So if you're learning the signals, you're learning the patterns, and then the top ranked signals and patterns, that's a lot to learn. So I tell people, learn 5 or 6 well. And when you learn those 5 or 6 well, you become an expert at those, knowing exactly when to buy, when to sell, and how to maintain that trade. So we're going to go through these 5. These are the 5 that if I was going to pick out 5, these are the ones I'd use, because the Japanese rice traders have everything in their trading or their analysis of a candlestick chart pattern of very simple logic. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. So we've got indicators that show us where it's time to buy, where high probabilities. And that's the on my charts, for the people that aren't familiar with my trainings, you've got the 50-day moving average, which is the blue line, the 200-day moving average, which is the red line. And the reason those are on the charts is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. Jeff, I've lost the question and answer box, so I'll rely on, oh, there it is. I got it back. Okay. So if you have any questions as we're going through this, feel free to type it in anytime. So where do most people sell? They panic sell at the bottom. Oh, I was talking about the moving averages. Here's the most important one on our chart. This is the 8 exponential moving average, which we call the T line. Very simple concept. If you see a candlestick buy signal and a close above the T line, you can stay long. Oops, I'm on the wrong charts to show that. I want to get that. Again, where do most people buy? They buy exuberantly at the top. And there's a caveat. The T line acts like a natural support and resistance level of human nature. So if you combine the candlestick signals, which are the graphic depiction of investor sentiment, with the T line, which acts like a natural support and resistance level of human nature, you've got an extremely powerful, high probability trading platform. So very simple T line rule. If you see a candlestick buy signal and a close above the T line, you can stay long until you see a candlestick sell signal and a close below the T line, that combination. Conversely, if you see a candlestick sell signal and a close below the T line, you can stay short until you see a candlestick buy signal and a close back up above the T line. The caveat to that is the further away you move from the T line, the higher the probability it's going to come back and test it. So one of the strongest signals that we can use is what we call the best friend signal. That's a doji followed by a gap up. Remember, a doji is where there's indecision between the bulls and the bears. They open and close basically at the same level. And the Japanese rice traders provided different names for these dojis. The dragonfly doji looks like a dragonfly, opens at the top, trades down, and closes back up at the top. The gravestone doji looks like a gravestone because the Japanese rice traders explain it as being the warriors coming out of camp, going into battle, getting beaten back into camp by the end of the day, leaving their dead all over the field. That's the gravestone. But the important factor is the bulls and the bears have gotten to equilibrium. So anytime you see a doji type day, especially in the oversold area, and my overbought and oversold is using stochastics. My stochastics number is 1233. If stochastics are below 20, obviously you're in the oversold. If they're above 80, you're in the overbought. So very simple logic. The Japanese race traders say if you see a candlestick buy signal in the oversold area, the probabilities are pretty strong. You're going to be starting an uptrend. See a candlestick sell signal in the overbought area, high probabilities it's time to close out the trade or go short. So anytime we see a doji type day, this is a hammer doji followed by a gap up, we call it your best friend because there's two expectations. Not only do you have a high probability, this one is occurring right now, BGFV, because of the doji best friend gap up through the resistance level. You have a high probability that you're going to head in the right direction, number one. And number two, a high probability that the magnitude of that move is going to be extremely strong. So that's why we call it your best friend. Because not only do you know the direction, but you know that it's going to be a very strong price move. So anytime you can analyze where there's been a best friend signal telling you there's a strong bullish reversal, and you can see what everybody else is watching, like a wedge pattern breakout, that tells you that's time to get into that trade, that the next wave is now in progress. And it works just as well on the bearish side. There's your kind of your doji hammer or a shooting star signal gap down. That would imply today that RKT Rocket is going to be trading lower. So the doji rule is very simple. The price will usually move in the direction of how they open after a doji. And the power of the best friend signal is there's indecision between the bulls and the bears, and then when they gap it one way or the other, that's telling you there's a lot of strength coming into that new direction. So the scoop pattern is one that's been working very effectively like right now. Scoop pattern has a very simple visual analysis. First of all, you probably wouldn't even pay attention to this until right over here. You can see where the buying has started and created an uptrend. And this right here would have been our alert. Look at the little doji gap up coming out of the oversold area. Then we can see there's a rounding bottom. And then without any more visualization, you instantly see that there's a flat handle here. Now all of a sudden you have a scoop pattern. And this is where the T-line rule kicks in. We know that the results of a scoop pattern is a strong slingshot effect. So notice how you didn't have to worry about any trading or closing on this one until you saw a candlestick sell signal and a close back below the T-line. That factor right there keeps you from doing what is the biggest faux pas of most investors. That they want to take a profit because they have a profit. Now, that was me before candlesticks came along. Because I so rarely had a profit in a trade, what was my first fear? Oh, I have a profit. Boy, would I look stupid if I let it turn into a loss. So you take a profit real quick just so you can say you took a profit. On the other hand, if you bought something that was heading down, what's everybody's rationale? Oh, I'm going to sell this when it gets back up to where I bought it. So they hang on to it until they can't stand the pain anymore, and they sell it out at the bottom. That's called pooping like an elephant and eating like a bird. Or the other way around, eating like a bird and pooping like an elephant. So this allows you to maintain profitable trades as long as it doesn't trade below the T-line. The T-line is the 8 exponential moving average. We call it T-line because when we first worked on it, we didn't know what we called it, a trigger line or a trade line, so we just called it a T-line for short. So OCGN over the last few weeks, you can see the little scoop pattern. You can see the doji best friend gap up. breakout. These indicate that there's a dramatic change of investor sentiment that is definitely going to be taking you into a very strong price move. Now, we'll come back to this chart because it also told us exactly when to get out of this trade. But you don't even have to pay attention to this handle. Your simple scanning techniques will show, whoops, this is a buy. We're coming out of the oversold area, doji gap up. Should I be buying this? Well, I can see instantly there's a flat handle. What's my anticipation? A slingshot effect to the upside. So Acadia right now, this is what we call 2+2. There's our morning star signal, one of the 12 major signals. There's kind of a doji day. I'm going to go into a little bit into some other trading, high probability trading patterns. That if this opened positive, what's our doji rule? The probabilities are it's going to trade positive. And what's our likelihood? A doji sandwich, which is if this is the first day, and then a doji, and then the doji rule, if it opens positive, it's going to trade positive, and more than likely, it's going to trade the same magnitude day as this. That becomes our doji sandwich with the doji squeezed in between. And then you can see that it's a scoop pattern breakout. And then also it creates a more compelling signal. There's our morning star signal, one of your 12 major signals that implies there's going to be a strong uptrend. There's your doji sandwich, which also implies there's going to be more uptrend. So we call that a McMuffin because that's your morning star doji sandwich or your morning sandwich. Obviously, that's not a Japanese terminology, but it pretty much tells you about a morning star doji sandwich, which again creates a very high probability that it's going to trade higher. And it's also showing us that there's probably going to be a scoop pattern breakout, giving us a strong uptrend. J-Bill, we recommended this one today because of the flat handle. You can see the scoop. Now it's opened lower and traded lower, but if it starts trading positive today, we're going to be buying it because what do we anticipate? The breakout telling us that we're in a scoop pattern. Expect the next magnitude move to be at least the same magnitude as right here. HZO. We started buying this one right here because look at your gap up and then trading positive. We can see there was a flat handle. This one's even trading up further today. And how long do we hold on to this? We don't have to be any great technician or any great trader. If we just stick with the T-line rule that as long as it stays above the T-line, we stay long until we see a sell signal and a close below the T-line. This is what keeps the anxiety out of your trading. You just stay long until you see that it's closing below the T-line. Natural support and resistance level of human nature, yes. The T-line. So I tell people that's this little black line. And I tell people you don't need to take my word for it. You put the T-line on the 8 exponential moving average just as you would a 50-day or a 200-day. And then just test it. I used to be the worst investor in the world. I was a stockbroker for 8 years and still was one of the worst investors in the world. I got out of the business because I realized that brokerage firms had no more idea about what made stocks go up or down than anybody else. But when the candlesticks came along, I kept looking at it and saying, this makes sense. And the more I studied it, the more sense it made. And I started making money, which was flabbergasting to me. I made good money. But then when the T-line was introduced, to us, my profits even gotten bigger. So it just improves the probabilities of being in the right place at the right time and then staying in that trade until it's time to sell. The kicker signal. I must have had a blank screen back there somewhere. The kicker signal is very simple to identify. It opens here and closes here. The next day, they gap it up and trade the opposite direction. Investor sentiment has been kicked in the opposite direction. This is your strongest individual candlestick signal. Now, many people always ask, which is the strongest of the signals? The kicker signal is the strongest. However, the other signals aren't that one stronger than the other. It could be that in these market conditions, a hammer signal might be the best signal occurring. Next month, it might be the morning star signals. They all work extremely well, and they all give you relevant information about what's going on in investor sentiment. So anytime I see a kicker signal, we start buying immediately because the gap is already built into the signal. It closed here, then they've gapped it up at or above the previous day's open and start going the opposite direction. So this is what we expect from a kicker signal. It's just a dramatic change of investor sentiment. PKI is one that we have been looking at or in just recently, because there's your kicker signal. Now, I call this convergence analysis. Convergence analysis is just visually looking at the screen or the chart and being able to put a multiple evaluation into different things. Notice the kicker signal formed right off the 50-day moving average, closed up above the T-line, also produced kind of a scoop pattern, and the stochastic coming out of the oversold area. So the more factors that we can put into our analysis, the higher the probability that trade is going to work. Now, the kicker signal is so strong that if we're buying a buy signal, we want to see it in the oversold area. If we're selling a sell signal, we want to see it in the overbought area. However, a kicker signal does not have any regards to where the stochastics are. If you see a kicker signal that tells you there's a dramatic change of investor sentiment, no matter where you are in the trend. So we bought Avid the other day because look where it did a kicker signal. So when do you buy a kicker signal? If I see a kicker signal, and this is the advantage of our chat room, that somebody might say, hey, look at Avid, it's gapped up, and I can look at it and see that they've gapped it up and going in the bullish direction, I'm buying immediately. Now, what I do is I flip to my 10-minute chart to make sure it's still trading positive. That's where you get in early. This is what we did a while back in eyes. We saw there was a kicker signal going. We started buying at $2.90, anticipating we could make some good money. So here's my rhetorical statement. Do we always get into positions where you can get in at 290 and get out at 17 3 days later? Obviously not. But candlestick analysis puts you in situations where the probabilities of being in this type of trade are much greater in your advantage. Do you look at the day chart at close to see the last candle and the first candle next day to determine the trend, or your decision to enter or exit the trade? Yes, my first decision is analyzing where has there been a buy signal. And then the next day, this is one of the trainings that we do in our members area, we want to see confirmation. Now, if we had bought here, or let's say we didn't buy here, we saw this was a kicker signal, and we were ready to buy on positive trading the next day, and it opens down here, that's telling us they aren't confirming the signal. We're not going to get into it at that point. So it's all logic or all common sense. If you see a candlestick buy signal, what do you want to see the next day? You want to see the bulls are still there. Same with a sell signal. This is called a bullish flutter kicker signal. This has an advantage to it. You see the candle opens here, closes here. The next day they gap it up and do a doji. Now that doesn't look very powerful, but what's our doji rule? The doji rule is it's going to move in the direction how they open after a doji. So instead of scrambling around and trying to find money or closing out another trade so you can buy a kicker signal, at night you can say, all right, if this opens positive tomorrow, we want to be buying. So now you have time to set up your trade. And we call it a bullish flutter kicker signal because if you took out this little flutter, you essentially have a kicker signal. Tech right now, we've been trading this one because look what happened right here off the 50-day moving average. There's kind of your bullish flutter kicker, and then they broke out through this area. All this does is indicate or illustrate when investor sentiment has turned very bullish. You don't have to be a rocket scientist to do this. All you have to do is identify what the Japanese rice traders have identified for us over hundreds of years of what changes or what formations show us if there's a change of investor sentiment. Same scenario on the downside. This is a bearish flutter kicker signal. So there's a very simple trading rule that I had to discover the hard way. But if you're in an uptrend, everything is good, everything is good, everything is good, and they have enough strength to gap down below the previous day's open, there's only one thing you need to do, and that's close the position immediately. Because logic says if the bulls are in control, they shouldn't be gapping down below the previous day's open. And then if they open it lower the next day, what do you have going on? A bearish flutter kicker signal. You stay short or you go short. So this was, again, we made good money on this trade because there was our scoop pattern. Do you buy when candle crosses slightly above the T line? Diane, the simple rule is I want to see a buy signal and a close above the T line. However, remember what our caveat was, that the further away you move from the T line, the higher the probability it was going to come back up and test it. So if you're way in the oversold area, way below the T line, and you see a reversal signal, at least you can figure your first move is going to be back up to the T line. This is not the best chart to be illustrating this, but at least you know the most important factor in candlestick analysis is the signal itself. Everything else is a confirming indicator. So notice what was happening up here. Look how far away we'd moved from the T line. As soon as it opened down here, there was only one thing to do, and that was close it immediately. In the old days, before I knew better, and I saw they gapped it down, I'd sit and say, oh man, if they would just take it up one more time and let me out, I'd be so grateful. But I discovered there's 3 reasons you want to close immediately. 1, because that's going to form a candlestick kicker signal. 2, it's likely to be heading in this direction. And what I would normally do would be, oh man, maybe they'll take it back up and it goes down further. And I said, oh man, I can't sell it now because as soon as I sell it, it goes back up. When do I finally close out this trade? At the end of the day when there's no more time to hold on to it. Now I know I can close out the position, number 1, because that's telling me there's been a reversal. 2, I've got that money back in my account to go on to a better trade. And 3, if I see that it's doing a kicker signal, I can go short because I know the probabilities are pretty strong they're going to be taking it lower. So knowing what each signal represents or illustrates allows you or instigates making a decision immediately. Fibonacci into 8. Yeah, I think it's, is it? I don't know. Rogero, I don't know. Yeah, I don't call it a Fibonacci. I say it's got Fibonacci characteristics, meaning human nature built into it. So anytime I'm long, anticipating there's a fry pan bottom and they gap it down, the first thing I do is close it out. Now, if it starts going this way, I can think, well, it's a bearish kicker signal. Let me go short and start making back maybe some of that little loss that I made. The fry pan bottom is the most visually recognizable pattern. It's basically a big rounding bottom that you couldn't trade one way or the other if you wanted to. And when it gets right back up to this level, that's when you start buying, because that's where the breakout is likely to occur. What is the distance maximum can a candle be away from the T line? It just has to be away from the T line. If it's 4 or 5, 6 days, usually the T line is going to start coming down, or is going to be heading in that direction. So it's usually when it's a spike or a big price move. In this case, you can see that it moved too far away from the T line. As soon as you started seeing selling, that's where you start taking profits. So it's not a factor of how many days, it's the distance away from the T line. So in this case, a fry pan bottom just looks like a fry pan bottom. And then when you start seeing buy signals, you can either be buying immediately or get a better probability. As soon as it breaks out, you want to be buying. Now, that's a different factor than buying a candlestick buy signal in the oversold area. Usually when a pattern breaks out, your stochastics are already going to be in the overbought area. There's your fry pan bottom. There's your breakout level. And now where do you get rid of or close this? Again, what do the Japanese rice traders say about people buying? They start buying exuberantly at the top. How can we recognize exuberance? One, because of the candles themselves start getting bigger. And two, look how far away you are from the T line. So we go to our 10-minute chart. That first day when it was up, we closed it out. Took some profits. Then it came back down and came back up above the 10-minute T line. We bought it back. Why would we buy back a stock that's up that high? Because we know what the result of a fry pan bottom is. A big price move. Then we close it out at the end of the day. I typically like to short things overextended from EMAs. Is there a percent distance T line do you tend to take profits? Do you use stochastics or RSI with the distance from the EMA where you take profits? Kevin, no. It's just a factor of how far away is that from the T line. It's not a percentage move. It's just a visual analysis. You can see very easily that this is a lot further away from the T line than it normally is. In the overbought condition, those factors add up to get ready to start taking some profits. And there's your alert. There's your fry pan bottom. There's your breakout right here around the 2 or the 50 and where the pattern began. That's your expected move. There's your alert. If they're gapping up in the overbought area, what's that telling you? There's a lot of exuberance coming in. You get ready to start taking profits. Marcel, depends on what you're trading. Yes. My analysis is daily because I'm a swing trader. My trades last anywhere from 2 to 10 trading days. So I'm looking at this chart. Now, if I'm even day trading, I'll look at my daily chart and say, which way is this going? That means I'm probably day trading this in that direction. Now, I don't day trade stocks. I day trade futures like soybeans, cattle, the dollar, gold, that type of thing, off the 10-minute chart. So I should have come back or stated this earlier. This chart could be a 10-minute chart, a 1-minute chart, a daily chart, a weekly chart. Candlestick signals are fractal. It means they work on any time frame. I used to trade the E-minis off a 1-minute, 3-minute, 10-minute combination. Right now, I trade soybeans and cattle off the 10-minute chart. When I'm ready to buy, I flip down to the 5-minute chart. My stocks, I'm a swing trader, so I'm usually in those from 2 to 10 trading days on average. Do you scan for such trade opportunities? Stephen, that's exactly why you're here. Jeff and I have been working together over a decade to put all our formulas on the scans. He'll explain when we get done how easy it is to scan for these trades. On any given day, even if you don't know what you're doing, if you just know the signals and patterns, you will be able to find 5, 10, 15, 20 good trades on any given day, no matter which direction the market's going. Now, what that does is, obviously, you're not looking for 20 trades, but you've got a supply of 20 stocks that now you can go back and do very simple cultivation to find the best 1 or 2 trades for the next day. And that's what Jeff will go through at the end. The opposite of a fry pan bottom is called the dumpling top. There's your doji best friend gap down. What do we expect coming out of a dumpling top? A very strong price move to the downside. VRX right now. There's your dumpling top. This is what's been happening. Look at your doji sandwich. Told you there was more downside. INOS, we're short this one. Same scenario. You can see the dumpling top. What do we expect coming out of a dumpling top? Same as you would a fry pan bottom in the bullish direction. Very strong price move to the downside. So the next pattern that is very high profit is what we call the J-hook pattern. A lot of people want to know, how do you differentiate between profit taking and a full-scale reversal? A J-hook pattern has a prerequisite of a very strong price move and then an indecisive pullback, usually to the T-line, and then back up again. Yeah, we'll go through this. And we've got a very simple calculation. If that's our J-hook pattern, look at the bullish engulfing signal right off the 34 EMA, which is an effective indicator. Close back up above the T-line, gaps up. We know that this wave right here will be the same magnitude as this wave right here. Now that's relevant, especially if you're an option trader, because maybe your best trade isn't calls, but doing a spread where you're buying these and selling these because you know where your potential target is. So anytime I see this J-hook pattern, it's expected because there's your strong price move. And notice how indecisively it pulled back right to the T-line. And then as it started moving back up, we got 2 entry points. Either we're buying right here, anticipating it's coming up here, or we're buying here knowing that it broke out through this level, giving you better probabilities that your next wave is in progress. So this is where you use your signals to identify what patterns are setting up. Is the J-hook the same as a cup and handle? No, a J-hook has a cup and handle is your big rounding bottom and then another little rounding bottom. A J-hook pattern is a very strong price move, your consolidation, and then another strong price move. So anytime I look at a chart, you can pretty much analyze what created the moves in this chart. Look at your best friend signal in the oversold area, gap up, close above the T-line. That becomes a high probability trade. Notice where the selling occurred. Look how far away you moved from the T-line, and there was your bearish Harami hanging man signal. That was time to take profits. then look what caused your J-hook pattern. Sitting right here, hovering around the T-line, and they do a kicker signal. What do we know about the kicker signal? It's one of your strongest bullish signals. We can pretty much see there's a J-hook pattern. So where's our next likely target? Well, if this is wave one, we can pretty much calculate. You start looking to take profits up near the 200, which is probably where everybody else is watching to take profits. And the bearish J-hook pattern works just the same. Wave one, wave two, look at your doji, hanging man, look for more downside. So this is where you put 2 plus 2 together. This is a common price move. I'm going to make sure I'm not running out of time here. Look at your best friend signal, broke through a resistance level, the 50. And what does human nature do? They'll come back and see if that is going to act as support. We could see immediately it was going to act as support because there's a strong bullish signal. This is called a left-right combo, a doji followed by a bullish engulfing. And then they gap it up. What do we got going on? Wave one, wave two, supporting right at the level everybody else is watching, going into wave three. So I keep reminding people, this is not rocket science. This is just identifying the signals and the patterns that the Japanese rice traders told us is what human nature does time after time. This is where we could be buying, right at the breakout level. So this is why we can anticipate good trade setups. Notice what the nature of this pullback is. Indecisive, indecisive, indecisive. If it's pulling back indecisively, what's that telling you about the force of the sellers? Not very strong. Get ready for the next wave to the upside. So even refining the J-hook pattern more is when you see a move right up to a resistance level that everybody else is watching, and they pull back, notice where they couldn't pull it back to. They couldn't close below the T-line. So if they're trading back up above this level, we call this a bobble breakout because everybody and their brothers watching to see what's happening at the 200, that's where they were taking profits. We could see they weren't selling it off. We're buying right here because we know everybody and their brothers watching to see what happens at the 200. We're buying here when everybody else is still buying here because now they see that it won't close below the 200. So, yeah, that was my good word there. Notice wave one, up through the 200. There's your doji gap up at the top, time to take profits. There's your bullish engulfing signal right smack dab on the T-line. There's your J-hook pattern. This just allows you to identify exactly where everybody else is buying just because of the graphics of candlesticks. So there's advantages to patterns. One, it gives you an extremely high probability of identifying which direction the next price move will be. And two, the magnitude of the move is going to be much greater than just a mere uptrending stock in an uptrending market. So basically it boils down to the fact that you can make a lot more money in an uptrend because we know, like on a J-hook pattern, we know the magnitude of wave 3 is going to be the same as wave 1. We also know that if you have a fry pan bottom breakout, it's going to produce a much stronger price move, like a huge price move. And this also creates an advantage for option traders. If you're somebody saying, well, I like to trade delta, gamma, whatever, candlestick signals don't even care about the Greeks. Because if you're coming out of a fry pan bottom, what do you think the Greeks have done over the last month as it's been in a fry pan bottom? Been very low. Now we're buying options that have very little premium built into it just before a big price move. So not only are we gaining because as that price move starts to explode, you're gaining on the intrinsic value as well as the time value. And it gives you the exact timing to get into a trade. You can see when the breakouts are about to occur, or you can see when that ticker signal has gone into effect. It allows you to be in the right trade at the right time at the exact right time. So this is what we call 2+2 analysis or convergence analysis. If we can see there's a fry pan bottom, we can see stochastics are heading up. We can see the best friend signal breaking out through this level. We can be buying this one on positive trading because it's broken out with a strong pattern and a breakout. So this is just essentially taking everything into a visual, analysis to say, well, this is very strong and it's breaking through a level that everybody else is watching. What's my anticipation? We're going to be in another strong price move. So I guess Jeff is going to, we can do questions and answers, and then I guess Jeff is going to show how we've taken all our formulas for the signals and patterns and put them into MetaStock so you can scan, not only scan, but if you're still in the learning process, you can label every signal and pattern on a chart, and not only label it, I'm going into Jeff's spiel, you can actually see what the definition of that signal or pattern, or what made up that signal or pattern. So that's about all I got. Right now, in this market, not only can you analyze the direction of the market, you can also scan to find which sectors are the strongest sectors. Right now, the copper stocks and the mining stocks are extremely strong. Next week, it might be the trekking stocks. But essentially, just some very simple scanning techniques allows the investor to see which way the market is going, which sectors are the strongest in that market trend, and then you go right down to say, all right, which stocks in this sector are the strongest? That's basically putting all your stars in alignment. Does the EMA indicator have another name? Well, you can give it any name you want to. We just call it the T-line. And it doesn't matter what you name it. It's the 8 exponential moving average. And it just has very simple statistical probabilities that if you see a candlestick buy signal and a close above the T-line, you just stay long until you see a sell signal and a close back below the T-line.
All right, we do have a couple questions coming in through YouTube.
Okay.
Long says, thank you for your excellent presentation. I agree, thank you. Let's see, Brenton wanted to know, and we had another question on whether it would work with Forex and futures contracts.
Definitely. Remember, the Japanese rice traders did not become wealthy trading candlesticks. They became legendarily wealthy. They were the financial powerhouse in Japan for centuries. And they did it on the most boringest commodity in the world, rice. And it's not that they were tracking the price of rice. Candlestick signals are the graphic depiction of everybody buying and selling during a specific time frame. Whether you're trading stocks, bonds, Forex, commodities, tulip bulbs, anything that has fear and greed, that's what you can use candlestick analysis for.
Perfect. Mr. Desai, because I couldn't pronounce his first name, wanted to know if you have recommendations for what charts you should be looking at for swing trading. Like should you be looking at daily or 5-minute or 15-minute?
I use the daily chart because I'm going to hold that position for, again, 2 to 10 trading days. Now, when you have a daily chart like we saw in some of them where they were starting to move too far away from the T-line, everybody has problems knowing when to take profits. I've discovered that as soon as you see the daily chart has now moved too far away from the T-line, now you flip to your 10-minute chart. And as long as the trading remains above the 10-minute chart, you stay long. But as soon as you see a sell signal and a close below the T-line on the 10-minute chart, you start taking profits because you were now already alerted to the fact that you are way too far away from the T line on the daily chart, the 10-minute chart's just going to give you a faster reaction time.
Perfect. Nylish says, I super like the convergence analysis, double explanation point. And then Amit Gupta wants to know the parameters of the stochastics. Those are 1233.
Right, 1233 slow stochastics. And remember, a lot of people say, well, do we buy the buy when the stochastics cross? The answer is no. The most important factor on a candlestick chart is the candlestick signal. The stochastics just tell us whether we're in the overbought or oversold area. Logically, if you see a candlestick buy signal in the overbought area, it doesn't mean anything. If you see a candlestick sell signal in the oversold area, it doesn't mean anything. The Japanese rice traders just everything involved in a candlestick chart is just common sense. When I started learning candlesticks and I learned something new, I would think, yeah, I knew that. I just didn't realize it now that I could see it in a graphic formation. So now I forgot what the question was, but basically, if you see a candlestick buy signal in the oversold area, the probabilities are pretty strong that you're now in a bullish uptrend.
All right. Steve, thank you. I want to say thank you for coming out today and kind of kicking off the summit. And I'm going to show how this scanning works.
Okay, great.
Thanks again. I appreciate everything. And you've done such a great job with this product. People love it. I appreciate the help over the years. I really do.
All right. Well, thank you for the invite, everybody. Good trading.
Okay. All right. Let's go ahead and kind of switch over here a little bit. Let me go ahead and kind of get everything kind of switched over to me real quick. I'm going to actually just start the screen. We have 852. Amit wants to know if he can use CCI instead of stochastics. I don't think there's any laws against it, although I do know that Steve loves to use the stochastics at the 1233 settings. One of the things about trading is you can do whatever you want. I'd recommend you kind of just try it and see how you like it while you're there. So Mr. Desai again says, perfect, well explained. Thank you, Steve, for the wonderful presentation. OW says, many thanks. Diane says, thank you. We do, I appreciate it. The work that he's done with us over the years, I've learned a lot about candlesticks. I love his patterns. I love the way kind of things fit together. And I'm very proud of the work that we've done with this. Right now, just because of time, we've got about 8 minutes. So I'm going to start a scan, and then I'm going to kind of jump into PowerPoint while the scan's running and just kind of talk a little bit about the patterns that are here. So I'm going to run to the MetaStock Explorer right here. We call it the Explorer. It's a scanning engine for MetaStock. And what I'm going to do is I'm going to come down to CPS. So we have basically quite a few CPS. CPS just stands for Candle Profit Systems. You've got Doji Dynamite, you've got your J-hook patterns, you've got your major patterns, you've got your power signals, your price patterns. And there's a couple of pre-filter scans that just basically kind of look for minimum volume and price requirements that Steve recommends in his trading. What I'm going to do right now is I'm going to do the Doji Dynamite. If I hover over it, it's going to show you what we're actually going to scan for. So we're going to looking for Doji at the top, Doji best friend, the bullish, the bearish combos, the sandwiches, which make me always hungry for a sandwich. Every time, without fail, you've got your bearish Doji sandwich as well. Now, what I'm going to do real quick, just to kind of make this fairly fast, is I'm going to come down here to our public online list. I'm going to come down to the index constituents, and you'll notice, I'm just going to point it out real quick, there's a lot of different instruments that are available. One of the things about MetaStock, if you're new to MetaStock, is we get our data from Refinitiv, one of the biggest data providers out there, particularly when it comes to providing brokers, banks, hedge funds, institutions with their trading. So we can scan for just about anything you want to. What I'm going to do is I'm going to come down here to the index constituent list, and we're just going to run a scan against the S&P 500. We're going to use a daily chart. We're going to basically load the minimum number of records required, and I'm going to go ahead and start that scan. Now, it's not going to take a lot of time, you'll be able to see that it's just chunking through here real quick. When we come back to it, it'll be finished. I just want to kind of go back into my PowerPoint real quick and just show you a list of all of the different patterns that we kind of scan for. So here's a little bit of a box art for you. Right here, these are kind of what we're doing right now is we're doing the Doji Dynamite scan. So we're looking for that Doji at the top, Doji Best Friend, but there's quite a few different scans that we could run, and we've kind of organized them in this way. Okay, so in addition to those, you can do some single pattern scans, and those are listed here as well. So let's kind of go back in here. I'm fairly certain that that exploration is going to be done. It actually rejected everything. So I'm not sure if I didn't, if something kind of happened there, but normally we would have some instruments coming back, and we're getting a lot of like normal filter rejections. So it does look like it loaded enough data. And sometimes you do run a scan and nothing comes up. That does happen from time to time, and it just means that your analysis for the day is a lot shorter. Let's go ahead. I'm going to run it again, though, real quick, just to, well, let's throw the S&P 100 in there. Everything looks fine. It looks like it actually operated fine. And if it would have found something, it would have gone through all those 500 different securities. It would have actually not rejected everything. You would have had a list of kind of the ones that had patterns for the day. And so I think we won't belabor that point. It's very, very effective at going through those lists for you. And we have 4 minutes, so we really can't afford to belabor the point anyway. Once you do get kind of the list of the stocks that you're interested in back, though, you're going to be able to open the chart. You're going to be able to apply the template. And on these charts, I've just basically got the Dow Industrial Average open right here. You're going to be able to find, you're going to be able to attach his chart template. It's going to attach all of the symbols for you, all of the moving averages that he uses, the stochastic 1233, all that stuff's going to apply on the chart, and it's going to be labeled for you. So what I find kind of interesting is, last week we had a little bit of kind of a pullback. Well, I wouldn't call it necessarily a pullback, but what we had this pattern that was identified right here as a fry pan in an uptrend. This came back on the 5th, and then we kind of have been breaking out above that uptrend ever since on this Dow chart. So that was automatically identified for us. With the expert commentary that we've got, I'm going to go ahead and open this up. I'm going to actually kind of just move this expert advisor commentary right here to where this identified that pattern for us. And this was that fry pan in an uptrend. We could have scanned for this as well, but it's going to tell us kind of some information about that fry pan bullish trading pattern, and you can kind of read through it. It's also going to tell you that there's a doji on the bar and what that means. I just love the way that this is kind of put together because it does a really good job of organizing like all of the patterns for you. And it puts them on the chart, it labels them, it identifies them. This product, we basically have had 2 different versions of it out. We released the initial version about, I'm going to say it was about 8 or 9 years ago, which is crazy that it's been actually that long. But it's been very, very highly rated. We actually sent it over to Stocks and Commodities. A gentleman by the name of Dennis Peterson reviewed it, and he gave it a very, very good review. A few years ago, we added just a bunch of patterns. We came out with a CPS version 2.0, and it's been very, very popular. It was actually reviewed again in Stocks and Commodities by Barbara Starr, who does a lot of reviews for us. It was also very, very highly reviewed. But I love the fact that it's going to go through there. You've got all the explorations. It's going to allow you to be able to identify all those patterns on a chart. I love the scanner of MetaStock because one of the things as an option trader in the US, you're kind of spoiled for choice, right? There's 4,300 optionable stocks that exist out there. This allows you to go through, easily find the ones that you're interested in, open them up on charts. And we just went through the S&P 500 and we didn't find any opportunities. But if that's the case, we don't have to look at 500 different stocks today. Those are stocks that we know don't have an opportunity, they don't have that doji best friend for us. So it's got the expert advisor. The expert advisor is going to identify and label all of those patterns. They're going to explain to you what they mean on the chart with the expert commentary. It's got 36 total different patterns that are included. This has been an extremely popular add-on, partly because Steve is a very, very good teacher. He has a prolific following, but I also think we did a really, really good job with it. I'm very, very proud of this product and the success that it's had. And we put a lot of time into kind of getting it right. I remember when we had version 1 out there for about 6 or 7 years before we did a version 2, because we were like, well, what can we add? And then over the years, Steve had a couple of patterns that he wanted to include. There were some additional filters that we wanted to add, but it's a very, very solid product. The way we kind of price this product out is it's a one-time cost. It's $499. Here at the Summit, we give it to you with a money-back guarantee at $399. So if you haven't added this to your MetaStock, you should. I think it's one of our best products. You can add it by giving us a call at 800-882-3040. You can visit us online and chat with us online at metastock.com/saleschat. It is going to be part of an overall Summit special that includes like all of the add-ons that we're going to be talking today about, like the Candle Profit Systems 2. We're going to have Vince Vora coming on in just a minute. That he's going to talk about his victory pattern. That's going to be included in this bundle package. The Rick Sadler Patterns for Profits, Barry Burns Top Dog Toolkit, 3 months of Unleash the Power of MetaStock, 2 years of Stocks and Commodities MetaStock magazine. Excuse me, I don't have COVID. I just have seasonal allergies. So, and if you don't have MetaStock, if you don't have our award-winning software, you can buy 1 month and you can get your second and third month for free. So your price for all of these add-ons is normally $4,991. Here at the show, it's $1,895. And again, we're going to be talking about all of these today, but metastock.com/summit deal. You can give us a call at 800-882-3040, or you can chat online with us at metastock.com/saleschat. And so I would recommend you kind of get started with MetaStock. I wouldn't trade without it. It's a great software program. There's a reason it's been rated so highly for so many years in a row. So there you go. We do want to say thank you for Stocks and Commodities for sponsoring our event today. They're great partners of ours. They've been basically supporting the Online Trader Summit for 8-9 years, however long we've been running it now. Their magazine is incredible. 17,000 different articles that are available in it. 1,226,237. Such a specific number. Subscribers. They've been publishing it since 1982. I actually have a copy right here of the Stocks and Commodities magazine. And it's absolutely fantastic. You should get your own copy. If you register, if you're watching us on YouTube, if you go to metastock.com/tradersummit and just fill out the registration form for today's event, you'll get a free issue. You'll also be able to get some bonuses like from Steve Bigalow, from Vince Vora, from all of our speakers today. So I'd recommend you do that, metastock.com/tradersummit. So there you go. And thank you, Stocks and Commodities, for supporting today's event. A next speaker is another gentleman that you're going to be surprised to find out that I have a lot of respect for. I love Vince. Vince is one of our most prolific add-on designers. I love the way he kind of talks about the methodologies that he teaches about. I love his methodologies are very, very popular in the MetaStock audience and the MetaStock database. Today he's going to be talking about the victory system, or the Vince Vora's victory system. But I love really how methodical he is. He does a very, very good job of explaining, what he's looking for in trades. And I like the way he talks. I wish I had the public speaking skills Vince had. So with that being said, Vince, how are you doing today? And let's hopefully.
There we go. I think I was muted. Okay, I'm doing well, Jeff. How are you?
Good. I was about to kind of see if I needed to call you or something. I'm doing great though. Let's go ahead and change you.
How are you?
I'm great. How are you doing this morning?
I'm doing great. Thanks again for the invite. Appreciate it. There we go. You should be able to see my screen right now.
Yep, it looks good. We can see you, and we can keep track of what time it is in at least 3 different time zones.
That's right.
It's all yours, Vince. I'll get out of the way.
Okay, appreciate it again. Thanks for being with us, everybody. I'm certainly glad to be here with you on a Monday morning. Interesting day in the market so far. We have the Dow up almost 250 points, while the Nasdaq is down about 240 points. So a real rotation going on. Today I want to share with you our victory method. It's something that I designed specifically for this type of market. Late last year, with the volatility going on, the whole pandemic and everything else, I wanted to have a new method that I thought could help me take advantage of what I thought would be some pretty extreme volatility coming up. And we've gone through ebbs and flows, but we've certainly seen some volatility, and so far this has worked out great for me. So I'm really happy to share it with you here today. As Jeff said, I'm Vince Vora. I'm the head trader here at Trading Winds, and I should update the slide. I've been doing this for about 35 years now. I've created several systems along the way, but most recently, and by recently I mean about the last 8 years or so, I've been focused more on coaching than anything, and it's been really rewarding. I see some of our members on right now. Hey, Michael, how are you? Good to see you again. I think Michael's been in every one of our presentations, so glad you're here again. Before I get started, please do remember that trading can be risky, so please don't trade with real money until you are completely comfortable with the system that you are using. So let's talk about victory and how this has been helping me navigate the markets recently. Hopefully it can do the same for you. So what you see on here is the add-on that Jeff and his team designed for us. And you'll see arrows here, green and red. You'll also see these little circles. Let me explain what they are. Displayed as a circle because we're already in a trade. So this is an opportunity for you to either get in if you missed the original entry, or to add to your position if you're aggressive enough. Okay. And obviously, once we are in a position, the candles will be colored the same color as that trade. So for the long trades, the candles will always be green. Jeff, if you can hear me, there is a mic open. If you can try to turn that off on your side. That's okay. And if we're in a short trade, all the candles will be, or price bars will be colored red. That was intentional. That is to help you remain disciplined and stay in the trade for the life of that order, right? From time to time, you will see an exit flag. So if you're in a long trade, for example, and you see a red arrow, it's the same as an exit. In other words, sometimes we like to switch from long immediately into short, and other times we'll exit and you might see yellow bars for a bar or two, like in here, which means there is no trade, and then you'll wait for that new trade setup. Now, the line you see here is the 20-period simple moving average. I have traded with this my entire career. It's one indicator I will not trade without. It is what I use to determine the amount of momentum I have on a trade. So what you're looking for with that 20-period simple moving average, by the way, not exponential, it's a simple moving average. You're looking for slope in the direction of your trade. So if you planning to put on a long trade, you want it to be sloping upward. That tells you that there has been some upward momentum over the last 20 periods after price bars, and it gives you a real edge in the markets. Now, the more significant that slope in the direction of your trade, the better. Okay, if it's flat, you do not want to trade. So the idea here is not to take every single signal, right? We don't want to go long, short, long, short, long, short at every single one. We only want to take the ones that have a slope on that 20 in the direction of the trade. And again, the more significant the degree of slope, the better. Okay. Now, to be clear, you can take every single signal, and our research tells us you'd still do very well. But if you're only selecting the entries that have slope on that 20, the odds are very much in your favor. And what you should see is a consistent pattern of more wins than losses and bigger wins than losses, because what this system does extremely well is get you out of the position when it starts going against you. And I mean, get you out pretty much immediately. So it is a very safe, very conservative system. For any of you who know me, you know I'm probably one of the most conservative traders out there. So I hate risk. I'll do absolutely anything to avoid it. And so I designed this intentionally for it to get me out the second it starts going against me. Okay, so please feel free to enter symbols in your chat. I'll be happy to show you whatever chart you want to look at, whether it's a trade you're already in or something that you enjoy trading on a regular basis or are thinking of getting in. Whatever it is, I want to show you as many different charts as I can to show you how well this works. And I should say it works on any market, meaning equities, futures, Forex, crypto, whatever it is that you prefer to trade, any time frame, whether it's a daily time frame, weekly, monthly, 1 minute, 5 minute, it really doesn't matter. It's all based on technical analysis, so it will work just as well across the board. So for example, recently we've seen a real trend on the Dow, right? The Dow 30, and you can see just a nice steady trend. So all we're looking for are trade setups, right? Obviously to the long side when we're trending higher with a degree of slope on that 20. So any of these that you would have gotten in on would have made you money. And that's the real benefit here, is that when you have a solid trend and you have momentum behind it, remember, we identify or spot momentum by the slope on that 20. So when you have a clear trend in your favor and you have significant momentum on your side, it's really, really difficult to end up in a loss on that trade. But for example, the Dow's been going in one direction while the NASDAQ has been sort of iffy lately, and certainly down this morning. So have a look here, the recent signal on the Dow. Now let's look at the Qs, which is the ETF for the NASDAQ 100, right? And you see it got us out, just before that drop, right? And that's what I mean by being able to feel very comfortable trading this, because no matter how conservative you are or risk averse you are, when things start going against you, it will get you out immediately. And sometimes, when you're in a trend like this, it does mean that you'll get out and right back in. So there will be some extra commission dollars that you're spending there, but it's well worth the few dollars on extra commission there to avoid a sizable move against you, because you never know when this type of move can happen, right? So if you're in a trend, and look, any trade signal, whether it's an arrow or a dot here that happens along that sloping 20, you can go back and look at as many charts as you like, and I'll try to show you as many as I can here. You'll see that the vast majority of them are winners, and in many cases, significant winners. All right, but along the way, the second it starts to go against you, it'll get you out early, okay? To not only secure those profits that you have, but mainly to avoid you getting caught in some sort of significant retracement, okay? Now, do we want to take these short trades? I do not, okay? I'll be completely honest with you. Again, the only short trades I take are the ones where that 20 period is sloping against us, okay? So I'll start going through some of the more popular symbols here and show you how I trade with it. But by all means, I'll try to get your symbols. I see Michael, Natalia, Ronald have already entered symbols in, and I will do my best to monitor the YouTube broadcast as well. I see Lewis is asking for Neo and Plug. Gabby's asking for FTX. Great, thank you. Let's go through all of those. So here's Apple, right? And again, look how clear it is when you have a strong trend. Look at the slope on that 20, right? And look how price respects that 20 over and over again, right? So what the victory system does is time those entries for you. Because of the combination, that two indicator combination that we're looking for here, what it does is highlight an area that is giving you a high probability of success there. And so if you look at any of these entries along here, you know, obviously you would have made money along the way. When the 20 period moving average is flat, we do not want to take any of those signals, okay? So, and usually what you'll notice is you see you got short here. Would we have taken this? No, I would not have, because the 20 was still pretty much flat, right? Would I have taken this entry here? No. Why? The 20 was against me. Same with this. Here it was pretty flat, so I would have avoided. Here, the 20 sloping against us, not in the direction of the trade, right? Here it's flat. Here it's flat. Now we have a trend, a slope in our direction. We take that trade, and we have a decent runner, right? See, here's a short you would have wanted to take. Look at the slope on the 20. So it's really, really that simple, okay? If you focus on those high probability setups, and the time frame doesn't matter. Here's the weekly, right? Look at that move. Look at any of these, right? And these are pretty substantial moves. If you look at it, look at the monthly, right? So if you're more of an investor, right, and only want to run a search for new trades once a month and sit in them for a little longer, you'll find some monster moves. Now, on the flip side, you're a day trader. You want to look at a 1 minute, right? It really depends on how much action there is on that day, but you're still going to find some pretty nice trades along the way, right? You want to look at a 5 minute chart. You want to look at an hourly, right? Whatever it is that you want, you're going to find trade setups. Look at the 5 minute, right? Boom, 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 boom. So again, the time frame, the market itself does not matter. Let's start having a look at some of these symbols that everyone's asking for. Gabby was asking for FTX. Let's go through those, and then I'll try to get back to some of mine. Here's FTX, right? So again, when it's flat, you want to get out of there. Now, one thing you can do when you notice that 20 is flat, that's usually when we go into a bit of a consolidation area, right? Or a range or a channel, whatever you want to call it. One of the simplest things you can do is mark the high of the channel, right? And mark the low, right? Just connect the lows, draw a rough triangle there just to mark that range. When you see a breakout, you could feel free to take that trade if we've had an entry and it breaks above the high. you can do so as well. But again, honestly, I don't. What I look for is that next time that it sets up a long enough sloping 20. So we've been flat here. It pulls back. There's a setup. I get in here. Now, guess what happened here? A couple of days later, it told me to get out. Okay. So that was a break even or maybe a small loss. But again, look at the size of that. Very, very small loss there. It asked me to get back in. I get back in and look at that move. I can add more here. Look at that move. I can add more here. Look at that move. Eventually getting out here. So, you know, first of all, I can tell you I've been trading these markets for, like I said, about 35 years with this system, specifically this system, for a little over a year now, from when I started testing this myself. And I can tell you that you will or should have way more winners than losers if you follow these rules I'm giving you today. And think of it this way. Even if you had 3 or 4 of these losses, one winner can overcome many losses. So that's the kind of math you want in your favor, right? See here, kind of goes flat. Do you want this? No. So don't kick yourself if you missed that. There's plenty of other trades. Do you want to short here? Not necessarily. Here, yes, you want to short. All these you want to buy. Okay? So FedEx, and again, you know, for the interest of time, I won't go through many different time frames on each stock. But, you know, whether it's the daily, weekly, monthly, 5-minute, whatever it is, usually works out well. There was another one, Lewis one and NEO, obviously an EV stock that's been very popular. Again, look at those times when you have the 20 sloping in your favor, right? Or, you know, in the direction of your trade, I should say, right? Compared to the flat times, right? So, you know, would I have missed this trade? Yes, but who cares? Because I would have caught this one and these, you know. So there you go. There's a snapshot of NEO. Works quite well. PLUG is another one, right? And there you go. All you need is that trending 20, and you wait patiently for these setups, okay? And then boom, 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 boom. It's that simple. Why? It's not rocket science. Think of it this way. If there's a strong trend higher, it's for one reason and one reason only. There are more buyers than sellers, right? Meaning there's a lot more buying pressure. People are bidding up. People are hitting the ask, right? So, and we don't need to know why, okay? I like to tell my members that anyone who tries to ask why something is happening in the market, okay, if they try to answer that question, you're going to end up losing money because there are so many different factors that affect the market and any particular stock from one day to the next that it's impossible to figure out. All you need to know is what is happening. And with simple technical analysis, you can identify that. Price is on the right side of the 20, okay? And this method that I've tested extensively and traded with over and over again, when these two indicators come together, it's telling us we have an edge in the market, okay? But even if you didn't have that, you can spot a trend. So do you want to go with the trend or do you want to trade against the trend, right? Obviously, path of least resistance is with the trend. And what the victory method is doing is pinpointing those high percentage areas for you to come in. And there you go. So long or short, it is what it is. Michael was asking for COPX. The global copper miner. So copper has been doing exceptionally well, just like lumber. We can look at a lumber ETF in a second. But again, how do you spot that trend? Not only a trend, but a trend with momentum. You know, price action on the right side of the 20 with that slope, and take any of those entries, whether it's the arrows or the dots, along that upsloping 20. And, you know, it's kind of hard to go wrong, right? When things flatten out, or if you get a red setup while the 20 sloping upward, you don't want to take those, right? You don't want to take those. You want to take the ones with slope in your favor. And you can be picky. You can be selective and wait for a certain degree of slope, right? The safer you want to be, look for the higher slope, right? What else we have? DPZ for Natalia. DPZ here. Domino's Pizza, right? So, you know, you look at this and look at the bars, right? Look how messy this is, just back and forth. But look at the 20. Right? It's kind of all over the place, flat, you know. See, it's flat here, it moves, but then it's flat again here, you know, in the wrong direction here. But look, out of all this, right, you could have waited almost a year before you had a valid trade setup. But here it is, and boom, there it is. So you're going to find these all over the place. And thanks to Jeff and his team at MetaStock, we have a scanner that I'll show you in a few minutes that will help you find these in a matter of minutes, okay? TSM for Ronald, TSM, that's the Taiwan Semiconductor. Oh, and I want to come back to the lumber futures because, boy, those have been ripping. But here's the Taiwan Semiconductors. Again, if they're slow, you can, you know, any of these will pretty much make you money, right? But please adhere to the rules. If you're in this, regardless of how, you know, if this is a particular stock, let's say it's Apple, right? And you think, well, they're going to continue selling iPads and iPhones and they're going to keep making money left, right, and center. If the system asks you to exit, please exit, okay? Follow the rules. There's a method behind here that has been proven and tested over many years. This particular combination, over a little over a year. But like I said, I've been doing this for over 35 years, and I don't release this unless it's thoroughly tested. So please trust and follow the rules. Now, let's look at a few other things. Like I said, we'll work on just about anything. So let's look at, oh, sorry, I'm all over the place. Let's look at wood, which is the global timber ETF. Beautiful moves recently here. Look at this one lately, straight up on lumber. Futures have just been going crazy on lumber. Let's look at crude oil, right? So if you trade futures, here's light sweet crude here. Again, the flat periods, do you want anything to do with that? No, that's where most traders lose their money, regardless of whatever system they're trading with. When they get caught in an area of consolidation, you just get chopped around back and forth. You get in, exit, in, stopped out, right? It's all over the place. So you want to focus on a trend and go with the trend, not against it. Just go with it. Path of least resistance, right? Look at gold. Let's look at gold. Gold futures here, right? Kind of messy along the way, but you know, there's been some downward slope here and some pretty good signals. Now we start to recover. Here's a hint for all of you. Look at the monthly chart on gold. Look at that right there. Look how well gold does on a monthly chart, back and forth. And look at here recently, and if you've studied technical analysis for any period of time, you'll probably be familiar with a cup and a handle formation, and we're just in the process of triggering that cup and handle formation. Now, this is on a monthly, which means if it triggers, we've got many months of upside, so there may be something big kicking off here with gold, okay? Now, you don't have to trade the futures contract. You can trade the ETF, GLD, you can trade any gold-related stock, but make sure it has these setups with slope on the 20, okay? What else? How many of you are into Bitcoin or crypto in general, right? Here's Bitcoin. That's the US dollar. Look at these trades, right? Now, yeah, you'd say, well, I would have missed this one. Well, yes, you would if you followed that symbol. You could, with the symbol, take a break to what would have been then all-time highs and gotten in there if you're a little more aggressive, so on. Yeah, But the ones you would have caught, you would have done exceptionally well on, right? And remember, you can trade it on different time frames, etc., or look for different symbols in that space that would give you a setup. Let's look at Ethereum, which has been doing really well, actually better than Bitcoin recently. And look at these moves on Ethereum, right? Something like Ripple, right? You know, look at this one here. So, you know, again, I'm just trying to show you that we can trade any symbol with the system, but what you don't want to do is trade anything that looks like this. Stay away from it. Only go with the trend, okay? What other symbols do we have here? Questions. Let's see. Michael's asking what the differences are between my Veracity system and Victory. So Veracity was the one prior to this, which was a few years ago. The difference is, Michael, when it comes to Victory was a little, Veracity was a little tighter, meaning it was a little more conservative. There were fewer setups along the way. Okay, still works exceptionally well. If you're trading with it, keep doing it. You know, I'm not asking you to change. It works exceptionally well. What I tried to do with Victory was I expected more volatility this year and moving forward. So I wanted something that responded a little quicker. So is it highly accurate? Yes. But it's a little more responsive than Veracity, meaning on those changes, on those shifts from a long trend to a short trend, it reacts a little quicker. Okay, so for example, on Veracity, if you see this, you know, it might have asked you to exit somewhere along here, would not have given you an entry, right? And certainly would not have given you a re-entry along the way, right? So if you remember last year, February, March, when the pandemic started, right? We were humming along beautifully in the market. Suddenly, it seemed like from one day to the next, everything just started to collapse. Well, Victory gets us out immediately. And then even if we don't take that because of the slope, but here right away, we get that first retracement and there's our entry to take advantage of, you know, a good 2/3 of that move, right? And so that's what I was looking for. That right, this is everything right here on this chart of this S&P 500. This is exactly what I was trying to accomplish with Victory compared to Veracity. And luckily I was able to do that. So I hope that helps. Let's see. Max is asking, can you say what the signals are based on? No, I can't reveal the indicators. I mean, that's proprietary, but I can tell you that there are two things that have been around forever in the technical analysis world, work just as well 50 years ago as they do today, but that combination is pretty much unbeatable. And that's, I was lucky to discover it after many, many years of staring at charts. So, but luckily, you know, MetaStock programmed it, and now we have it here that we can use. Okay, let's see. Are there other questions here before I show? Okay, I don't see anything else. Oh, I do see one asking for Microsoft. Let me go there. And if there's any other ones, by all means, enter away. Okay, you know, Microsoft is another perfect example where, you know, when it's trending, it's so clear and easy to pick off those signals, right? Here's a short one here during last February, March. You know, quickly recovered. We had a couple more winners here. Then it kind of went silent, right? And so we were waiting from last July, you know, into the end of the year, and we had nothing to do here. It was just flat, right? Then it looked like we got a breakout, but it pulled back again. And now, you know, it's starting to move. So we're looking for that next signal. We had one here. I think that was on earnings, if I'm not mistaken, but And that's the one thing I will tell you want to avoid, right? You should know always when that next earnings date is for your position, because you don't want to carry your position through earnings. Earnings can cause a big gap, for or against you. It's really a roll of the dice. So I personally try to stay away from them. Okay. Again, if you look for different time frames, look at the weekly, right? Those solid stocks, those solid performers on the higher time frames usually have very clean, very strong trending charts that will identify some big moves for you. And Microsoft is one of those. And we had one back here, and it's still doing well. Okay. Same with the monthly chart. Doesn't mean you have to be in this for years. Okay. But knowing, for example, let's take a top-down approach and work backwards. If you come to Microsoft and you see that, hey, this has been in an uptrend and still is, right, since 2019. And then, what does the weekly look like? And it's telling you, yeah, it's in a strong trend higher. Then that makes taking a long signal on the daily, that much easier. But you want to trade with that slope on the 20, okay? So be patient and wait for that. Let's see. Dewan is asking, are these symbols from the Indian stock exchanges like NSE and BSE? You can certainly use this there. These ones are from, most of them are from the Dow, the NASDAQ, or the S&P 500 in the US. But we can say, if you have a symbol for me from the Indian exchange, I'd be happy to put it in. As you know, on MetaStock, there's just about every let me see if you have an actual symbol for me, I can be happy to pull it up. No. Oh, is that it? No, I almost had one there. Anyway, by all means, we can try to pull up one of these. I don't know what they are. We can see if there's anything there. Again, obviously this one isn't very heavily traded, but you can see it'll still highlight you still give you the signals. So let's try one more time. Bank of India, maybe. Oh, there we go. Okay, let's see. I'm not sure which one of these. Let's try this one. And there you go. So, here's a couple of nice short ones. Here's a nice long one, right? Here's another one. Here's another one. Again, it's based on technical analysis. So anything you can bring up a chart on, you can use it on any exchange, any time frame. It really doesn't matter. Let's look at a few more here. The Dow's been trending super well. Well, here's the DAX composite. Beautiful. And actually, there's a setup there. Look at John Deere. Let's go back to the symbol database. There it is. Deere and Company, right? Like, these stocks that just trend so well like that. And again, I would encourage you to look at the higher time frames, because when you can get a clean chart, on a month, look at these moves. They're enormous, right? You'll do quite well. And think of ETFs. Nowadays, they have ETFs for everything. Look at XLF, like for the financials, right? They've been trending well for the longest time. You've been getting some beautiful setups. Here's a couple of trades I myself have taken recently. Toll Brothers, right? This one here. Look at that move. Just so easy, so nice and clean. But again, here's was last year during that drop, and then part of the recovery along the way. Just super easy. You know, a few weeks ago, I was reviewing different ETFs for my members. And we were looking at the real estate ETF, XLRE. And here, so similar to Microsoft, you know, it had been in a range for quite some time. And then we finally popped out of that range, because if you draw a line across these highs, right, we finally popped out above it, came back, and now at that point, the 20 was sloping. So right here, I had said to my members, you know what, you should go back and look at the different components of this ETF and any other real estate related stock or fund, and look for setups. And look what happened since then. And now we have another one right here. So here's a trade setup or a trade idea for you. XLRE looks like it's ready for another move higher. Dell has been another stock and another trade taken recently here, but it's been just trending nicely, right? So there you go. Stephen is asking for FTNT. Absolutely. FTNT, let's have a look. There we are. So, you know, along the way, any signal with that 20 sloping in our direction, right? There they are. And here's the most recent one. So easy to follow. And the way that Jeff and his team designed this really helps you stay in the trade as well, because, you know, you get in and, you know, on a regular chart, some of these might be red candles, right? But you don't see that here, because all the price bars are painted green as long as you're in a long trend, right? So it doesn't, you know, you don't get scared out along the way, right? So it really helps. Natalia is asking for BMO, Bank of Montreal. Again, there you go. Nice and easy. Here's the most recent one. You know, getting in under 95, and it's just over 98 right now. You know, over the span of 3-4 days. So it's very consistent. Works really well. Let me show you a couple of other parts to this before I hand it over to Jeff, and he'll tell you how to get this. And by all means, I will stick around if there are more questions as well. I see the YouTube group has been active with questions as well. I'll try to come back. There was someone asking for LT. Let's look at LT. There's LT, Liberty Trip Advisors, looks like. You know, whenever you see these charts that have a lot of little gaps like that, it's usually because of low volume. And you can tell, look, I have the volume down here. There was some volume here, but the rest of the time, you can't even see it. So trading low volume stocks is going to be very difficult for you. So, you know, be careful. But regardless, here are those signals. They work just as well, right? Recently, a short one. Let me give you a couple trade ideas before I show you how to scan for them. So LB, L Brands, right? Look at that. Friday showed us a new entry. And what I like to do on most of these is when you get that setup like that, I like to mark the high of that candle. Okay, so Friday we got, you know, a new long here on L Brands, right? I would mark that high and then wait for the next trading day to see if that high would get taken out. Okay, that tells me there's follow through, and here we go. You know, despite the move lower today in the markets, you know, the S&P is still flat, Nasdaq's down 215, Russell's down 14.5. This is still trending well and going higher. And look at those moves, right? Now, on the flip side, if you're looking for a short idea, here's Pinduoduo, PDD. Continues to be under pressure. I don't ask why. I have no idea why. But obviously, sellers are fully in control here. And we get a new short, and it follows through, and it's likely to continue to drop. Okay? So how do we find these trade ideas? Well, we go to the top left here, the Power Console. We hit the Explorer tab. And the top section is where all the different strategies are. They're in alphabetical order, so mine are near the bottom. So just scroll to the bottom, and you can search for Vora Victory, which are the arrows, the green and red arrows. The Vora Victory Re-Enter are those circles, right, or the dots. They're the ones where we're already in a trade in that direction, but the criteria, the trade criteria has come together again, okay? And then the bottom here, you get to select which market you want to scan for, right? So, you know, again, you can look at the Indian market, you can look at Asia, you know, UK, London, whatever you want. I just here for, where is it here? I'm going to use the index constituents just for, you know, minimize the time. I'm going to do the Dow and the NASDAQ here. Okay, NASDAQ 100. And then you go to the far right, you select your time frame. I'm going to stick with daily, but again, you depending on whatever time frame you prefer to trade, you can select that. In this box, it'll tell you what you're scanning for. So it confirms Vora Victory Re-Enter, and then you click Start Exploration. This box comes up, and you'll see your two explorations here and there. We only selected 126 charts, but you can see how quickly it's going through it. On a nightly basis, I'll select, you know, all optionable stocks, which are like 4,300 charts, go through it in, you know, 2-3 minutes. So it's fantastic. So here, it's completed both. And that's why there are these green check marks. We highlight the first one, and now we have a list of potential setups. Now you have a new long and a new short column. Wherever there is a 1, that is the type of setup that it is. So if it's 0 in long, it's not a long setup. There's 1 in short. That means for Alphabet, otherwise known as Google, there is a potential short setup, right? But here's the key, the slope column. The slope column is the degree of slope on that 20-period moving average. So if you're looking for a short trade, you should see a negative number, okay? If you're looking for a long trade, you want a positive number. And if you're looking for a significant slope, you want something over 5. So by clicking on the tab, you can sort in order, either ascending or descending. So see, the first one that comes up is IDEX Labs, right, with a 6.5 slope, right? Alphabet here has a 3.2, but it's showing up as a short. Same with IDEX short. So you want to see a long and you want to see a significant slope. So we don't actually have anything here. Let's go look at the re-entries and do that. Now here, you know, see the slope, because we're searching for mainly the NASDAQ stocks, and it's down 250 points. We're not getting any long setups here. Short though, look, we have a 1 here with a -16 Intel. Let's go look at that chart. And there it is, right? Now, the other thing I'll tell you is I like entering near the 20, not far from the 20, but there's one. Let's look at CDNS, right? There's another one. MU, Micron, -12. So you can see that the slope is significant, right? Anything over 5 to the long side, or anything over -5 for the short side, is what I would consider a significant slope. So it's that simple. Immediately, you can identify some real nice trade setups on any time frame, you know, and by searching thousands of charts in a few minutes, right? The other advantage of this indicator is if you go to the View tab up here, top left, and click on Expert Commentary, it's going to bring up this box where it'll explain a bit about myself and Victory System and trading wins. But the main thing is it'll give you this little triangle here in the far right bar. It always defaults to the most recent bar, right? And it'll tell you what's happening here. So right now it's telling you the Victory System is currently signaling a short sell re-entry opportunity. So it identifies that for you. Now, as you go from bar to bar, it'll explain to you what you should be doing with this particular chart. So if it is not in a trade, if this was over, say, this yellow bar, right? So there's that. We can click on it to move it here, or you can use these arrows in the top left of this little box to move that arrow. You know, whenever there's nothing to do, you'll see no text. You could see a blank space between these, right? But if, you know, there's a trade setup, it'll tell you. And if it's a long setup, it'll be green text. If it's a short setup, it'll be red text, right? So now it's telling you, it's signaling a long opportunity. Let's move ahead, right? And here it is. So now, once you move ahead, it'll tell you that we're in a long, and it'll give you a stop loss price point, right? 80.82. So if you want to trail this with a stop, or let's say, you know, you have to work all day, so you can't watch the market, so you want some sort of stop loss entered to protect you, there it is. So if we move ahead, now it just changed, right? It went from 80.82 to 81.05 and 81.20. So 81.53, it's inching up along the way, okay? So it's helping you hold your hand throughout the life of the trade and telling you. And then, of course, whenever it gets to the exit, you know, it'll tell you, hey, it's telling you all along should be exited, and it's now signaling a short opportunity. Okay, so it's all right there for you in one neat little package. So I hope with the short amount of time that we had, I was able to show you enough examples across different markets, different time frames, etc. By all means, if you have any questions at all, I'm happy to stick around and answering them. But for now, if Jeff is available, I'd like to pass it back to him so he can let you know how you can grab a copy of this yourself. Jeff?
Absolutely. Let's see. Jerry wants to know, can you scan a custom list of stocks instead of all? Yeah, you can. As long as you put your list together, you can absolutely scan it, Jerry. Vince, great job today. Appreciate it. I'm going to show a little bit about kind of a symbol that I actually scanned for a few months ago, and just kind of reiterate some of the stuff that you talked about. But great job today. I appreciate it. All right. Let me go ahead and kind of do this. We'll do this. I'm going to go ahead and do a little bit of a sharing on the screen here. Okay. And you should be able to see my screen here. And Vince does such a good job. So a few months ago, this came up on a scan that I'm running. I'm currently holding this for, I think I need to say that, but it's basically a list of a scan that came up just a couple of months ago for me. It's Tractor Supply Company. And I'm not really going to kind of talk a little bit about how, well, I found it on a scan, but let's kind of talk a little bit about the anatomy of the chart and kind of how it works and that kind of stuff. So initially, you'll get, when it goes into a signal, you'll get a long signal, as you see right here. And if you get a re-entry opportunity, that'll be just indicated by the dots that appear underneath the price points here. Okay, here we had a short signal, which obviously we would have exited out. This would have been a loss, and you notice that not all of them are winners. But when we have these nice dynamic moves that go to the upside, it'll actually kind of help us out with that. One of the things that I like a lot about this is in the commentary. Vince does such a good job kind of providing commentary is available. But right here, you'll see the victory system is currently long. Every day, the commentary is going to give us a new stop value. So right now, we'd exit if the price of the security was to close below 187.87. Okay, it kind of spells that out for you. It kind of tells you exactly where that's going to be. The other thing that I like, and I got this scan ready, I've already run it just to make sure that this time I had reports to show you. But let me kind of just show you kind of what it looks like. Vince does a really good job of talking about these, but one of the things that we worked very, very hard on was that initial slope calculation. So how do we tell without looking at the chart if the slope of the 20 MA is rising or falling? And we came up with kind of this slope calculation. It's not a degree, but basically what we did was we basically took some samples of some different spots on the moving average and kind of looked at, it's a fairly elaborate rise run calculation is really what it comes down to. But when we're looking at this, if we were looking at stocks that maybe we wanted to buy or sell today, what you're going to have is like right here, there's a new long position. Your slope is 9.6. Right here, this is a new short position, but the slope, so if we were to open up this chart, the MA would actually be going up, but we'd be having a short position. We wouldn't want to look at it. Here we have Alexandria, and we have Visa. Both of those, actually Alexandria is a long trade, as you can see right here. It's got 4.9. We might want to take a look at that, but Vince generally says look at anything that's +5 or more. So if I'm looking at trades today and I want to take a long position, Abel Marie is the opportunity that sits there for me. Okay, I could also, if I wanted to look at 4.9 instead of 5, I could look at Alexandria as well. But instead of looking at like all 500 stocks that we scanned against, those are the 2 that we're going to look at on the long side. Vince already talked about the ones that you can look at on the short side, but that's one of the things. Obviously, you're not going to buy everything that shows up on this list. Generally, take a look at the ones that I like. I kind of look at the chart. I look at the moving average. I get a feel for where support and resistance are. But it's something that kind of helps you really, really kind of get through and identify, get rid of all the stocks that don't have those opportunities that exist in the market for you, and find the ones that do. And this does a really, really good job of that. I just love how clear everything is. I really like the fact that we put these re-entry signals in there, because a lot of times I'll run a scan on like the S&P 500 and maybe nothing comes up. And maybe I run a scan then on the re-entries and I find something like this that's kind of been going up, that's in a great trend, that's giving me a signal that it might be time to a good time to try a long position or a long opportunity on it. It's just a very, very thorough, well put together package. So so there it is. We call it the Vora victory method. It's been very, very popular this year. And here's the things I love about it. You know, it gives you that detailed commentary breakdown, the expert alerts, the full market scanning for triggers and those re-entries. It does have system tests, so you can go in and test trading ideas, see exactly what stocks work well with it, what stocks don't work, what kind of stocks maybe you want to build a custom list there as well. So it's a great little product. It does a really good job. And the thing about this one is we do offer it with a one-time cost. So and a 30-day money-back guarantee. So it's normally $19.97. It's $9.95 here at the Summit as our Summit special offer. And we're going to let you go ahead and run scans with it, test trading ideas, see some trades, look at as many charts as you want. We're going to back it with our 30-day money-back guarantee. So if you don't like it for whatever reason, if it's going to help you make money, if it's going to help you find better trades than you're currently finding, well, I mean, you're going to like it and you're going to keep it. And that's really kind of the goal that we have. But if you don't like it, what we try and do here is give you a good risk reward scenario. So if you don't like it, if it's not something that's helpful for you, just give us a call and we'll give you a refund on it. Okay. But I think you're going to like it. It's certainly something that I'd recommend that you at least look at it and play with. To take advantage of that, give us a call at 800-882-3040. You can visit us online at metastock.com/saleschat. And it is part of like the special or the promotion that we're running all day. So you can get basically the Candle Profit Systems 2.0. You can get that Vince Vora's Victory System. You can get 3 months of Kevin Nelson's Learn MetaStock, Rick Sadler's Patterns for Profits, Barry Burns' Top Dog Toolkit, Unleash Maurer of MetaStock, 2 years of stocks and commodities. You know, some of the best products that we offer, some great training to go with it and to support it. Normally, like all of this bought separately would be $4,991. If you buy it here at the Summit, it's going to be $1,895. Most of the products come with a 30-day money-back guarantee, so you can evaluate them, make sure they're going to be helpful for you. If you don't have our award-winning MetaStock program, you can also pick that up as part of the special. We're going to offer that on a buy 1 month, get 2 additional months, so get 3 months for free as part of that. And you can take advantage of that at metastock.com/summit deal. You can give us a call if you want us to send you some more charts, or if you want to look at some more details on the program. Give us a call, 800-882-3040. You can also chat online with us at metastock.com/saleschat. These are some of the products I'm absolutely very, very proud of. A lot of them are ones that I use to actually find my own trades. I wouldn't trade without them. I'd encourage you to try them. And with this particular package, most of it's available on a money back guarantee, so you can try it out. You can make sure it's going to be useful for you, and if it's not, you can get a refund. So 800-882-3040, metastock.com/summit chat for that as well. Let's see. Michael says, thanks, Vince. Always a pleasure listening to your market savvy. He does a great job. He does. Mark wants to know if we have a payment program for the toolkit. No, we don't. But we do offer it at over $1,000 off today as part of our summit special. So, and we do back it with a 30-day money back guarantee. So give it a go. And thank you for your question, Mark. I appreciate it. Let's see. And I think that's the end of the questions that we've got. We're running pretty good on time. Give us a call, 800-882-3040, metastock.com/saleschat. It is a great software program, and you're going to like it. I'm going to say thank you to Stocks and Commodities again for sponsoring the event. They do a great job. Like I just said, if you buy that summit package, you're going to get 2 years of Stocks Commodities on Stocks and Commodities. They're just going to give it to you for free. In addition to that, if you're watching us on YouTube and you go up to metastock.com/traders-summit, which is going to show up in your YouTube link, you can sign up and get a free issue. No questions asked of the Stocks and Commodities magazine. Great little magazine. They do a great job. We really appreciate the support that they've given us for 8-9 years now. So, which is funny enough how long we've been running these summits. So they've been with us. I remember we talked to them a little bit about the summit. I'm like, here's kind of the idea we have. We're going to have a bunch of speakers. We're going to put it up on YouTube. It's going to be insane. And it has been a successful event, but I really appreciate them for being with us and supporting us since day one on it. They've been great partners for us, to say the least. So the next presenter is the very first person that ever hired me for a MetaStock job. His name is Kevin Nelson. When I started here 24 years ago, he was the sales manager. It took a little bit of a convincing for him to give me a job, but he was a very, very good manager. One of the things that he does right now is he runs a website called learnmetastock.com. And he does a really, really good job in terms of teaching and talking about different ideas inside of MetaStock. And I just love having him on here. If you're a MetaStock user and you haven't checked out learnmetastock.com, we'll give you an opportunity to try it in a little bit, but it's a great website, and you should definitely take a look at it. So with that being said, Kevin, how are you doing?
I'm doing great. Thanks, Jeff. Appreciate the introduction.
You're welcome. Let's see. I just sent the presentation over to you.
Okay.
I didn't even tell any stories. I could if you want me to.
No, I think we're going to be a little short on time, but maybe later.
All right. It's all yours. I'll get out of the way.
All right, great. Thanks again, Jeff. I appreciate it. As Jeff said, I originally started with MetaStock back in the early 90s. And in 2008, I left the company and I started this company here, which is called learnmetastock.com, which is our website, of course. And the only thing we do at learnmetastock.com is really try to help you get whatever it is that you want out of the MetaStock program. And I know we've got a lot of people here with different varying degrees of expertise in the program here today. I know we've got people that have had the program for a long time, people kind of just getting started with it. I know we also have people that don't have it as well. So I'll talk a little bit more about my service here at the end of today's presentation, but let's go ahead and just jump right into it. So what I'm going to be presenting today is we're going to be talking about the filtering program or the scanning program inside of MetaStock, which is called the Explorer. And this is pretty much my favorite tool inside the program. The capability of this particular scanning device is unbelievable. And if you just saw Steve and Vince's presentations, you'll see that what they do is that with their add-ons, you know, they provide all the different formulas and so forth, and then they run the Explorer to go out and search or scan for different types of setups. So the way that I do it on my training here is what I'll do is I will also talk about or basically teach people how to use the different add-ons. But in addition, what I really want to do is I really want to give you the basics of how to use these different tools yourself in whatever degree that you want. So what I've got planned for you today is we're going to create a new exploration here for you. And we're going to build this exploration literally from scratch so you can see from the ground up how to create your own scan. And one of the first things that we're going to do is we're just going to do a real quick check to make sure that your data is good. As you might imagine, you've probably heard the old saying, garbage in, garbage out, and nothing is more true with data. If you've got bad data or you're scanning on the wrong data, then everything else is just kind of out the window. So I'll show you a real quick tip on how to check that. And then what we'll do is then we'll talk about setting up or looking for bullish or bearish types of conditions. This is another thing that you're going to see consistent throughout today's presentations. Are these different presenters are going to use moving averages to identify bullish and bearish types of conditions. So I'll show you how to set something like that up. And the key to the Explorer is what we call the filter. And the filter is what allows you to weed out those securities that are not meeting the criteria that you're looking for. So you end up with that very selective list, and you only have securities that really are of interest to you. And I'll show you a number of different ways that we're going to work with that. And the example that I'm going to start with a filter is we're going to be looking with, or basically using it with volume. And volume is a pretty tricky thing because of the volatility of volume, but I'll give you a number of different ideas of how we can use that. And then I'll take it a little bit further and I'll show you how you can add price to these different filters and weed out the database that way. And then lastly, how to save all the information or save the results so then you can use it in what other aspects of the program that you want. So let's go ahead and get started. Let's talk a little bit about how to set this thing up and just do a real quick check to make sure that you're working with good data. So to get started here, to launch or basically open up the Explorer, you can do it a number of different ways. But if you want to click on the pair of binoculars up here, or you can click on the Power Console button, it's going to take you to the same area. But inside the Power Console, you want to make sure that you have the Explorer button over here selected. And you'll see that when you launch the Explorer the first time, there's going to be a ton of different explorations already created for you. Now, you can, of course, what I always recommend is that you go through and you basically explore these on your own, run these different scans. And what you'll find is a lot of them actually there'll probably be a number of different ones that'll probably be of interest to you. And you might be able to find something right off the bat of all the different ones that are included. But what I'm going to do again today is we're going to create one from scratch. So to create a brand new exploration, the way that you do it is up here at the very top underneath this all explorations. I'm going to right click inside here and I'm going to click on this new exploration and we're going to create one here, and this is going to open up what's called the editor. So the first thing I like to do is that whenever I create a formula, a scan, an exploration, or whatever the case may be, I always like to put a wildcard at the beginning of the name. And the reason why I do that is, as you can see here in the background here, all these different scans, for example, are sorted alphabetically. And the problem is that it's really easy to kind of lose track of the different ones that you've created. So an easy way to kind of group all of them together is if you consistently put some type of wildcard at the beginning of it, at least all your formulas then will be grouped in one place and it'll be a lot easier for you to keep track of. Now, the wildcard I typically use is an exclamation point. So I'll do an exclamation point, and then I'll just call this, for example, my Explorer class. And just give it a name. And then, of course, if you want to enter any type of notes in it, then you can do it here in this dialog here. Now, underneath here, you'll see this is the area where you can enter in your different formulas. And you've got 12 different columns here, A through L, to work with. And then you have a 13th column, which is called the filter. So we're going to go through each one of these, and we're going to kind of, again, like I say, we're going to add this one step at a time. Now, the nice thing about this is that you can customize it to make it look and do whatever you want it to do. So for our first column right here, what I want to do is I just want to list the closing price of the securities when I do my scan. And what will also make this helpful is that you can rename all these tabs. Instead of being A through L, you can name them whatever you want. So for the way that you rename them, so if you double click, for example, on the tab itself, then you can go ahead and give it a name. For example, I'll just go ahead and call this first one Close. Now, to really take advantage of the different power tools inside the program, the one thing that you will have to learn a little bit about is the formula language that you have available inside the program. And you can take this as far as you want. But even if you're really not interested in creating your own formulas or, you know, your own indicators and so forth, the more that you understand about the formula language, I think the more that you're really going to get out of the program. And at least if you have a basic understanding, you might have a little bit more faith in why that particular system is giving you that buy signal or sell signal and so forth. But we have a lot of different ways that we can help you with that. We have a number of formula writing videos up on our website there to kind of walk you through that. But for this first example, let's go ahead and just have the program return back the closing price of security. So the way that you do that is we just identify what we call the data array that we're interested in. In this case, I just want to see what the closing price is. So I'll just go ahead and type the word close. And then underneath column B, what I want to put in here is this is where I want to do my check for the data. I want to make sure that my data is current. So what I'm going to do is I'm going to double click on tab B and I'm going to call this date. And then inside this box right here, what I want it to return back is the most recent date that the data was scanned on. Now, what you'll find that's consistent throughout the program is that you'll always have access to the formula library inside here whenever you're in these different power tools. So for example, like right here in the Explorer, if you look down here in the lower right-hand corner, there's this button, which is called the Functions button. And if you open that up, you'll see over here on the left-hand side that there's a number of categories here of the different types of formulas we have available. We have an all category analysis tools. We have another category here called Candlestick. So this, for example, I mean, fans of Steve, for example, you know, he ran or basically shows, of course, a lot of different types of candlestick patterns. Well, maybe you're interested in creating your own or basically having to go out and search for different types of candlestick patterns. So what you could do here is you could choose Candlestick, and then you could choose from this list over here on the right-hand side. So for example, if you want to go out and look for a doji or, for example, like any type of window or a bullish engulfing and so forth, I mean, take your pick and it'll basically plug the formula right in there for you. Now, in this case, what I want to do is I want to go down to the date and time section right here. And the formula that I'm going to look for here is this very first one, which is just called day of month. So you'll see that in the format window, it's going to give us a hint of how this formula is going to be written. And then also what I want to do is I want to make sure that I have a check mark in both of these boxes underneath it. And then I'll click on OK, and that'll paste it right in there for me. Now, the key is that this is saying just day of month, and it says just open and close parentheses. That means that it has everything that it needs at this point in order for it to return back a value. So now, once we've got the close in this first column and we've got a day of month in the second column, let's go ahead and run our scan. And the way that you do it is just click on the OK button. First of all, you select the scan that you're interested in, which in this case is just our Explorer class. And then you choose the database that you want it to run on. So in this example, down here at the bottom, I've got a group underneath my index constituents called the Dow Industrials. So I'll go ahead and select that box. So that's going to select all 30 securities inside of that folder. And then over here on the right-hand side, I'll tell it to scan through the last 1,250 records, which, by the way, just real quick, there's roughly 20 trading days in a month, approximately 250 trading days in a year. So 1,250 is going to give us about 5 years of historical data. And then for this one, I'm going to tell it to run through our current exchange date and time. And then I'm just going to go ahead and tell it to start the exploration. Now, this will begin the process here. And what's nice about this latest version of the Explorer is that you don't have to run, or you're not basically tied to just wanting to run one scan at a time. You can run as many different scans as you want. And the nice thing is with the version 17 of the Explorer, all of these things will run, and you can open up each one as other ones are running kind of in the background there. So again, it's really versatile, to say the least. So now, once this actually runs, you'll see that over here on the left-hand side, we've got 30 securities inside of our list. We don't have any securities that were rejected, so that's good, because right there, that would tell you that you've got, of course, a problem with that particular security or that symbol. We got our securities listed alphabetically. Then we have a column called close, and then another column called date. Now, these columns here, if you click on them, you can then sort on the data. So for example, very quickly, I can see that Cisco is the lowest price security inside this list, and United Health Group is the highest at 425. Now, what I really want to zero in on in this first scan here is this column, which is the date column. Again, click on the column heading, and what you're looking for is you want to make sure that every security has the same number in it. And this is your quick check to make sure that you're looking through the data that you want to be looking through. What you'll find is that once you start running a lot of different scans and changing dates and so forth, it's really easy to change the date of what you're scanning on and end up with results that actually aren't pertinent to what you're interested in finding. So again, that's just a real quick way to check to make sure that you're looking at all the data is what you want it to look for. So next, once you understand how to do that, then what we're going to do here is we're going to add a bullish or bearish component to this. And again, this is another area that you're going to see consistent throughout today's presentations with these presenters, is they're consistently going to be looking for different types of moves in the market, whether they're, up or down, bullish, bearish, sideways, whatever. Now, there's a lot of different ways you can identify a bullish or bearish type of condition, but hands down, the most consistent way to do it and the easiest way to do it is to use some type of moving average. So for example, just real quick, here in the background here, I just have a chart here of the SPY, and just see that's just a basic candlestick chart. And this blue line here, if I hover directly over it, you'll see it's just a 50-period simple moving average. This is the reason why a lot of these guys are looking or using moving averages in their analysis, is because in this particular example, look how the prices basically are moving up. This is acting as a support level. As the prices come down, they touch the moving average. Here, they basically did close down for one bar, but then again, traded up, came back down, touched it, again moved up, and so forth. These moving averages are a dynamic way to identify support and resistance. And then, as you might imagine, you can use just about any type of length of moving average and the different types as well. But in my opinion, I typically just use a simple moving average. I try to keep it as easy as possible. So for this example, what we're going to do is we're just going to identify if the price itself is either above or below the moving average. So in other words, if the security closes above the moving average, we're going to call that bullish. And if it closes below that moving average, we'll call that bearish. So let's go ahead and add that to our scan. So I'll go back into our scan. I'll click on the pair of binoculars up here at the top, and we'll open it back up, and I'll just double click on it, and we'll be right back to where we were before. Now, I'm going to go to another column of data. I'm up to column C right here. I'll double click on it, and I'm going to call this column here bullish. And the formula that we're going to look for, again, is we're going to look at the closing price in relation to that moving average. So first of all, to identify the closing price, we write that as just the word close. And now what we want to know is if it's above or below a moving average. So we'll say greater than, for example, whatever item that we want, which in this case is going to be a moving average. Now, let's go out to our library here again. I'll click on the functions button here, and I'll go to my all category. And now what I'm going to do here is, once I've got this selected over here on the right-hand side, I can scroll down and find the formula for a moving average. Or a quicker way to do it is that if you just click over here on the right-hand side and then just start typing like MOV, for example, that'll jump you down to that group of indicators that might be of interest to you, which in this case, of course, is a moving average. So I'll go ahead and select it. Again, down here in this format window, this is going to give us an idea what it's going to come in at, or basically how it's going to be written. I'll click on the OK button, and that'll paste it right in here for us. So again, the nice thing about this is this, by plotting it this way, it's going to give us hints of exactly what it needs in order for it to calculate. So the first thing that the moving average is looking for, it's looking for the data array, meaning what do you want to create a moving average of? Do you want to create a moving average of the close, the high, the low, the volume? What is it that you want? So in this case, we just want to do a moving average of the closing price, followed by the number of periods that you want to use. So again, we'll replace periods with 50. And then these are the different types of moving averages that you have to work with. So in this example, I just want to use a simple moving average, which is designated with just the letter S. So I'll get rid of all that and I'll just replace that with the letter S. And that's our 50 period simple moving average of the closing price. So now our formula says that the close is greater or above its 50 period moving average. So in other words, again, if it closes above that moving average, we're going to consider that to be bullish. Now, if we've written this and we feel fairly confident that this is correct at this point, and we want to do something for the bearish side, what I can do very quickly is I can just make a copy of that and then go to a new column of data and then just paste it in and then just make whatever changes that I want to the second one. So in this case, to identify bearish, I want to change that greater than sign to a less than sign. So in other words, the close is lower or less than its 50 period moving average. Now to identify this up here at the top, I'll just double click on the D and I'm going to change that one to bearish. So now this is going to identify, again, like I say, when the close is below its moving average, and that's going to be identified as a bearish type of condition. So let's go ahead and run this one. We'll click on OK. Again, we'll leave everything exactly the same way, and then just click on my Start Exploration down here at the bottom. And again, this is going to run through our 30 securities, and this is going to add 2 more columns of data to our scan here. All right. And usually what happens here is that when you're running these things, after you run the first couple or something, it actually goes a little bit faster here, once the program really kind of, gets caught up, I should say. Now, we've got 2 more columns of data. And what's interesting about these 2 columns of data here is that you'll see that they come back with either a 1 or a 0. So here's what happens, and this is something that you'll see consistently throughout these different explorations, is that when you run a scan, a lot of times that's exactly what will happen. It'll come up with just 1s and 0s. And what that means is that when you ask the program a yes or no, true or false type of question, by default, if the answer is true, it comes back with a value of 1. If the answer is false, it comes back with a value of 0. So very quickly, I know that 3M, for example, is bullish, or in other words, I know that basically the closing price is above its 50 period moving average. But on the other side of the coin, Boeing, for example, is quote unquote bearish, and I know that the closing price is below that moving average. But let's go ahead and basically I'll go ahead and open up both of these securities. And I'll just double click on them and that'll open up those 2 charts here. So this is 3M, and you can see 3M is clearly above that 50 period moving average. So that meets the criteria of a bullish condition. I'll go ahead and close that down. And then Boeing, as you can see, the closing price on that last bar is below that moving average. So that is quote unquote meeting our bearish condition. All right. Okay. So, and again, if you have any questions too, by the way, make sure and let me know. Just send me a message in the chat window, and I'll be more than happy to try to help you out here, as at the end of today's class here too. So, all right. So next, once you understand how to do that, or basically add that to it, then the next step, or the next thing you want to learn how to work with, is what's called the filter. And the filter really is the key to the Explorer. This is what allows you to weed out those securities that don't meet the criteria you're looking for, so you end up with that very select list. So let's go back into our exploration. And the other thing is that whenever you run a scan or a system test or whatever the case may be, you'll see that if it has been run previously, it's going to have an R inside of a set of brackets on the right-hand side. That means that there's an existing report for it. So to see that report, just right-click directly on it, go into the report, and there, again, like I say, you'll be right back into that same view that we we're just looking at here a minute ago. All right, so now, again, what we could do is we can sort on this column here, and very quickly, I can see that most of the securities here came up under that bullish criteria, or I know that most of these securities are closing above its moving average. On the other side of the coin, if I click on the bearish, you'll see that I've got a handful of securities that are bearish, but not very many. So let's say, for example, that I'm only interested in bullish securities at this point, and that's what I want to see from this point going forward. Well, to do that, we'll go ahead and close down this report, and we'll go back into the exploration, and now we're going to talk about how to use this particular filter. Now, there's two different ways that you can use the filter. The first way that you can do it is that if you have the formula, for example, you can put it right in there, and this will basically find securities where, in this case, it closes above its 50-period moving average, and that works fine. And if you like using the filter that way, that's a great way to do it. What I typically do, though, is I actually reference the formulas inside of these other columns, and the reason why I do that is because it's really easy to kind of pick and choose which one I want. I can add one or I can delete one and so forth. And let me show you what I mean by that. How you reference the different securities that are coming up with these different returns here in these different columns is that when you run a scan and it's coming back with a value of 1 or 0, then you could use the filter to say, hey, only give me securities that came back with a 1 underneath column C, for example. So the way that you do that is you identify that as COL, which is an abbreviation for column, and then the column letter that you want to see. So in this case, let's say I only want to see bullish securities, or in other words, I only want to see securities that are coming back with a value of 1 underneath column C. So for the filter, I'll just put in COL and the letter C. Click on OK. And then to run the scan, again, we'll keep everything else exactly the same way, and just click on the Start Exploration and begin that process again. All right. All right. So now what we've got here is we've got our different securities here that have been run through. And now you'll see that in our results, there's 26 securities that actually made it through the filter, and 4 of them were rejected out. So another way that you can actually double check to make sure that this is correct is then you can, of course, then click on the column heading of that particular one that you sorted on. And every security inside here should all have a 1 in it. And then, of course, then everything underneath the bearish, there shouldn't be any securities in here that have a 1 underneath the bearish side. So now, again, as you can see here, we're just down to 26 securities. And again, 4 of them have been rejected. Now, to take this example a little bit further, then what we're going to do is we're going to add volume to this particular equation. So, for example, let's go ahead and just open up a chart just real quick. And let's, I don't know, we'll just open up Boeing, for example. Go ahead and click on Boeing. And what I want to point out here on this chart here is look at the volume down here at the bottom. And I'm sure most of you are aware, but volume is a very volatile indicator. On some days, it's going to be extremely high, and on some days, it'll be extremely low in relation to itself or relative to itself, right? And the other thing too is that the number of shares that are traded on a security can vary vastly between the different securities throughout the different, markets and so forth. So this is one of the things that actually can get a little confusing when trying to create different types of scans based off of volume. One of the ways that a lot of people like to use the Explorer is they want to use an exploration to create, for example, a select list or a watch list of securities that meet a certain volume requirement or a certain price requirement. And they create, for example, like a fairly large database that then they run their technical scans on, and they know that every security inside this database has met that volume/price filter, for example. So let's go ahead and do that next. So let's go back into our exploration here. I'll go ahead and just click on my binoculars here, and we'll open it back up. And now I'm going to go to column E, for example. And this one, I want to go ahead and I enter in the formula for volume. And to do that, I'll just type out the word volume. Okay. And for the column name here again, I'll just go ahead and type out volume to identify that. So let's go ahead and run this one. We'll click on OK. Again, click on Start Exploration, begin that. And the reason why I want to do this is I just kind of want to see the type of volume that's being traded on these different securities at this point in time. All right. This should, again, go through pretty quickly. There we go. All right. Now you'll see we've got another column of data here. And again, it's labeled volume, and I'll go ahead and sort on that. And very quickly, I can see that Travelers is the lowest volume security inside this list right now. And vice versa, if I click on it again, you'll see that Apple has over 37 million shares, right? That's a huge difference between these two different securities, right? And so one thing that a lot of people like to do when building or learning how to build their database is they'll want to put in some type of filter based off of volume. So the one thing that you have to keep in mind is that depending on the version of MetaStock that you have, whether you have the real-time or the professional version, or the end-of-day versus the professional or real-time version, is that when you're running a scan and you're running it on during the middle of the day or during the trading day, you have to understand that what it's doing, it's getting the most recent data that it can. So for example, I just ran a scan on these 30 securities. We're in the middle of a trading day right now. And the volume, as you can see, for example, the Travelers at 315,000 shares is not the complete number that it's going to have at the end of the day. So when you're running these different scans, it's important that you're looking at the information that you want to be looking at. So again, in the middle of the day, if you've got the real-time version, be aware that you're not looking at complete information at that point in time. So what we could do is we could rerun this scan, but instead of running it on the current exchange date and time, then I'll tell it to go back and run it through, for example, like Friday's close. So I'll choose May 7th, and we'll click on our Start Exploration, and again, we'll begin it one more time. All right. Now, by doing this, this is going to run through Friday's close, and again, give us all that information through the closing price at that point in time. So again, if I sort on the column here called volume, you'll see again, Travelers comes up as the lowest volume inside this list at a little over 1 million shares. And on the other side of the coin, Apple is at the highest at over 78 million shares. So again, these numbers, again, in this case, for example, are more than double than what they are right now in the middle of the trading day. So let's go ahead and add a filter to this volume. And let's say that we only want securities that are trading over a particular volume number. So to add that to our scan here, we'll go ahead and open it back up. And now I'm going to go to column F, and I'm going to rename this one VOLFLTR. The other thing to keep in mind here is that when giving these different tabs a name, you have 8 spaces to work with. So in some cases, you just have to be a little bit creative sometimes, but in this case, this is just going to represent a volume filter. So to identify volume being over a particular number, all you would say, for example, is volume is greater than whatever number it is you want. So in this case, for example, let's say that we're looking for volume greater than 2 million shares. So we just type out 2 million. 3, and again, at this point right here, we could go ahead and now add this to our filter. So this formula again is going to return back either a 1 or a 0. If it's as true, if the volume is over 2 million, it'll come back with a 1. If it's not true, it'll come back with a value of 0. Now, once it's in this format, I can then go to the filter tab and say, hey, I want to add that to this filter. I want to see the securities, for example, that are meeting the bullish criteria and also, for example, that are trading over 2 million shares, for example. So to add that to the filter, you say and then again, whatever column it is that's returning back a value of 1, which in this case is going to be column F. So we do COLF. So again, this is going to identify securities that are bullish and also trading over 2 million shares as of Friday. So we'll go ahead and add that to it. We'll click on OK. And again, we'll start our exploration again, and we'll see what this comes up with now. And again, we started out with 30 securities, so this is going to weed it down probably even a little bit further. So now you can see if I sort on the volume here, you'll see that the lowest volume security now is Amgen at 2.5 million shares. And again, vice versa, Apple's at the top at over 78 million shares. But again, the point being is now more securities have been weeded out. And you can also see that up here in these tabs. Now we have 21 securities that have met the criteria and 9 securities now have been rejected. All right. Now, that's one thing you can always do is you can go in and you can put in just a hard and fast number. But again, the point of working with volume is since volume is so volatile, and if you're looking for a hard and fast number, there's a very good chance that some of these securities, typically trade over 2 million shares, but they didn't trade 2 million as of Friday. So another thought for you is to maybe, instead of saying that it has to be exactly 2 million shares, for example, maybe what you could do is you could say that the average volume has to be greater than 2 million. So to make the change to this formula, rather than saying the volume, we're going to say a moving average of the volume. So the way that that's written, you write that as MOV, open parenthesis, the volume followed by a comma, the number of periods that you want to use. I'm going to use 20, followed by a comma, and then the type of moving average. And again, I'm going to follow that with an S. So in other words, this is going to be a 20 period simple moving average of the volume. Now, why did I choose 20? Well, again, keep in mind, there's approximately 5 trading days in a week typically, and approximately about 21 trading days in a month. So this is going to give us the average 1 month volume basically. So now it's basically going to say that that it just has to average at least 2 million shares over a 1 month period. So let's go ahead and run that again. And I'll go ahead and click on OK. And we'll click on our start exploration. We'll rerun it again and see if that changes our results at all. So again, we had 9 securities that were rejected out before, and we'll see what this actually comes back with. All right. And again, as I was saying before too, if you have any types of questions, make sure and let me know. Just send us a message in the chat window. All right, so now we're down to 5 securities. It was 9, now it's rejected 5. So in other words, 4 securities have come back into the list. So again, I'll sort on the volume here. And now you'll see we've got McDonald's, 3M, United Health Group, and also Honeywell that have come back into the list because, again, they're averaging at least 2 million shares a day. So for example, let's go ahead and open up McDonald's. I'll close down this report and we'll go ahead and basically kind of zoom in here a little bit. And McDonald's, for example, what we're looking at here is this blue line. This is our 20 period average here of volume. And now if I hover directly over this again through May 7th, which again was Friday, you'll see that the value or the average is 2.2 million shares. And that's why McDonald's got added back into that list. And as you can see very clearly that if you were looking for securities that were trading less than 2 million shares, McDonald's would have been weeded out the last few days. So again, that's just another idea there for you. Okay, so that's taking, for example, taking a look at the average here. So another thing that a lot of people would be interested in finding out are securities that are maybe trading over its average. So in other words, for example, rather than saying that the average has to be over a particular number, maybe what you might be interested in is looking for securities where the volume is just trading over its average period. So to do that, we'll go ahead and put volume at the beginning of this. We'll say volume is greater than or above its 20 period moving average. So now again, what this is going to do is going to find the securities that are trading above its average. So again, we'll rerun this one. And again, click on our start exploration and begin that process again. All right. There we go. And one more time, we're looking at this. Now we've got, you can see we've got 10 securities and 20 of them have been rejected out. So now our list has gotten quite a bit smaller, but as you can see now, we got Caterpillar, Chevron, Cisco, and so forth. But let's go ahead and open up Caterpillar and close down this dialog. And now what this was looking for, again, we'll kind of zoom in here and I'm going to expand our volume here a little bit. What this one is looking for is when the volume was trading above at the moving average as of Friday's close. And you can see that Caterpillar met that particular criteria. Okay, so that's another way that we can take a look at it. Let me give you another idea here as well. So another thing that a lot of people like to look for is they like to look for large changes in volume. So a formula that could be of use to you if you want to do something looking for large changes in volume is what you could do is we're going to go back to the volume filter here is we're going to add another formula here, which is called a rate of change. And what the rate of change will do is either on a percentage level basis or a point level basis, tell you how much or basically how fast things are changing over different periods of time. So for example, the way the rate of change is written, it's written as ROC, open parenthesis, the data array of what you're looking for. So in other words, do you want to see a rate of change of the close, the high, the volume of an indicator? Again, it can be anything you want, but in this case, we want to see the rate of change of volume, followed by the number of periods that we want. And let's just go ahead and just use 1, meaning that I just want to see what the difference is of one volume bar in relation to the previous volume bar, followed by a comma, and then whether you want to see it on a percentage level or point basis. And if you want to see it on a percentage level, you just put a % sign and then close that with a parenthesis. So in other words, what this is now telling us, or will return back to us, is it'll give us a 1 period % rate of change of volume. So let's go ahead and go back here to my filter. Now this is going to return back an actual number other than 0 and 1. So what I'm going to do is I'm going to go back to my filter, and I'm going to remove this second part here, because I just want to see all the numbers that are going to be returned back in this formula. So we'll click on OK, and we'll go ahead and start that process again. And now what we should be able, or should get now, is again, is the percentage change over a 1 bar period. Excuse me. So for example, now you'll see we've got a column of data here that has, in this first one, 3M 0.1665, -6, and so forth. Let's go ahead and sort on it. What this is telling us is that in this case, for example, United Health Group was 39.4. What that means is that United Health Group on May 7th, the volume was 39.4% lower than it was on May 6th. So let's go ahead and open up that security. And then on the other side of the coin, we'll sort on it again. And there you'll see Nike. Nike was up 103% in relation to the previous bar. So let's go ahead and open that one up as well. I'll double click on it and again, close down this report. So the first one is Nike. And we'll zero in on this one here just real quick. And you'll see down here, what we're looking at is this volume bar right here on May 7th. You'll see the volume, or the number of shares traded on the 7th, was over 10.5 million shares. And on the 6th, 5.2 million shares were traded. So in other words, this was over 100% higher than the previous bar. So again, this is another thing that a lot of people like to go out and look for, is unusual volume activity in these different securities. And this is one way that we can do it. So again, this is showing us the volume with an up spike, and vice versa. For example, we'll go to United Health Group, and this one, for example, you can see that the volume on May 7th, in this case, was 1.8 million shares, and on the 6th was 3 million shares. So in other words, this was what, 40% lower than the previous bar. So this formula, again, that's returning this for us is called the rate of change. And we can use this in a lot of different ways. But another thing you could do is, once you kind of find out, or basically determine what it is that you're looking for with these percentage changes, for example, what I could do is I could say, hey, only give me securities that are trading more than 10%, and say, and the way that I would do that is I'd say greater than 10. So in other words, this is going to only give me securities that the volume % rate of change is more than 10% from the previous bar. Okay. So, and if of course you want to add that back to your filter, just go back to your filter. And again, we could say, and column F. Okay. We'll click on OK. And again, click on our start expiration. But again, what that's going to do is only give us securities now, in this case, that are quote unquote bullish, and the volume had a more than a 10% change on May 7th as opposed to May 6th. So we'll go back and take a look at that. And now we're down to 4 securities again. We've got the Dow, we've got Goldman Sachs, again, Nike, and then Walmart. All of these securities, as you can see here, traded more, again, like I say, had a more than a 10% change from the previous day there. Okay. Now, once we understand how to do that, the next thing that people want to add to these different types of scans is some type of price filter. And once you understand how to do what I just walked you through with the volume, adding a price filter, this is actually really easy. So let's go back into our scan here. And we'll go ahead and close down this report. And another thing you can do too is that, again, with this scan here, we've got some filters that are activated. we could go into the scan and we could turn off or basically delete this, for example, right? Click on OK. Or if we want to run a scan without the filter completely, what we could do is we could also unselect this box right here that says use the filter. So I'll go ahead and shut that off. And again, I'll rerun another scan. So this will basically return back all the securities there for us that we're scanning on here. And it shouldn't reject anything. And here again, you can see we've got 30 securities with nothing being rejected. All right. Now what we can look at here is we're going to look at the closing price. And again, I'll sort on that. So we've got the lowest price security here of Cisco is trading, well, on Friday, traded a little over $53. And on the other side of the coin, we have United Health Group. So let's say that for in your particular scan that you want to put a price filter in your exploration. So let's go ahead and add that to it. And we'll go ahead and close down this report and we'll go back into it. And this time I'm going to go up here to column G and I'm going to call this PRC. Oops, let me go ahead and double click. There we go. Do PRC FLTR for price filter. That's going to be my abbreviation there. So for this one, I want to identify if the close is greater than whatever number it is that you want. So let's say that we're looking for securities that are between $100 and $200, for example. We'll just say 100. And I also want the price to be less than an upper number. So I'll say, and I also want the closing price, for example, to be less than, say, 200. Okay. And so again, if I want to add that to my filter, I go back to my filter tab and I say, and column G. So now again, my two criteria is column C, meaning that it's going to find securities that are bullish and securities that are between $100 and $200. We'll click on OK. And again, we'll run it just one more time here. All right. And so again, this is going to weed out those securities again that that are outside of that particular price boundary. And you'll see that, oops, actually, as I did that, the one thing that I didn't do is I didn't go back and I turned my filter back on. So everything got returned back here. So I'll go ahead and close this down. And I'll do it one more time. I'll go ahead and select the filter this time, make sure that that's selected, and then again, click on my Start Exploration. All right. And that should give us a little bit more accurate result here. All right. So now we're down to 10 securities again. 20 of them have been rejected. You can see that the lowest price security in this case, for example, is Chevron, and vice versa. The highest price security again is Johnson & Johnson. Okay, but they all fall within that particular range there of anywhere from $100 to $200. Now we could keep going with this, and we could basically do, for example, we could also put in, for example, like a percent rate of change, for example, of the price. Say, for example, you're looking for securities where the price has increased 5% and the volume has increased 10% and so forth. You can put in as many different types of criteria as you can pretty much imagine. And this is what makes this Explorer so incredibly powerful, if you ask me, to say the least. But lastly, what I want to do here is I just want to show you just very quickly is that once you run these different scans, is how to save these results so you can then use it in other aspects of the program. And again, this is really simple. So basically what happens is that when you run a scan like this, and let's say that you want to add all these securities all meet the criteria that you're looking for. To save that to a list, all you do is over here on the right-hand side, just click on Save List. And inside here, it's going to bring up another dialog where you can either add it to an existing list that you have, or you can click on this Create New and give it and basically create a new folder for it. So for example, I'll just call this Explorer. Oops. Call it, if I can type there. Okay, we'll call this Explorer class list. Click on Create. And then what's important at this point, you'll see it has a 0 in it. That means that there's no securities in that folder right now. So you don't want to close down this dialog, but instead you want to click on the OK button down here at the bottom. And by doing that, that'll add all those securities to that list. So that's one way to do it. A second way to do that is you can pick and choose the securities you want to add. And the way that you do that, for example, you hold down the control key, and let's say that you want to JP Morgan, IBM, we'll do Nike. We'll just say these 3 securities. I want to create a list of just those 3. select the ones that you want, right click on one of them and choose add to custom list. And you'll be right back into that same dialog that I just showed you. And again, we could add it to an existing one, or again, click on the create new and then give it a name. So again, I'll call this Explore selective list. Okay, and click on create. And one more time, click on OK. Now, once you actually have added or basically created these lists, then when you go to open up a chart by clicking on this open chart up here at the top, you'll see that these two lists have now been loaded here underneath this folder, which is called the custom online data list. And you'll see that in this case, I've got two different folders that have been added, Explorer class list, and I have 10 securities, and then Explorer selective list, which I have 3 securities. And what you do is, again, just like any other time that you want to load a chart, just click on the drop-down arrow, select the security that you want, click on the open chart. And once that chart opens up, what's nice about that is once you've got this list set up, down here in the lower right-hand corner, if you click on this right pointing arrow, you can very quickly just scroll through the securities in that list, looking for the different buy and sell setups that are of interest to you. So again, it's just a really nice way to kind of tie all that information back together there for you. All right. All right. Well, hope that's helpful. Let me just tell you a little bit about, for those of you who haven't heard of me or what we offer at Learn MetaStock, let me just give you a real quick run through of our site. Again, what we do at Learn MetaStock is we help you with your MetaStock program in whatever format that you want. Again, anywhere from just getting started with it to advanced formula writing. We can help you in a lot of different ways. But when you become a member of the Learn MetaStock site there, you'll find that if you go up here to the live classes, for example, that we do up to 3 live classes per week. We do them on Tuesday, Wednesdays, and Thursdays. And once you become a member, you can see if I scroll down here a little bit, you'll see that we've got the forecaster that we're going to be doing tomorrow. We've got a Zenith class on Wednesday, and then we have an expert advisor class on Thursday. But once you become a member, you just click on the join live class at that particular time, and you come in, and what's great about it, you can ask your questions during the class and so forth. All right. Now, where most of our customers spend the majority of their time is in this area right here, which is called the video library. And in the video library, you'll find that we've got well over 100 instructional videos available here for you. And they're laid out chronologically, meaning that if you're brand new to the program and charting and technical analysis and trading, you want to start right at the very top and just start working your way down. And the way that you do it, just click on the Watch Now button. And then, of course, that'll open up or basically launch the window with that particular video, which, of course, then you can play at that time. And the other thing that you'll notice here is over here on the right-hand side is that if we create any formulas for you to go along with the video, for example, you'll find them underneath this section, which is called resources. And what you do is you just click on that particular button and it'll load the different formulas, and they'll install directly into your MetaStock program. So in addition to that, in a lot of our videos too, we also have quizzes available here for you too. And when you click on the quiz button, it's going to be an online quiz that'll actually test what you just learned in that video or help reinforce what you've learned there. And this is just another good way to basically kind of make or help make these different concepts sink in a little bit better. And what you do is you just go through the quiz, and at the very end, it's just a self-scoring quiz. At the very end, it'll give you the number of how well you did. So it'll give you an idea of maybe you want to go back to a particular area here to learn a little bit more about it. But again, getting started with our training, I typically recommend most people just kind of start right at the very top, start working your way down. And especially in this getting started section, what you want to do here is you want to at least go through these first 4 videos here. And this will really give you a good understanding of the MetaStock, basic capabilities and the different ways that you can use it. But once you have a good understanding of it, then you can scroll down here a little bit further. And then you can jump down to some of the other power tools, for example, like the forecaster, the expert advisor, option scope, or maybe you're interested in back testing trading ideas. And as you can see, we've got a lot of different types of training available just on system testing. We have a number of videos just on the Explorer, like what we did here today. And again, for those of you who are interested in creating your own strategies and you want to learn more about the formula language, you'll see we've got a number of formula writing videos here for you as well. And we've got a few videos here on the RMO. We've got a number of videos just on stops. And this is an area, in my opinion, is actually pretty important. And that is, anybody can get into a trade at any time, but getting out of a trade is really what determines, if you're going to be successful or not. So this is an area for most people that that'd be a good area to kind of spend some time in to make sure that you understand exactly where you're going to get out of a trade. But we have a lot of, again, instructional videos on indicators, but probably the most powerful or the most popular section of our website are the trading strategies. And here we'll take a trading strategy, and especially like Stocks and Commodities Magazine. That's one of my favorite sources, by the way. They've got a huge library of trading strategies that you can go up and read about. And what we'll do is we'll take a strategy and we'll not only show you how to interpret that particular strategy, but we'll also give you the formulas for it as well. So any formulas that we create will be over here on the right-hand side of that video, and they'll download directly into your MetaStock program. So we can save you a massive amount of time and effort, to say the least. But as you can see, we've got a lot of trading strategies. We do a lot of different product reviews. And one of the most recent one that we just did was just on the LCI system, which the good news is you've already got inside your MetaStock program. The point being is that MetaStock's extremely powerful, to say the least. And there's a lot available here for you. But in addition to that, we, again, like I say, we go through the different add-ons there and try to help you with those as well. And we also have a number of videos on our Zenith or our real-time application there as well. So again, we've got a lot of different ways that we can help you here. And if you haven't tried us before, you're getting started with the MetaStock program, give us a try. And we've got a special offer here for you today. So at this point, I'll turn it back to Jeff and go from there. So are you there, Jeff?
Awesome. I am. Can you hear me?
Thank you. Yep. Perfect. Thank you.
All right. No problem. We don't have a lot of questions coming. Well, there was actually quite a few questions coming through GoToWebinar, but I answered most of them, hopefully well. In YouTube, though, we did have somebody named Lewis. And Lewis said, Learn MetaStock is a great service, and Kevin's customer service and follow-up is excellent, which didn't surprise me, but I thought you'd like to hear that.
As always. Yep, absolutely. Thank you.
All right. Other than that, yeah, I'm going to talk a little bit about the live classes and that kind of stuff. I want to say thanks for coming in. You did a great job today, as expected.
Thank you. Yeah, thanks for having me again, Jeff. I appreciate it.
All right. Thanks, Kevin. All right, let's go ahead and get swept over here a little bit. And I'll kind of talk to you a little bit about the Learn MetaStock offer. Of course, it's part of our summit offer that we're doing today. Kevin does a really good job of kind of identifying the stuff that he does on his site. But just to kind of sum up, you do get the live classes. They're held. I'm just making sure I'm sharing the right screen. It looks like things are working as I expect them to. They're held 3 times a week. He does live classes on MetaStock. He has kind of a variety of subjects that he does. But as part of your membership to learnmetastock.com, you get hundreds of recorded videos. One of the things that I really like is when he goes in and he'll take a stocks and commodities article and he'll say, okay, well, let's kind of look at the math for this in MetaStock. Let's test it. And he kind of comes up with kind of, I guess, maybe like a little bit of a verdict, but a lesson around what you might have seen in your stocks and commodities. And he does that regularly. He also does the formula writing. He offers a lot of formula downloads that are just available as part of his subscription to his website. And he even does like a weekly market outlook. So it's a great service. I try and get everybody into it that's new to MetaStock. And the reason for that is simple. You know, this MetaStock software we've been working on since the 80s. It's literally been rated for decades the best software in its price category. But I do view MetaStock as a huge toolbox. You know, the better you understand how to use MetaStock, the better it's going to work for you. And what a better way to kind of learn about all the tools that are included than to have access to all of these videos and all these live trainings and that kind of stuff. So the learnmetastock.com is normally a subscription service that's $99 per month. If you're a new customer to it, what we're going to do is we're going to offer you an extended trial. And with that extended trial, you'll pay for the first month. You'll get the second and the third month for free. So your monthly cost for that first 3 months is like $33 a month. Pairs perfectly for those of you that are new to MetaStock and want to try it out. But even if you have had MetaStock for a while, I definitely would recommend that you try learnmetastock.com, because there's so much inside of MetaStock that you can learn from and learn to do. So to take, and I'm sorry, I have to do this. Just give me a sec. All right, there we go. That feels a little bit better. It's don't worry, I'm not sick. I'm allergic to the air, but that's only between the months of like February and December. Like January, I'm totally good. So anyway, it's $99 a month. That's $33 a month on the 3-for-1. And you can take advantage of that at 800-882-3040. You can visit us at metastock.com/sales chat to also take advantage of that. And we do throw it in as part of this bundle offer, where you'll get Steve Bigelow's Candle Profit Systems, the Vince Vora's Victory System, Rick Sadler, who's up next, his Patterns for Profits, Barry Burns' Top Dog Toolkit, Learn MetaStock, the subscription, and then you also get Unleash the Power of MetaStock, which is a training CD course that you can go through online, and you'll get 2 years of Stocks and Commodities magazine. If you're new to MetaStock, you can also add MetaStock to that as a MetaStock package. It's the same kind of offer. You pay for a month and you'll get the second and third month for free. But to get all of those add-ons, basically normally you'd pay about $4,941. We were able to pull that price down to $1,895 as part of the special offer today. The subscription does not include a money-back guarantee, but most of the add-ons do. So you can evaluate everything. The risk to reward ratio is great, because if it's helpful for you, it's worth it. So in any case, you can give us a call at metastock.com/summit deal, 800-882-3040 to kind of call, and we can answer any questions you have, or metastock.com/sales chat to take advantage of that. So I'd recommend you do it. And I think we're doing great today. I hope you're enjoying the classes. I do want to say thank you to Stocks and Commodities magazine for sponsoring the event. Somebody actually left this in here, so it's a really good thing. But they are a great magazine. They do a great job of kind of supporting us. It's a great magazine, and you'll get either like a free issue just for registering for today's event, or you get 2 years of the subscription for free if you take advantage of our offers. So there you go. I would like to spend a second to talk about Rick Sadler. Rick does a great job. I enjoy having him in here. He actually is the person that Steve Bigelow talked a lot about, the T-line. I believe he was, I'll let him tell this story a little bit more, but I believe he was one of Steve's first students, and they did a lot of work together with that. And he was actually the person that kind of spotted the T-line, and Steve's been using it ever since. So Rick, feel free to kind of correct me on that story if I'm wrong. I will say this for sure, Rick does a really good job. We love having him here, and he's going to be talking about some of his patterns for profits today. So how are you doing today, Rick?
Doing absolutely wonderful.
Did I get the broad strokes of that the T-line correct there?
You did. Broad strokes, good. Yeah.
Okay. Oh, oops! I just muted you. Let's unmute you. I was trying to make you the presenter. Here we go.
Okay.
There you.
All
right.
Yeah. I definitely when I first started to trade, in fact somebody said, "Hey Rick, we were chatting with some chat system." And somebody said, Rick, you should go check out Steve and Candlestick Signals. And I did. And I traded with Steve, learned under Steve for quite a few years in the beginning. And absolutely. Yeah. True story. What you're saying. Yep.
All right. Let's see. Did we get your screen share in? No, not yet.
Not yet. There we go.
Perfect.
Screen
Yep,
should be
I can
up.
see.
How's that?
Yeah, I can see the non-expanded version of your PowerPoint. So I think that is correct.
Yeah. Oh, wait a minute. No, that's not what I want. Let's try this. There we go. How's that?
It looks perfect to me.
There we go. There we go.
All right. Thank you. All right. I'm going to get out of the way.
Okay. Thank you, Jeff. Hey, thank you, Jeff. Thank you, MetaStock. And thank you for everybody being there. And, you know, I was sitting in on the presenter right before me, and wow, good stuff there. I got to tell you. Nice, Jeff. You have somebody on like that. And I apologize. I don't know that person, but I was watching what he was doing and sharing and teaching, you know, how to use MetaStock. I thought that was just top notch. Absolutely. All right. So I want to welcome everybody. My name is Rick. I appreciate it. Appreciate you being here. I'm the founder of Hit Run Candlesticks. And over 34 years of trading, I've learned a little bit about trading. And not everything is about charts. Not everything is about a trade plan. It takes you know, little pieces of this and that and the other thing. You put it together, and before you know it, you have yourself a nice apple pie. But it's not all about a chart, and it's not all about an indicator, things like that. So I hope to kind of cover the gambit today a little bit. I have about 50 minutes, and I hope to cover that, answer any questions I can possibly answer. And then I believe there is a trial out there that Jeff will talk about. I don't even think I have anything on my charts about that. So, you know, why are we trading? We trade to make money, right? I mean, let's go ahead and get shallow here. We're here to make money. That just bottom line. And for me, it's to create wealth. That's the way I look at it. And it's my road to wealth. I have a picture here of Route 66 just to help, you know, the road thing. And now let's get some wealth in there. And just like when Route 66 was traveled years ago, and even when it is today, you know, they made a plan. They made a plan here, and they followed their plan. They went to all those different cities or stops until they got to their destination. And everybody's destination is going to be a little bit different. But I think in the beginning, it's all the same. We have to have a plan. And we have to know what to do in that plan. Now, this whole is not about a plan, so please don't turn it off. I know that's one of the most boringest things, and no one wants to listen to it. But I have to tell you, any trader out there that has made it in this business will tell you, you've got to have a plan. Okay. The reality is, though, everybody wants to see a chart. Unfortunately, it's not always about a chart. And I can safely say that because I've seen where one person is making money on a chart. Say you've got a chart that is trending up here, and somebody's making money on it. And then for some reason, and we all know that charts have little pullbacks, right? We all know that. Somebody can be making money and somebody else can be losing money. Why is that? And it's because they don't have a plan. They don't know what chart patterns they're looking for. And this is where MetaStock rocks. I mean, it's your MetaStock is like, it does it for you. You can find the setups. Not only, you know, I've got some setups in there, but there are other folks that have setups. Jeff mentioned Steve Bigalow, you know, the candlestick signal. So it's not, you know, you're not left by yourself. You can see, like today, I'm going to talk about the 3/8 trap a little bit. And it's set up so that MetaStock actually will show you, here's the 3/8 trap. But then what are you going to do with that 3/8 trap? See, you have to know what to do with it. You have to have that plan. And it's just crazy that somebody can be making money in XYZ chart and somebody else can be losing money. And it's all because they don't have that plan, where they're going, what they're going to do when they get there, and then their destination. Their destination is important. And that's something I hope to talk about, is let's get to our destination. All right. So, here in April, we gave away a $3,200 computer setup, monitors and everything. We're going to do that again the end of July. So stay tuned. Make sure you get signed up when we send out the sign up registration for it. We'll have a drawing. Okay, let's talk about the 3/8 trap. The 3/8 trap is when price is trapped between two moving averages, and really that's just an entry zone. That's all that is. It's just an entry zone. And the neat thing about MetaStock here is it will actually show you when you're in that 3/8 trap. For instance, see that little diamond right there, that little diamond right there, there's a diamond. This is a 3/8 trap as well. See those little diamonds? We're in the 3/8 trap here. And right in here, 3/8 trap. It tells you where those buy areas are, those entry areas. Now let me go through here and explain these moving averages a little bit, okay? This one right here, this is the 3 exponential moving average, and it's measured on the highs. Normally, you have any charting package, it'll come up standard, the last price or closing price, you know, for that whatever time frame you're on. This right here, this is what we call the trendicator, and we want that trendicator to be pointing up. Also, what we want is price to be above the trendicator, and when it is, what happens is we get this green bar down here suggesting that it's bullish. When price is under the trendicator, we get a bearish or a red bar. No, we don't buy down here. We don't want to buy down here. We don't want to pick bottoms, and we don't want to pick tops. We want charts to start moving up into a trend. And when price is above the trendicator, and this right here is the T line, I'm gonna come back and talk about that in a second. When the T line is above the trendicator, and when price has pulled into the trap area right in here, that's when we get these cool little diamonds. And this indicates that we're in that buy zone. And this is where you can decide, well, is this where you want to buy it or not? Okay, let's talk about the T line. The T line, that's right here. And folks, there's nothing fancy about the T line. It is simply the 8 exponential moving average. That's all it is. But I have found, well, in fact, the T line is the one single thing on the chart, as far as an indicator goes, that finally pushed me from wanting to trade for a living to actually trading for a living. So I owe a lot to this right here, and it has just been something just absolutely wonderful. So what we got here is a 3/8 trap, and here's the part. The trap is when price is trapped between the 8 exponential moving average and the 3. Now I use the 3 high, and this is the way it's set up in MetaStock if you're using the 3/8 trap program. So the neat thing about this is, well, one, it's alerted to you when everything's in a trend, but also when we're in the entry. And as far as a stop goes, well, let's think about this. If we like it because it's above the T line, but yet below that 3, and by the way, I also like them when they break out of that 3. Where would you not like it? Well, if this was to, there we go. If we were to close back below the T line right there, if that's our floor, remember we're buying it, we like it because it's in that area above the T line. So if it was to fall below the T line, then we wouldn't like it. So it almost gives you a stop, at least for consideration. Now, I don't always use the T line 100% every single time, because I also want to take in price action, support, things like that. But if we were to start breaking down here, just think about what this chart would look like. If this failed right here, if you bought it today and it failed down here, you might have an argument, or find some argument, well, I still like that chart. The reality is you're back down into that downtrend right there. So it really is kind of cool, the way you can use that T line to help with that. Oh, I better get out of this. And the whole 3/8 trap, what it's looking for is charts that rally up and pull back into the trap area, rally up and pull back into the trap area, just like that. That's what we're looking for right here. And see, here we're in the trap. Now, I rarely buy charts that are negative. And what I mean by that is, say this candle right here. This would be a negative candle. And I rarely buy those. I rarely try to pick a bottom. I wait for a bullish candle like this and then enter into this area, or when it's breaking out of that trap. Whoops, got ahead of myself. Breaking out of that trap area there. So I love this trade. It's pretty simple. It really is. It's very straightforward. And there's an explanation on it. I think Jeff will talk about that. Okay, let's pull away from the charts just for a minute, all right? And I'm not a fundamentalist guy. I don't follow, anything about a company or a chart unless it's just, in my face on the news. I'm just a short-term swing trader. I think an awful lot of traders are just short-term swing traders. They may claim that they're longer term. You may be, you're going to buy this longer term. You're just as happy as a clam. 1 day, 2 days, 3 days, 4 days. Well, the minute something like this happens, the reality is you're going to close it. And stop and think about your trading. Stop and think about that. Is that true? And I'm gonna bet the majority of traders are that way. That everything sounds nice. I'm gonna trade this. I'm gonna trade this up. I'm gonna put my stop in. Trade it up. Put my stop in. Like I said, the reality is, as soon as you get a sell signal up here, you're gonna look at your profits here. You're gonna take your money. And I would suggest don't fight that. Do what comes natural. Take your money. All right. I'm very big on taking profits. So I try my best to be a chartist, not a fundamentalist. I could care less about any news unless it's just in my face. If you can't, if it's there, I don't go search it out. I don't go search out for, this is a super duper company because it had great earnings and all this stuff. For me, that's too complicated. But being a chartist is not hard. It really isn't. All you have to do is understand a few candlestick formations. There's not very many, about 15, really. Some people might get up there into the 20 mark, but over 20, that's crazy. I know people that live with 5 or 6 candle formations, and they trade exceptionally well. Price action, excuse me, which price action is nothing more than looking at candlestick signals. That's it. 1 candlestick signal, 2 candlestick signals, 3 candlestick signals, putting them together, things like that. It helps you with price action. I think another thing that's important in the market is to recognize fear. Recognize fear, because a lot of times you can see that fear coming in, and I'll use charts like the CBOE, VIX, VXX, UVXY, one of those VIX tools. I have that on a chart all the time on one of my screens. Excuse me. Yeah, let me grab some water here. Thanks. So I like to see that. I mean, to give you an example, right now the market is sort of wandering. Normally I would be real concerned on a wandering market, but I mean for the day anyway. But I see no fear in the market, so I'm not overly concerned with it. Know when the water is too deep. I absolutely believe, and I talk to an awful lot of traders in a day's time, in a week's time, in a year's time. And one of the things that eats up your profits is chop. Chop is horrible. Just absolutely horrible for a swing trader. And so the thing is learn to recognize that and know when the water's too deep. Know when to get out of the water. Know when to say, you know what, I'm not going to trade for a couple of days till the market scores itself out. Know when to not have as many positions on. Know when to lower your cost or your risk per position. Bottom line, know when to lower risk in the market. These are the things that help you. You can find, MetaStock, fantastic tool for finding the setups, okay? And you can find the setup, but if you don't know what to do from there, it doesn't matter how good the setup is. If somebody can hand you a chart, and that's what MetaStock does, it hands you a chart that maybe should be considered for a trade, but if you don't know what to do with it, or once you bite into it, then you don't know what to do with it, what's the point? What's the point? Hope is just not a good indicator. In fact, I've looked and looked and looked and looked, and I can't find it. MetaStock just doesn't have a hope indicator in there, and I've looked. Learn when to trade. Learn when to trade. When the market is good, I believe that my market, I'm always following the SPY, and I follow the FANG stocks. I use FNGU to do that. When I take a long trade, I want the market to be in my favor. In other words, I want the SPY to be in my favor. I want it to be trending, and I certainly would prefer the FANG stocks to be up. I chuckle now because they're not. So I want that in my favor, and learn when not to trade. The market. Everybody wants to be in the market, but if you're in the market when there's disaster, you're likely to get struck by disaster. If you're standing, if there's lightning somewhere and you're standing next to it, that might not be so good for you. If there's a lightning storm outside, well, going outside might not be the best thing. If there's a lightning storm outside, climbing to the top of your roof and holding a metal pole up, probably not a good idea. So if the market is having this storm, probably not a good idea to be in the market. So learn when not to trade. The MetaStock Edge, it will give you the trend. This is what the 3/8 trap does for you. It pulls it up for you, so you don't have to hunt for a trend. It does it for you. A PBO, it's just short for pullback opportunity. It puts together that pullback into that trap area. It gives you the price action, the price action reversal pattern. That's where we see in the trap, and we see the buying opportunity into that bullish candle. MetaStock is truly an edge. It's kind of a it does everything for you. The previous speaker was saying something. I heard that he said that MetaStock is extremely powerful. Sometimes something so powerful can be slightly hard to use sometimes, and it takes a little bit to learn. That's where some of these packages come in. Is it just puts together everything for you, so you don't have to do very much of it. So extremely powerful. I know there's more than one package there, more than the one I have, and they're all just, you know, they're just right there to hand it to you. All right, I want to profits. I think we talked about the T line as being a possible stop area. You know, if you're looking at the 3/8 trap, where price between the 3 exponential moving average and the T line, if that's your entry area, well, if it was to close below your entry or below the T line, would that stand to reason that this trade is not working? Yes, it would, actually. So we covered the whole stop thing. It's pretty simple. It really is. 3/8 trap is a buy area. Below the T line is a get out area. Well, let's talk about profits just for a second. Now, you know, how does everybody feel about doubling your account? Look, I can't see the chat, but if you would like to double your account, just give Jeff there a thumbs up. Type in yes, you know, to let him know. I think this is on YouTube. You know, if you want to double your account, just give them a yes on that. Yes, double my account. Well, I'm going to show you how I do this and how I double my account in 12 months. And yeah, by the way, it's not double your account in 19 years. It's double your account in 12 months. And I want to show you how this can be done very easily. But now there are some things that you have to understand. You can't trade willy-nilly. Trade with the market at your back. So you've got to have the market on your side. Trade with a good plan. Trade with good charts. Use a designated entry area, such as a 3/8 trap. Use a designated get out area in case things go wrong, and they do go wrong. You want to get out. And now let's talk about the stock popping up, okay? I know one way that a lot of people like to trade is, let's do this right here. Yeah, I'm going to move right over here. You've got, say, a couple little lines up here, and then we've got price, okay? Price moves up, price moves back. Okay, you want to buy price, and now you want to look at targets. Well, this might be a target. This might be a target. I'm not crazy about that way of trading. I do think we need to see a path to profits, and that certainly might be a path to profits if you see some good target areas up there. But let me show you mathematically, let me show you how you could possibly get to doubling your account, and you don't have to have those big 100% winners that I hear about all the time. You know, you guys all get the emails, right? You know, people hitting these 100%, 500% type trade. Those are fine and dandy, but there's a whole lot of losing trades that go with them. So what I like to do is take my profits. Let's see, let's go here. Take my profits as we start moving up. So I want to take profits. I want to come up and take profits, and then I might want to take profits again. But I'm always taking profits before those targets are hit. Let me show you why, okay? So let's say you have an account size of $10,000. Whoops, let's make that just a little bigger, smaller. $10,000, okay? This is hard to write with a mouse, by the way. You have account size for $10,000 and you want to double your account. So what do you want to do in 12 months? You want to see $20,000, right? Well, by my calculation, there's approximately 243 days a year to trade. Now, you could count this up and you may come up with slightly different, but we're going to be awfully close, okay? So for this, we're just going to use 243 days. But if somebody said, look, I only count 240, then you're just taking some more time off than I am. Nothing wrong with that. So all we have to do is take your 10,000 divided by 243, and you're going to come up with about, it's 41 and change, but we're going to round it up to $42. So just think about that. And this blows my mind every time I say this, and I've been doing this now for a few years, showing this. To double your money, all you've got to do is net, because you're going to have losses. So net $42 a day. That's it. That's incredible to me. Just think about that. It's just so powerful. Net $42 a day. Crazy. Now, if you want to look, because not every week, not every day do I make my goal. I absolutely do not. Or I might not sell something every single day. It may be green, it may be looking good. I may actually have 5, 6 goals in one trade. And we call these goals, by the way. These are goals. But at the end of the week, if you just did this a day, you may not sell it on any given day, but at the end of the week, if you took some profits off and if you sold it, all you need is $210 a week. That's it. That's all. That's crazy. That's crazy to double your money. Now, if you have a $20,000 account, just do the math differently. That's all. It's 20,000. It's still 243. Just do the math to get here, and you'll see what you have to do. So if I'm in a position, an example, I'm in a rig, RIG right now. Okay. Whoops. Rig. There we go. That's an I. There we go. I'm in rig right now. I'm currently up, what is it, to almost 11.5% now. It's a little bit down today. I'm looking for this to move up into the 20%, 30% mark. And when it does, I'm going to be in the, say, if we were using $42, then I'm going to have probably plus 8 goals, 10 goals maybe. So I will have, this number times 10 or times 8. And what I'm going to do is, as it starts to move up a little bit more than it is now, as it starts to move up, what I'm going to do is take some profits off the table, even though I see the path up here. Because the one thing we don't know as a trader, and as much as we think we do, we don't. I have no idea what this is going to do tonight. Who knows? Maybe it moves up. I take my profits, and what if the next night it just starts to tumble for whatever reason? And if it does, at least I can get out, but I've made one of my goals. And all I need to do is net that a day to double the account. So it's pretty quick, or pretty cool to do that. And then what happens here is you get your monthly goal of about $840 here to double your account. So as price moves up, we're selling into strength. We call them goals. And say on a $10,000 account, that way if you sold a stock and you made $42, that's all you made on it. Well, what you made was one goal. If you sold it and made $84, well, you would have made 2 goals, so on and so on. Anyway, kind of cool. It's a great way to think about it. And every single time I think about how much does it take to double your account, don't man, double my $10,000 account, double my $50,000 account. Yikes. That's crazy. Break it down to something bite size. There's 243 days to trade. Take a bite size. What else do we have here? So this is what it might look like. So say with MetaStock, we get into a trade based on the 3/8 trap. This might be something right here, if you bought right in here. And if your goals are reached, even though you see the profits higher, you see a path to profits higher, as it starts moving up, let's use that. If it starts moving up, you want to protect some of your goals. So sell into strength. So folks, this is what I mean by it's not always about a chart. It's not always about just give me the stock that's going to make me money. There's more to trading. And this is, I think, what a lot of people fail to understand. And these are the people that do not survive, and they badmouth trading. You know, everyone has heard that there's about 95% of all people that start trading fail. That's because all they want is a chart. Just give me the chart that's going to work. The reality is there's more to it. There's more to it. MetaStock allows you to find the chart. That is a piece of cake. That is a walk in the park. You download MetaStock, you download the hit and run candlestick profit chart patterns, it'll give them to you. But you have to know what to do with them. And it's just amazing amount of people I run across that really don't know that, okay? Here's some basic rules. Buy only in a trend. Don't try to pick bottoms. I know of very few people that actually make money picking bottoms. And the people that do try to pick bottoms and can make it work, they're the people that have major big accounts. And the reason it works for them is, you know, say you've got $1 million, all right, $1 million to trade with. You break it up into little bite-sized chunks. And if you were to buy something here and that stock, you thought that was the bottom and it pulls down more, they have the money to back it up. They have the money to say, okay, I don't care. Because they might have only bought $10,000 worth of position. They got a lot of money left over. They can afford to do that. But somebody with smaller accounts, $5,000, $10,000, $20,000, $30,000, $40,000, $50,000, the business of buying bottoms is just not good. It won't work for you. So buy only in a trend. That's one thing the 3/8 trap program does with MetaStock. It only looks for stocks that are in that trend, where the trend indicator is trending up. Buy on positive price action. All right, so here we have a chart that's moving up, right? And then the chart starts moving back, and now that's starting to come into the 3/8 trap here. So maybe it is in the 3/8 trap right now, but you're buying on a negative candle. I just don't get that. I really don't. That is picking that bottom, because that is suggesting that you know where the bottom is. And just honestly, take a look inside yourself. Take a look at your trading. If you're a trader that does this, how often does that work out for you? Yeah, some of them do, but think about the ones that don't. What if you were to simply wait for some bullish price action? Bullish price action. What if this was the bottom and it turned up here? You'd make plenty of money right here. We don't need to buy it right here to make more money. It just doesn't work out. And again, just go back and look at your trading and just take a hard look at it. That's all. Buy near a visual buy point, such as a major moving average, price action support, things like that. Make sure there's a reason. You can line up the conditions before there's a reason to pull the trigger. Make sure you have 3 or 4 conditions in there. 3/8 trap, a good trend, which that's all done for you. Now take a look at, has price pulled back to support? things like that. Or support could be, again, price action or a major moving average. Make sure you can see the path to profits. This is so important. A lot of times what I'll see is, we got resistance right here, and then we've got price looking great. It pulls back a little bit, it moves up. Now, I don't much care about resistance. Thank goodness stocks break out of resistance, or we wouldn't have a stock market. But one thing about resistance is it 99%, it will create a little bit of rest up here, and that if you're one of these traders that freaks out over a red candle or black candle, whichever you use, well, don't do it. Don't do it. Simply wait until price breaks out. And what are we going to do? We're just going to simply wait for that. Let's see. We're going to wait for that breakout and that pullback. And a lot of times that pullback will be right back in to the trap area. It might go a little higher, then back. Here we are. We'll be right back into that trap area. What was resistance is now support. One of those conditions you want when looking at a chart. Profit into strength. We just talked about that using goals. Close below a visual point. So say it breaks the T line, for instance, and closes below. I usually don't use a break unless the market is tanking. Then I'll close it, but I usually wait till the end of the day for a close. So we want to, if it does do that, don't be afraid to take the loss. A small loss, when's a $500 loss good? When you can look back and say, I should have taken the $100 loss. If it breaks below support, maybe that's a place to close it out. Don't hold on for hope. Like I said, I looked really, really hard, and MetaStock just does not have a hope indicator. Stay with a trend. Now, for me, I use for a trend, I'll use the trendicator and I'll use the T line. And as long as they're stacked up like this, it's a trend. Even this right here to me is while this is a pullback, we're still in a bullish trend because we're above that moving average, or the T line is still above the 17. The fast moving average is still above the slower moving average. And this trendicator, by the way, is just the 17 EMA. So this is all bullish. While we're having a pullback, that's a bullish pullback. But stay with that trend. So helpful. Here's a chart, 3M company. And look at this back here. Look at the places that this could have been, where you could have taken advantage of it. See how we rallied up right here and then pulled back? We consolidated. Look at those diamonds right in there. Look at that price action. That would have been a good place to buy. And you can see the swing you could have made. And I'm not saying you should have been out here. You might have stayed in it. Who knows? All we did was pull right back into the trap. For somebody that didn't buy it there, well, maybe that area right there could have been a buy area. Just you find a trending chart and you trade those little pullbacks in the trend. Now this here is below the we pulled back below the T line. For some people, you may have gotten in this area. The diamond just shows that it's a buy. Here we are in the trap. This would have been my buy signal because that's a green candle, or in this case, a white candle, I guess. I usually don't buy those. The only time I will buy a candle like this is if I'm in a position and I add to it and it pulls back, then I will. But look at all this through there. What great consolidation we had in here. What a great 3/8 trap we had here. 3/8 trap. And we got ugly. We got a bearish candlestick signal. So absolutely shouldn't be in the chart there. Down we go. Well, now we're coming back. And there's a 3/8 trap that could have got you into that swing moving up. on what is this, 3M. Less is more. So I was actually doing another little webinar before this one today, and somebody had said that they have a lot of setups and a lot of charts and a lot of things going on, and they get overwhelmed. I think that's something that a lot of new traders do. I think a lot of traders that's been doing this a long time does sometimes, and they don't realize that if they would just stop looking at so much stuff, that they would probably do better. I've traded an awful lot of things, different types of setups, and I got to tell you that 3/8 trap, it's simple, it makes sense. Focus on only one setup. Look, if it's not going to be the 3/8 trap, focus on one. Be the best at one. One trade is sufficient, or one setup is sufficient. If the market isn't giving us any good setups, you know what? Maybe that's a good time not to be in the market. Don't try to push string across the street. You're just going to get run over when you do that. All right. Take time to learn. And if you're making less than 5% monthly, take time to learn. Take some time off. Not every day is about trading. Some days is about self-education, and dive into charts. Dive into charts. Bone up on those charts. Another thing is to be accountable. This is one of the things that I learned a long time ago, is when you're accountable, you'll be a better trader. Share your account with your buddy or with whatever trading group you might be with. If you're with a trading group, share your account, share your trades. Let it be known you're buying XYZ. Let it be known that you made money on XYZ. Let it be known that you lost money on XYZ. Be accountable. At the end of every month, when your statement comes out, share with everybody. Man, I didn't do very good. I lost 5% overall last month. Or I did great. I made 32%. You know what? Share it with everybody. Be accountable. You'll be a better trader if you are. Don't hide behind the screen name, Pocahontas or Tarzan or Doji Man. Don't hide behind that. Put your name out there. Be accountable. Share what you're doing. Use a watch list. This is one of those things, and you can set this up in MetaStock. You can set it up so you have a watch list. You don't have to trade everything under the sun. Everybody's got some favorites. Put them on a watch list. Let them come into you. Let that chart come to you. And if the 3/8 trap is your setup, let those charts come to you. Don't get caught in the FOMO game. Don't get caught in you see a stock. Even today in our trading room, I saw people saying, man, that looks like a buy. I totally disagree with you. That is not a buy. Unless you declare what you're doing. For instance, come to find out the person's trading at long term. If you're trading at long term, just buy wherever you want. Who cares? You're gonna hold it for a long term. I'm just gonna say a year because I don't know what actually long term meant to them. But if you're gonna buy it long term, just buy the doggone thing. If you're buying for short term swing trading, absolutely not. Yes, that's a great chart. Let's wait for the pullback. Let it come back into our pocket. Our pocket is that 3/8 trap. Let it come in back below that 3 exponential moving average. Let it hold up above that T line there. Allow it to see some buyers, and then let's attack that. And that right there is a nice chart pattern. Don't trade junk. Oh my gosh, don't trade junk. I see a lot of new traders coming on board. They all want to go after these cheap penny stocks. Look, if somebody's a penny stock trader, more power to you. But the reality is, long term, I just don't know of too many people that make ongoing money from junk. Make sure you trade something with volume in it. Trade quality. Trade quality. Your trading will, you'll see what happens. Trade quality. And drama. Don't get sucked into drama. You know, we all like volatility to a point. Then it gets to a point where, okay, we don't like volatility because it's too much. It's more than we can handle. Don't get caught in that drama. You guys can all probably think of some stocks recently. The drama. Yes, a lot of money was made. Take GameStop, for instance. A lot of money was made in it. You know what? A lot of people lost money too. Remember that. Always have compassion. If you're making a ton of money, remember somebody lost money. And be careful not to get into drama. For day traders, you love drama. Drama is your thing, man. You love that. A swing trader, we don't want drama. We don't want that at all. What we want is we want a nice chart that moves up. It bases out kind of nice, maybe pulls back. Then what we want to see is the green start. We want it just to slowly move up. We want it to pull back. We want it to move up. We don't want drama. We don't want that. We want a nice swing. That's all we want. That's all. Oh, I've been asked about my options trading in 2018, January of 2018. True story. It's the first time I started trading options. I haven't traded since, or I haven't traded stocks since. Well, every now and then. But by doing this, I've been able to double my account, actually more than double it, and multiple times. And I owe it to this right here. But here's a couple of rules that I use. Open interest, at least 20 times what I'm trading or what I'm buying. Delta, I always look for around 70. 65 is around 70. 75 is around 70. Bid and ask, I like bid and ask less than 5%. Will I take a 9% bid and ask, 10% sometimes? But I better want that trade. I better want it for a reason. But I will do that sometimes. I'm not trying to say everybody should trade options. This certainly, this has been one of the biggest things to help me double the account. Scaling. So say you have a $10,000 account, you accomplish you've doubled it. Well, you might want to scale up. And once you've met your goals, then you can scale up. You add to your position size. Yeah, nothing else changes. The chart doesn't change. You just add to your position size. You might add to the number of positions if you can handle it. But the most important thing is to be comfortable. Be comfortable, okay? Oh, hey, I made it. So like I said, I don't have any kind of link here that's going to lead you to anything. I'm hoping Jeff has it. I hope everyone got something out of this. I appreciate everybody being here. And at some point, just stop and just ask yourself, what is your road to success? And do you have a clear path to that? Do you know what you're going to do? Or are you just waiting for a stock to fall on you? Are you still looking for the hope indicator? Have that plan, stick with it for a while. Just because somebody has, like I have the 3/8 trap package there. Just because you download the 3/8 trap package, bada boom, bada bang. It's not going to make you all kinds of wealthy tomorrow. You know, you're going to have to learn some things. You're going to have to stay with it, stick with it. Whatever you do, stick with it, practice it. Sometimes take a day off. Sometimes take a day off and have some self-education on trading. So, Jeff, that's all I have there.
All right, Rick, do you have time for just a couple questions?
I do.
Okay. Let's see. Helen wants to know if you, when you're looking at trend recognition, do you focus more on the daily chart or the weekly chart?
Always the daily chart. I have nothing against the weekly chart. I have nothing at all against that. But I trade from a daily chart, so I want to make sure that my trend is up, moving up. If you want to add, say that you want the weekly chart to be up as well, that absolutely works. There's nothing wrong with putting as many conditions in your favor as possible. Yeah. Hey, that's another thing. You know, you can change the 3/8 trap setup in MetaStock to weekly, and it works. There's 3/8 traps for weeklies. Absolutely.
Yeah, you can apply it to any time frame. You could do 5 minute.
You can do 5 minute. Yeah. You can do any time frame you want.
Raja, Mr. Dorison, he says 3/8 is my hope indicator. Adam wants to know. Yeah, right. Adam wants to know how many stocks can we trade or have at one time.
Well, you can have as many as you want, but you have to be able to be comfortable. Look, here's something I see happen often. All right. First of all, you're doing well. You're making money. Everything's great. All traders, I don't care how good you are, you're going to have bad days. All right. It's just a fact. Well, what'll happen sometimes is you have another bad day or another bad day. And then what some traders do is they keep piling on the trades. You keep adding, I want another, buy more of this or add a completely another position. And yet you're still going down. Stop. Whatever you're doing right now is wrong. So the answer is not to get more into the water. The answer is to back out of the water and take a look at everything. What is it that's going wrong? And sometimes it's because we have too many trades on. Main thing is be comfortable. This is so important. I've got 34 years of trading. I've doubled my account. I've doubled an account. I've doubled an account. I've doubled an account. I've doubled the same account over and over and over and over and over. And I trade a max of 10 to 12 positions, a max. Currently, I have 1, 2, 3, 4, 5 positions on. That's it. You don't have to have a lot of positions. You really don't.
Let's see, one more question. What stop loss do you recommend to use in options?
Well, okay, good question there. First of all, let me explain. My option trading, everything I do comes from the chart. Everything I do comes from the chart. So let's say I was to buy this right in here. My stop is going to be more than likely, if I bought that right here, my stop would be about right there. Because I'm going to use this price action. We would be below the T line, so that would be my stop. It has nothing to do with options, nothing. So I use the chart for everything. I use options to leverage my money. Okay, I hope that helped. Okay, so take options out of the picture when it comes to your stop. Trade the chart. Sometimes you can be down a lot, but if we concentrate in just this area, it keeps that option loss relatively small. So it's all about the chart. I hope I explained that. And we have that trial. I can definitely explain that more.
Okay. Let's see. Long says your great presentation is appreciated. Helen says thank you. And Nylish says, excellent presentation. And he added 2 explanation points after that.
Thank you so much, everybody. I absolutely appreciate it. And, again, take in what everybody's sharing here today, because it's all good stuff. So anyway, thanks, Jeff, for having me. I appreciate it.
Absolutely. It's good to have you. I'm going to talk a little bit about the 3x8 strap. Great job today, as usual, Rick. Thanks for coming.
Thank you. Okay, bye.
All right. Very good. And we're just going to kind of go ahead and get resituated over here again. I'm going to go ahead and make me the presenter. I'm going to show my window. And I'm going to do this as well. Just takes me a second to kind of get everything switched over. Hope you guys are enjoying the presentations today. I think they're going great. If you agree, let me know. I do want to kind of talk a little bit about the hit and run Rick Sadler package. And I think what I'll do is I'll actually start with a picture right here of the package. We've done kind of a couple of different versions of this. So for several years, we've had like the rounded bottom breakout, the T-line squeeze, the T-line bounce, the pinball setup. And then we just recently, within the last year or so, added the 3x8 trap. And the reason we added that was Rick was calling me up. He's like, this is so good. This is what I trade. This is what I want people to have. This is what I want to make available in the package. And so, we've got all of the other methodologies, but the one that he really likes to highlight and the one that he really uses and the one that he really likes to talk about is the 3x8 trap. And so I'm going to kind of show a little bit about how that works. Of course, it's, going to include the ability to scan for opportunities. It's going to have commentary that's kind of built into the system and all of that kind of stuff as well. And I really like the way this is integrated. I love with MetaStock the ability to run scans and explorations and that kind of stuff. But with this particular 3x8 system, you're going to have what Rick calls the trendicator. That's just going to kind of tell you whether you're in a bullish or a bearish trend right here. So very, very simple. You'll see right here, if I look at the commentary, and I'm just going to make this bigger for those of you that are in YouTube, it says bullish right here. So it's going to just refer down to this line right here. Right here, we don't have a blue highlighted bars, but these blue highlighted bars that have the little dots or the diamonds underneath them are entry areas. Those are areas where you could buy and have a positive 3x8 trap setup. So I'm going to move this commentary over to underneath one of those, or to one of the first, let's say, 3x8 setup that happened right here. And when that happens, I'll go ahead and make this a little bit bigger too. It's going to give you very specific language in terms of how you should look to take advantage of that. So in this particular case, it's going to say the 3x8 combined with the trendicator is detected on Tractor Supply right now. You should look to buy TSCO, while more aggressive traders should look to buy a bullish option strategies. The 3x8 trap is Rick's primary setup for trading. This is Rick's favorite trade setup, and it's very important that you follow your trading plan, and that should include a minimum, a stop, a buy box, and a swing target areas. It keeps going, kind of gives you more advice in terms of what you should be doing with this, and it even gives you access to a 30-day access to his chat room right here in the commentary as well. Of course, you're going to have that commentary. You're going to be able to run the explorations. It is a fully integrated part of MetaStock, and as part of our offer that we're doing today, that includes the the Trader's Action Pack. So you do have the other systems that he used, is the rounded bottom breakout, the T-line bounce, the pinball setup, and of course the new 3x8 trap system. It's going to include explorations, the expert advisors, the layouts, and identify all 5 of those patterns for you. Here, it's normally a one-time cost, like most of the add-ons that we've been talking about. You don't have to pay for them over and over again every month. It's $7.99. Here at the Summit today, you're going to be able to get it at a discount, of course, $6.99. Of course, we're going to back it with our 30-day money-back guarantee, so you can try it. You can have a low risk-reward ratio. As a trader, we know you love that. I love it too. But I want you to be able to evaluate these. I want you to be able to try them. If they're helpful for you, I know you're willing to buy them. If they help you make money, they're worth it. And so we do back up the products that we sell with a money back guarantee. This is a one-time cost of $6.99. 1-800-882-3040 or metastock.com/salespchat. So there you go. Diane says, thank you, Rick. Let's see, excellent presentation. And then just a couple of the links that we're talking about. This is part of our Summit Traders Action Package today. You can get Steve Bigelow's Candle Profit System, the Victory System, Patterns for Profits. We have one more add-on that is coming in a little bit later. Barry Burns, he's going to talk about his Top Dog Toolkit. All of those add-ons so that we've pretty much talked about today. A 3-month subscription to Kevin Nelson's Learn MetaStock. Unleash the Power of MetaStock, our training video on how to use MetaStock. 2 years of stocks and commodities. If you're a MetaStock customer already, you could go buy all that stuff on our website. You'd pay $5,000 for it, and I would appreciate that. But since you came today, we're going to actually give you a huge discount. You can get $1,895. Again, most of this, with the exception of the 3-month subscription to Learn MetaStock, is a money-back guarantee, so you do get a full chance to evaluate it. Just the Victory add-on by itself is $2,000, so you're getting everything at a pretty dramatic discount. If you haven't gotten MetaStock yet, well, I'd encourage you to do that as well. You absolutely need to do it to run these add-ons and these great products. I'm going to talk a little bit about MetaStock since it's my turn to talk, but you could also, as part of this, do a 3-month for the price of one subscription to MetaStock. So that'll allow you to try our award-winning software that's been rated #1 in stocks and commodities for so many years. Again, it's $1,895 for this entire package that you see on the screen. All of that except for $99 is on a 30-day money-back guarantee. Metastock.com/summit deal, 800-882-3040, or metastock.com/salespchat. So in any case, there you go. Oh, and there's me. I thought I had a stocks and commodities like logo right there, but I don't. This is, I think, a fairly old picture of me.
Jeff.
Hey.
So, are you ready for a few dad jokes?
Sure. Let's go.
Okay, what does a house wear?
I don't know.
A dress. An address.
A dress.
A dress.
Not
ADDRE.
not-
It's a dad joke.
Oh, I got it. Okay.
Your kids
I'd
would get
understand
it
better.
if you had only told the girls. Okay, what is the most condescending of the bears?
I don't know.
A panda.
Actually, good job.
While I've got your attention, I'm going to go ahead and introduce you, okay?
Okay, go for it.
Okay, this is...
I'm gonna get off this
if
picture.
you've been watching this at all, you've already probably got a decent idea of who Jeff Gibby is. He's been with our company forever. He's one of our primary presenters, and he's an exceptionally knowledgeable trader as well as presenter, as well as especially knowledgeable about MetaStock. He's currently the director of our sales as well as our business development, and you look really good in that light, Jeff. It's a lot of handsome right there. Really, it's kind of dramatic. Make sure you give your presentation a little extra punch today, because that's the way you look like you're just ready for some drama. Anyway,
I'll do my best.
Jeff is a great human being. I happen to have known him for about 16 years now. A great family man, and I know you're going to enjoy his presentation. And please don't hesitate to ask as many questions as you'd like, and also make sure to like and share our YouTube channel. Jeff, have I missed anything important?
No, unless you want to read the legal disclaimer, or should I recite it by heart?
I'll do that.
Okay. Okay, go for it.
This demonstration is designed to instruct you on using MetaStock and accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Jeff will surely be showing, as a way of example, the different charts and securities today. That is no way an indication that you should buy or sell those things. Okay, Jeff?
Good job.
Hey,
Thank
Jeff,
you, Greg.
does trade have risk?
Yes.
Okay. Okay, with that, I'll let you go.
All right. One other thing, I'm going to take off the headphones just because it makes me a little bit more comfortable. If you do have comments as we go, make sure I'll try and keep an eye on them, and I'd be happy to kind of look at those. If there's specific securities that you want to look at, now's a great time to type them in. I hope you've been enjoying the summit today. We do have a great roster of speakers, and I really do appreciate like everybody that comes in, the coaches, Steve, Vince, Kevin, Rick Sadler, all of these guys do such a good job. I don't want to miss anybody in particular, but everybody does such a great job. And I really do appreciate it. I appreciate you for coming as well. You know, we started these things about 8 years ago, and it's been incredibly successful. It's been a great way to kind of, I think it's gone really, really well. So just to kind of give you a little bit of an introduction to me, my name is Jeff Gibby. I started working at MetaStock only like 24 years ago. So it's been a pretty good haul with MetaStock. I started in inside sales. I'll say a few things about MetaStock. It's a really good place to work. Generally, our employees here are here for decades. I just absolutely love it here. Everybody works hard, but we all pretty much get along, and it's a fairly drama-free way to live. One of the things I'm very proud of is like all of our support and our support team very, very regularly gets 100% when on their support surveys in terms of kind of we send out a survey to everybody that goes into our support system, and there's not many. It's not uncommon to have a week go by where we actually get top marks from everybody that fills out that survey. So the other thing that I'm fairly proud of is, well, our people in general. They do a good job. Our sales team does a really, really good job, and that's where I started. So about 24 years ago, I started in inside sales. I basically did that for about a decade. It's a great place to work. After that, I started to work in the industry where I met all these people with like Steve Bigalow and the people that we've invited here today. And I've learned a lot about trading. It's been really, really good for me, both on a personal trading level and then on a professional trading level. So it's great. I enjoy the software. The one thing that I'll say that I'm very, very proud of is the fact that it's been rated so highly for so long. We're going to talk a bit about MetaStock today. We're going to go through some of the power tools. We're not going to go through every aspect of the MetaStock program. It's too big. And that's one of the things I think is a benefit of MetaStock. You know, when Kevin was in there, he was showing you how to kind of devise your own scans and design your scans. But as a whole, the MetaStock program is not something that you're going to outgrow. It's something that's going to continue to grow with you as you get to be a better trader. So with that being said, today what I wanted to do is kind of talk a little bit about system testing and how system testing works and all of that kind of stuff. So there you go. Let's go ahead and let's go ahead and kind of talk a little bit about what I'm going to talk about today. Carla says, can you put a link for more information about the offer in chat? That's a really good idea, Carla. Let's go ahead and do that real quick. /sales chat. There you go. Thank you, Carla. I appreciate your interest in that. And there it is. If you're not familiar with this guy, his name is Richard Dennis. If you're not familiar with that name, he is the original turtle trader. In the way the story kind of works with this is in the late 70s, he was a very, very famous futures trader. And he actually had a gentleman, a friend, and I believe it was Bill Eckhart and Richard Dennis. Richard Dennis had a belief that you could bring somebody in off the street, you could teach them how to trade, and that they could trade just as good as Richard Dennis was trading. And Bill Eckhart actually disagreed with that. So they had basically Bill Eckhart, he believed that trading was something that you had to learn, or that you had to have the right psychological makeup for, and the right genetics and the right risk tolerances. And it wasn't something that you could necessarily be taught or trained to do. It was something that you kind of had to have the right intellect for. And so what they had was a basis for probably one of the most famous trading experiments in history. They actually ended up pulling together quite a few traders. They advertised traders to come trade their money. Yeah, they did it in like a few different newspapers. Investors Business Daily, I think, was one of them. I think Barron's was another one. And they basically brought in a group of traders. They trained them over the course of a couple of weeks on how to trade. They told exactly when to trade based on their turtle trading methodology. And it was an experiment that wasn't successful because it was insanely successful. Over the course of the next year and the years that followed, they posted very big gains. And I usually have the numbers. They're kind of slipping my mind right now, and I don't really want to say the numbers. But if you go to Investopedia, but Wikipedia, and just look up Richard Dennis, there's a very good story about this. But the bottom line was Richard Dennis was correct. They could take in a group of traders off of the street and train them on the rules and have a very successful trading group. In fact, this is one of the quotes that he gave afterwards. He said, I always say you could publish rules in a newspaper and nobody would follow them. The key to trading is consistency and discipline. Today, I'm going to talk a lot about trading rules and how to kind of evaluate trading rules and that kind of stuff. But I want you to realize also that discipline is key to trading successfully. We're going to look at trading systems that work very, very well. We're going to be able to look at how often they trade. We're going to be able to look at their drawdowns and that kind of stuff. But the key to trading, I believe, is having a good rule set that works, but also discipline to be able to follow the methodologies and the trading plan that you've got. So let's see. Okay. Kevin wants to know who the speaker is. The next speaker is Oscar Carboni, and he does a great job. So that's who's going to follow me if that's your question. I am the current speaker. So in any case. All right. But if anybody wants to guess the name of this person, you can. This is the inventor of the MACD, the MACD. This gentleman's name is Gerald Appel. Okay. And what I want to do in terms of like, if I wanted to kind of just give you an idea of where we're going in today's class, I'm going to talk a little bit about what trading methodologies are. And I think in terms of the best way to talk about what trading methodologies are is to show you one. And so I'm going to show you exactly how the MACD is calculated. We're going to show you how it's interpreted, and then we're going to show you how to test it and see how well it works. So we're going to go ahead and start with that. Why the MACD, you might ask? That's a really good question. The reason I actually did the MACD first, there's a couple of reasons. One, I never understood really the way the MACD worked. Two, it was very, very popular with our database. It was our most popular video on YouTube at the time that I kind of put together this lesson plan. And that's why I like to kind of talk about it is I find a lot of people use MACD, but they don't really know what's kind of going on under the hood. So we're going to go ahead and look at that on a chart today. What I will say about the MACD is an indicator that's used to measure trend and momentum. Okay, so we'll talk a little bit about how that works, but generally what we're looking at with the MACD is we're looking to determine whether the MACD is bullish or bearish, okay, and we're also looking to see if it's maybe overbought or overextended in any direction. And those are kind of the first two things that we're going to talk about in terms of ways that you can look at the MACD. Okay, I'm sure you've heard a lot of it before, like the trend is your friend, or befriend the trend, or a rising tide lifts all boats. It's a little bit of a cliche, but this is a trend following system. So we're not probably going to be getting in at the very bottom of a chart or at the very top of the chart. What we're going to be looking at with any trend system is we're going to be waiting for the trend to get established, and we're going to be looking to take major pieces of that trend out. Okay. So, and as always, if you have questions, go ahead and place them in the chat. You'll see I keep looking over here. This is where my chats come in, and we'll go ahead and take a look at that. I don't generally like to be in PowerPoint too much. In fact, we're going to get out of it now, and we're going to go ahead and look at this chart we've been looking at all day, I guess. Or give me a stock and we'll look at your stock as well. We've been kind of looking at Tractor Supply, and it's been a really good trade of mine. But do you guys have a stock that you want to look at? I'm going to take the first one, and we'll go with that. While you're getting one typed in, I'll go ahead and remove this from the chart. And Con, thank you for that. You're the very first one. It's going to be ABBV. Okay, so let me go ahead and pull that up. I'm not actually sure what that is, but we'll find out in just a second. Okay. ABBV? Okay, let's go. Let's see if we can find that in a little bit of a different way. So in MetaStock right here, we're in the Power Console. I just opened it up so I could look for this symbol that Con set up. I'm going to do a search for that symbol, and we're just going to look for ABBV. Okay, ABVORD. There it is. .K just means it trades on the New York Stock Exchange. I'm going to go ahead and open it up that way. And while that data is loading, it's going to go ahead and load up as a chart this way. Just to kind of keep things a little quicker, I'm going to close up some of the charts I've been looking at today. So we just have ABV open. For the rest of you that are still typing in symbols, that's great. We're going to test a couple of different ones against MACD in just a minute. Okay. Now, what I'm going to do here is just kind of, we went ahead and we opened up the chart for ABV. And what I'm going to do is we're going to basically throw a couple indicators on here. There are a couple things that I want to point out. Right now we're looking at a bar chart. We've got volume on there. And one of the things that I would say about MetaStock, one of the kind of the design things that we've tried to do is keep things very easy to use in MetaStock. So one of the things that Steve was saying from the very, very early days of MetaStock is what I want to be able to do is I want to make sure that when people are using MetaStock, that they're not trying to remember how to do something. I want to keep things very, very easy. And so we've tried to design things in such a way that they are very easy to use. For example, if I want to change anything that exists on the chart, I can just double click on it or I can right click on it. And so, for example, right here, we're looking at a bar chart. If I double click on the bar chart here, this properties dialog is going to pop up, and then I can go and I could look at candlesticks instead, or I could look at candle volume instead, or I could look at line, point and figure, Renko, Kagi, three-line break, any of the styles that are in there. Let's go ahead and do candlesticks. I'm going to go ahead and leave it just black. And I'm going to go ahead and just make it thicker because I know thicker lines generally appear better on YouTube. So we'll go ahead and click on apply. And now we've got a candlestick chart. I'm going to zoom in just a little bit by clicking this little plus button here. I do want to see my volume in blue or black instead of blue. And so what I'm going to do is I'm going to double click on that. Remember, double click if you want to change something. We'll change this over to black. I'll go ahead and click on OK. All right. Now I'm going to add some indicators. So since we're talking about MACD, what I would like to do is add MACD to a chart. And so what I'm going to do here is this is our indicator quick list. And you'll notice I've got MACD and I've got moving average right at the top of this chart because we were talking about MACD just last week. Underneath these recently used indicators, there's a couple hundred other indicators. So if you're interested in just about anything, you can come down here and you can find it on the list and you can apply it to your chart. Okay. What I'd like about kind of some of the changes we've made most recently, this is one of them, the most recently used indicator. So if I have indicators I'm using frequently, they're going to show up on this list and they're going to show up at the very top of the list. Okay, we're going to go ahead and start with MACD. So I'm going to drag this out. I'm going to go ahead and drop it on the chart. Where I drop this is where it's going to go. So if I dropped it right here, it's going to display right over price. I could drop it at the very bottom of this chart. It would show up down here at the bottom. I could drop it over volume if I wanted to. I'm going to have it show up in its own window at the top. So I'm just going to drop it at the top. Again, it's easy to use. Okay, so there we go. We've got the MACD properties. I'm going to go ahead and click on OK. And I just realized that I wanted to kind of make it a little bit thicker so you could see it. So again, I'm going to double click on it. I'm going to just change the weight of this so that it's just a bit fatter. I'm going to make it blue because I prefer blue as opposed to red. Okay. And then what I'm going to do is I'm just going to thicken up what we call the signal line, and then we'll talk about what these lines are. Now, one of the things I want to kind of talk a little bit about MetaStock is there are several hundred indicators in here. And one of the things that's very helpful is if you have questions about indicators, particularly, and how they're calculated and that kind of stuff, we actually have a help system that is more than 800 pages long. When we used to print it out, we'd have this big printed manual that came with MetaStock, and it would talk about like just about anything in the software, including all the indicators that are in there. So for example, if I wanted to come in here and if I just right click on this MACD, I could go down to properties, but I'm going to go to help instead. It's going to give us an overview here. It's going to give us an interpretation. It's going to give us parameters. It's going to give us tips. It's going to give us instructions on plotting indicators. And I can kind of drill into this. I could actually read how MACD is calculated. It's actually a 26-period exponential moving average from a 12-period exponential moving average with a 9-period dotted exponential moving average. I could go in and I could look at some of the interpretation ways that people use it. I could look at any tips that they have for using it. There's all kinds of information that's built into any of these indicators that are in MetaStock. Now I'm going to do this real quick. Again, it's not coronavirus. I'm just allergic to everything from just allergic. So let's go ahead and click on close right here. And what I'm going to do is I'm going to just add a couple of moving averages to this. So I'm going to add those two exponential moving averages that were talked about. They were the 12-period exponential and the 26-period exponential. So we've got the 12 exponential based on the close. Okay. I'm going to not forget to make it a little bit thicker so you can see it. Okay. And then I'm going to do the exact same thing with the 26. So go ahead and add the 26-period exponential. Going to add that as a blue, good high contrast color that you can see. Go ahead and click on OK. Okay. Actually, I'm going to thicken it up just a little bit more. We'll go ahead and make this a little bit thicker here. Okay. And now what I want to do is kind of talk about how the lines are calculated. Imran says, let's go ahead and see. Hopefully this doesn't take us too far off. How do you combine two or more experts at the same time? So I want to MACD buy and only bullish engulfing bar. So you can, the question that Imran was is, how can I combine, let's say, two expert signals? And you can do that, but you actually have to go in and combine them. So if you wanted to add the MACD buy signal, but you wanted to add an engulfing bar to that, it's actually not that hard. And Imran, what I might have you do is just email me, because it does require that you go into the formula language, which takes us a little further into MetaStock than I think I have time to go today. So you can email me at jeffrey.gibby@metastock.com, and I'll show you the formula for that. It's not hard. Okay. All right. Back to where thank you for the question too. All right. So back to kind of what we were talking about. If I was to take this 12-period exponential moving average and subtract it from this 26-period exponential moving average, the value that I would get approximately would be the value of this blue line here on the chart. Okay. That's all you're looking at. Okay. The MACD line, this blue line that I've put on the chart, is just looking at the difference between this red moving average 12-period exponential and this blue 26-period exponential moving average, and that's it. Okay, so if we're in AbbVie and we're looking at AbbVie and AbbVie is going up, let's say hypothetically, the distance between my short-term moving average and my long-term moving average is going to get bigger. As you can see, it's very visually getting bigger on the chart here, which means that your MACD value is going to get bigger up here on the top of the chart for you. Okay. Likewise, if we're in a big sideways trend and the AbbVie isn't deciding on whether it wants to go up or down like it is right here for the good portion of this year, what you're going to have is a much shallower MACD than when it breaks into that trend. Okay. If you're in a downtrend, okay, see if we can go back just a little bit to where the price is falling. If you're in a downtrend like you are right here, the MACD value is going to be fairly steep. It's going to be negative because your shorter term moving average is going down below your longer term moving average. Okay. If it's a dramatic, like everything kind of went dramatically down for some reason back in February, March of last year, if it's a dramatic fall down in trend, it's going to be very dramatic in terms of how fast this MACD goes down. Okay. That's it. That's all you're looking at. So you can kind of see already how this is measuring trend. If your MACD value is below this 0 line, you're going to be kind of in a negative trend. You can also measure momentum by how big your peaks and valleys are. Okay, it's fairly simple that way. Okay, this 9-period exponential moving average, this red line is just a 9-period exponential moving average of the difference. So if I was to, that's all it is. Okay, Gerald called it the signal line. Okay, and the reason that it's called the signal line is if you wanted to use the MACD as a signal to get in or out of a chart, when it crosses down below its signal line like it did right here, you could use that as an opportunity to go short on the stock. Or when it crosses back up above its signal line like it does right here, okay, you could use that as a symbol to go long or as a, so I think you get the idea. Now with MetaStock, we've been talking a lot about the expert advisor, and there are a lot of experts that are built in, but I'm going to attach the one that's called the MACD expert advisor. And that'll just help me kind of explain the rules in terms of the other things that we're looking at or looking for. So if I come in here, this guy on the top hat is called our expert advisor. And actually it's more of a bolo hat. We changed it from a top hat. But if I come down here to MACD by MetaStock, and there are tons of these. There are candlestick ones. There's one on momentum indicators. There's actually a turtle trader system that you can use. There's a bunch of fractal systems that are built into the program. And so all of these are built around different indicators. But I'm going to attach the one that's called MACD by MetaStock. We'll go ahead and attach it right now, and I'll close it to the chart. And you'll notice that when I do that, those buy and sell points that happen when the crosses happen actually show up on the chart. Okay, and you can see right here we had a cross up above the signal line right there. We had a cross down below. We had a cross up above, and so you can very visually see where the signal line is telling us to go long or short, and we can kind of get an idea of how well this works. And if I was just to look at like this last signal on MACD, it's worked really, really well. But just based on looking at the stock, it's been kind of sideways for a very, very long time. You have a lot of chop that comes in off of this MACD, and you can see that very visually on the chart as well. This signal would have made money. This one, probably not. This one, probably not. This one, probably not. This one, but this last one was pretty good. So visually, we can kind of get an idea of how well that's working for us. You'll also be able to see whether you're in a bullish zone or a bearish zone based on MACD. Right now, since about right here, April 9th, it's been bullish. Okay, and then it was kind of oscillating back and forth. We can go back in time and see kind of how things looked on this in the past. Okay. So the first way that we look at MACD is how does MACD look in comparison to its signal line? And right here, it went up above its signal line, and that's the first way we can measure it. The second one, remember I said it was a trend and a momentum indicator. So the way that we can kind of look at momentum is in terms of like an overbought or an oversold reading. So if I'm coming back here, in the chart, you'll notice right here, MACD kind of gets really, really, really aggressive right here. And you'll notice right here, we start to paint the bars red. Okay. And what I want to do is I'm going to open up our expert commentary. We've talked about the commentary quite a bit today, but we're going to go back and I'm going to highlight one of these red bars just to show you kind of like what it's looking at. So if we're looking at this particular bar, we've been in this bullish buy signal from MACD for 17 periods. I'm just going to make this a little bit bigger. I like you to be able to read along with me. You'll know it's time to turn the page. Just kidding. 17 periods ago, we went from bearish to bullish. Okay. Since that, the MACD has crossed above its moving average. The price has actually gone up 18% and has ranged from a high of 104.82 to a low of 86. Okay. Right now, the MACD is in an overbought range. So this red on the chart, it means that the MACD is currently in an overbought range. However, prices may continue to move higher for some time. Wait for prices to move lower before considering any short positions. Okay, so the second way that we can use MACD, the second way Gerald Appel taught to look at MACD was to look for overbought and oversold conditions on MACD. Okay, and the third way to look at MACD, and this is one of the ways that Dr. Alexander Elders calls the most powerful signal in all of technical analysis, is what he calls a MACD divergence. Okay, with a MACD divergence, typically what we would look for is we would look at MACD histogram. And I'm going to add a different indicator on the chart for this just to show this. When you see three indicators, when you see this, I like to actually look at divergence between MACD and MACD histogram. So there is an indicator in here called MACD histogram. You can go ahead and plot this on the chart, let you look at it. Okay, I'm going to merge it with this scale here. Okay, I'm actually going to make it a histogram because it's supposed to be a histogram. So if you see the three line styles of MACD, this is just a MACD histogram. To get this line, you just subtract this line from this line. So you just subtract, it's just a distance between the MACD and its signal line, and that's all. Okay, so you notice right here, right here, we have a trough in MACD and we have a trough in MACD. Okay, and what I'm going to do is just to kind of illustrate the concept of what we might be looking for with a histogram, I'm going to grab my trend line tool in MetaStock, and what I'm going to do is I'm going to draw just from this peak, or I'm sorry, this trough to this trough. Okay, what I want between these two troughs is I want to break above zero. Okay, I'm going to take this the horizontal, or I'm sorry, the trend line tool again. And what I'm going to do is I'm going to draw from that trough to that trough. Okay, and you can do peak to peak as well. Okay, but right here we've got this trough to this trough. If we were to compare these kind of trend lines that we drew on the chart, you're going to notice that both of them kind of point down. Okay, they don't diverge. Okay, if we're going to look at a different point, maybe we were looking from this point. Give me the trend line tool. Give it to me. Okay, and I can just drag and drop on this, but you had to be able to drag and drop. Right here, you see a lower trough followed by a cross above zero and a higher trough. Right? If we were to look at the price points there, well, I would actually say that they're still not too big of a divergence. These are pointing in the same way. But when those break, when you get a divergence between those two signals, that's what Alexander Elder, a person I really respect in the market and bring into the MetaStock classroom quite a bit, he calls that that divergence the most powerful signal in all of technical analysis. So that's what you're looking for, is that divergence there. Okay, I'll go ahead and point this out. Go ahead and delete this. And then we'll kind of, I'll look for questions real quick, and then I'll kind of get on to a different point. Imran says, MACD by MetaStock is really quite good. I'm glad you like it, Imran. Imran, yeah, it's going to email me. Yeah, it's easy. I just don't want to kind of get into the code, but it's very, very easy. You add and bowling, golfing, I think. But in any case, just email me. I'll send it over to you. All right. So now, just a couple of things that I want to kind of point out about this, the chart in general. I think we could spot out here a couple of trades that worked really well on ABBVI. Very easily, this trade worked out really well. Okay, this one not too well. This one okay. A bunch of sideways trades followed by a really good trade. Okay, and we can easily see that because we're looking at a method that's objective, right? In other words, I'm not looking at something that's subjective. I don't know anything about AbbVie. I don't know what they do. I could probably look it up real quick, but I'm not trying to make assessments based on kind of like any new products that they have, what they might be doing in the marketplace, and anything like that. I'm making an objective decision based on what trend and momentum looks like. The other thing I like about this is it's fairly simple to read. If I did a decent job of explaining to you MACD, you understand where the lines are coming from, how we can use it to kind of look at different signals. And since it's totally objective, we can also see how well it worked, right? I can see if it works on AbbVie, and I can see how well it works on different stocks. I can also compare it to other technical methods that might exist out there. You'll notice that I'd never at one point said, vaccine rates for this particular, the vaccinations of the US population have reached 30%, and that means we're going to enter a bull market, because that's an objective viewpoint, right? At no point have I said that, okay, well, stimulus number 3 passed, so that means the market's going to go up, right? Question mark. Stimulus number 2 passed. Stimulus number 1 passed. It's not something that we're looking at. We're looking at something that's objective. How many times have you been looking at a stock and earnings came in way above what was expected, and yet the stock dropped? Not really a great way to necessarily trade objectively, is it, right? If you're not really that concerned about coronavirus, look at the housing crisis. We're not looking at economic stimulus packages, all of those type of things, the change of presidencies. We're not looking at that. What we're looking to identify is where we at in a trend on this, and how well does that work? Are we overbought? Are we bullish? Are we bearish? And we're making decisions that can be easily modified. Okay. One of the questions I would get a lot of times from people that were new to MetaStock, particularly when I was new in MetaStock, is when I was new at MetaStock, I would talk to people about what they were trading, kind of like what they wanted to improve. And it's really easy, because MetaStock is a tool that's been created for so long, to kind of bury people in information. Hey, there's 8 charting styles. There's 40 different systems. There's 200 different indicators. And a lot of people, the question is like, well, how do I understand where to get started? Right? On MACD, I could just make an initial assessment that I don't really even like MACD on AbbVie. I don't think it's going to test that well. But I've spent 40 minutes talking to you about AbbVie and MACD. How do I know if MACD is the best to trade for this stock, or what might be the best methodologies without learning 200 different indicators, right? That's kind of the whole point. How do we, and I don't say that system testing, which is where we're going, is a way to kind of bypass your learning about, because I think you should understand the indicators that you're trading with, but I think it's a good shortcut, especially if you're new to the market, to say, hey, do I even care about what MACD is doing based on the stocks that I'm trading? What's the most effective way to trade? And so what I'm going to do is I'm going to open up our MetaStock Power Console, and we're going to go ahead and skip Quote Center. We've talked a lot about scanning today, but the tool that we're really going to spend a whole 10 minutes on now, because I've just looked at the time and I need to move a little bit quicker, is our system tester. And with our system tester, how do we kind of identify what is the best stock or the best methodology, the best indicators to use for AbbVie? Or is AbbVie a good stock? What other stocks might we consider, et cetera, et cetera, et cetera. One of the things I love about our system tester is the ability to take as many trading ideas as you want and test them against as many ideas as you want. So I just went ahead and selected about 27 systems that are basically our performance systems for MetaStock. And what I need to do is actually kind of select a few more of these. There's about 40 or so systems that are built into MetaStock. And what I'm doing is just selecting the ones that I know that are included as part of the program that also don't do optimization. And if you're familiar with like what optimization is, it's the ability to test a whole bunch of different indicator values at the same time. You can do that with MetaStock. There are arguments to say that you can over optimize stuff, but the reason I'm not going to particularly do any optimized systems is they take a little bit longer to test. So I basically just want to kind of keep things nice and concise. I'm going to pick some classic systems that are available as part of MetaStock, and we're going to go ahead and test AbbVie, which was, let's see, what was it, ABBV.K. And there was a couple other symbols that were thrown in there. FCX was one. We'll go ahead and do TSLA, do Apple, and Tractor Supply, because we were looking at that earlier too. And what we're going to do right now is we're going to go ahead and go back. We're going to go back about a year in time. I'm going to go back 250 records. Okay, that's a daily basis. So there's about 220 or 230 days. That'll be about a year that we're going to test. Every time we're going to get a trade, we're going to take it, whether it's a long trade or a short trade. And what I'm going to do here is we're going to take whatever systems that I just selected here and test them against AbbVie, FCX, Tesla, Apple, and Tractor Supply Company. Okay, to kind of give you an idea of some of the options that you can set for this. And I am going to go a little bit quicker now. We can come in here. I'm going to set the initial equity. We're going to test a trading account of about $10,000. Okay, I'm going to trade based on a percent of that available equity. I'm going to test trading 50% of that. So I can do number of units, transaction cost, percent of available equity. Those are the options. You go ahead and click on OK. I'm going to go ahead and start this thing just because we need to get to some results. While it's running, it's going to run about 225 tests over that year. I do love our system tester and the fact that it allows me to take as many trading ideas as I want and test them against as many stocks as I want. So in this particular case, for the purpose of this demo, I tested like 5 stocks or so against 20 or something systems. You can take those 20 something systems or all of the systems and test them against every optionable stock that exists in their market, or every stock in the US, or every stock in India, or every stock that's optionable. Whatever you want to do, you can do with MetaStock. And we did test about a year, but because we get our data from Refinitiv, I was looking to see if I had water. I don't. Getting a little dry, but that's okay. We're going to power through. Because we get our data from Refinitiv, if I wanted to go back to like 1980, I could test data all the way back to 1980 if I wanted. So let's go ahead and I'm going to sort this. Obviously, if it's a positive test, we're going to have basically a positive green value. Is Greg going to grab me water? All right. Sure, you can grab me water. Is that your water bottle? That's my water bottle. It's so hard to find good help. No, I'm just kidding. Thank you, Greg. Thank you, sir. All right, I'm going to go ahead and sort this based on profitability. Green means they were profitable over the last year. Red means that they weren't profitable over the last year. That will really help. My allergies have been absolutely nuts since about Thursday. You can probably hear it in my voice. I'm going to go ahead and kind of break this out. Okay, or make it a little bit fuller screen. Right here, what we've got is we've got basically average net profit. So there was 5 stocks in our basket. If we would have traded all 5 of those stocks against the PS Fractal Trading System number 2, we'd have had about a 53% gain over the last year. Okay, our second best performing system was the Fractal Trading System number 1. It had a 42% gain. Dude, you're awesome. Thank you. Then we have the Fractal Trading System, Pattern Trading System number 1. It was 41%. And at this point, when I usually talk about this, I talk about this in terms of finding the right methodology for you. And what I mean by that is like we can look at kind of what the risk reward ratios look like. For me, like if I'm looking to trade, I tell my boss I work very hard. And I do put in, it seems like a lot of hours for MetaStock. But in addition to that, I go home and, we're raising kids and, reading Harry Potter and, that's kind of stuff that's just involved and you have to do it because you don't get second chances when it comes to that, right? But for me, like if I'm looking at this and if I'm looking at an average number of trades as 5, in an average year, that's going to be like a trade every 2 or 3 months, right? Which is great. Okay, especially since it's the most profitable system. If I was looking at Pattern Trading System number 2, it'd be 34, and I could kind of say, well, okay, that's 2 or 3 trades a month, and I'd be working harder for less money in this particular example. But it is a little bit about finding kind of a good fit for you. Okay, if I wanted to look a little bit closer into this, I click on View. Okay, and then out of the stocks that we're looking at, I can kind of look at, and Tesla was our best performer on this Fractals trading system. Over the last year, it would have netted us about 117%, 5 trades, 4 winners, 1 loser. Okay, Freeport McMoran, 101%, 5 trades, 4 and 1 in terms of a profit loss. Obviously, Tesla was the best one, and it had a really good average profit versus average loss. For every dollar you lost, you gained about $16.48. Now, don't want you to be intimidated because I'm going to be moving a little bit quicker. Let's go ahead and click on View here. You do get a full report. I can click on Help right here. It's going to list all of these different metrics, but we did, we can see how we did over the last year, 117%. We do have a profit versus a loss index was 98.48, a risk reward index of 100%, which it goes from both of these numbers go from plus 100 to minus 100. We can see what our drawdowns look like. Our one losing trade lost $180. Our average winning trade was about 60. No, I'm sorry. Our average winning trade was about 3,000. So we get a good idea of like what our average losses look like versus our average wins. Again, 4 winners, 1 loser. And you can even take a look at the equity right here and kind of see how well this would have looked at in terms of if it was your actual trading account trading it. Okay. To move a little quicker, because we have to move a little quicker. We have a very important guest next. Oscar does such a great job. I do need to get a little of that water down here, though. But let me go ahead and close out of this. I did plot it on the chart. So that'll send Tesla. It'll open up the chart for Tesla. It'll give us that profit loss graph right here. It'll give us the entries and the exits right here on the chart so you can see where those would have come in. And if I really like this system and I want to learn about it, I can go to the expert advisor here. I can go down to the PS fractal trading system, and it was number 2. There's 2 different versions of this. I can attach this to the chart. It's going to explain to me if there's any buy signals today, any sell signals. It's going to explain to me what an up fractal is, how it's getting a buy signal based on that up fractal, what a down fractal is, and how it gets out of that trade based on the down fractal. And all of that is fairly well spelled out for you in the commentary here. This system is basically based on the work of Bill Williams. It's going to tell you right here, and it tells you exactly what's going on with the system. So again, the idea here is trade based on what works, learn about what works, and trade with discipline around what works. And that's really where system testing can really help you. If you then like a fractal trading system a lot, we've talked about the scanner. We've talked about how it could go and identify trades for you. And we could go in and we could run a scan. I'm not going to just because I got time to worry about right now, but we could easily run a scan against like all of the optional stocks or whatever instruments that you're interested in and find stocks that have a buy signal today based on that fractal trading system. So I have to do this real quick. And again, I get it's just seasonal allergies have been nuts lately. This year particularly, I should go look at what's pollinating because it's just driving me freaking nuts. So, in a nutshell, that's really kind of what system test is. I hope it works. I hope it's something that you learn something in. Again, the MetaStock program has been rated number 1 27 years in a row. I'm so proud to represent MetaStock. It's such a great software program. So Imran asked, does MetaStock integrate with a broker? Not yet. Not yet. What we've always focused on, Imran, is the ability to find the right trades, the right strategies, and the right stocks at the right time. So that's a really good question. Appreciate it. In terms of MetaStock, there's 2 different versions that are available. We have our MetaStock real-time version. It's $250 per month. That actually includes MetaStock. It also includes a product called MetaStock Zenith. The Zenith program includes, like, if you're interested in news, fundamentals, economic announcements, anything like that, it's going to be included. We didn't talk about Zenith at all today, but it is a platform that Reuters actually spent $1 billion developing. We only sell it to individual traders. Their major market is institutions, hedge funds, banks, and it's backed by some of the best reporters in the world. In fact, last time I checked, there's about 2,000 different full-time reporters in 200 different news bureaus. Very, very famous for their news coverage. Again, that's included. It's a fraction of what you would pay if you're an institution getting it. $250 a month will get you MetaStock Zenith as well as a MetaStock real-time package. Okay, that'll include MetaStock. It'll include the data that you need for the regions that you're interested in. It doesn't include exchange fees, and that basically, in a nutshell, real quick, is basically the New York Stock Exchange. If you want to get real-time data from it, we'll charge you a fee. That fee is about $3.50, and then instead of getting a delayed feed, you'll get a real-time feed. The delays are usually about 15 minutes. The fees vary from exchange to exchange. So if you're doing real time, I'd recommend you get in touch with us so we can kind of look up what you're looking to get real time and give you exactly what that's going to cost. But $250 a month will get you real time Forex. It'll also get you delayed stocks globally with the ability to pay for those exchanges in the region like that you're interested in. Okay. We also have an end of day version of MetaStock. We call it MetaStock DC. MetaStock DC just stands for daily charts. It's only $69 a month. All right. And then we'll also do that. With that, we'll do the buy one, get two free. So for basically about 20 something bucks a month, you're going to get access to MetaStock for 3 months. 23, if my math's right in my head, which I think it is. In addition to that, we are going to do a 3-month trial on that. If you buy 1 month, you can get the second and the third month for free. That'll include MetaStock. That'll include data for the region of your choice. That'll include, for all brand new MetaStock customers, we started a service where we call them up. We call up every new customer. We set up an appointment that can be up to 2 hours with a support person where they help you make sure everything's installed properly, help you with any installation questions, and actually just show you through the tool a little bit, answer any of the questions you've got. People love it. We'll also include that Unleash the Power of MetaStock. So you can do that. It's just give us a call, 800-882-3040 or metastock.com/sales chat for that. Also, you can email us at jeffrey.gibby, you can email me if you have any questions for me, jeffrey.gibby@metastock.com. Greg, it's so nice you actually even brought me tissues, but I've taken enough antihistamines today that I don't need them. So 800-882-3040, metastock.com/sales chat to take advantage of that. And if you need anything from me, reach out, jeffrey.gibby@metastock.com. So there we go with that. Also want to remind you about the learnmetastock.com. It pairs really, really well with your 3-for-1 subscription to MetaStock, and that's only $99 per month. And we talked a little bit about all the classes and the 3 videos per week and the topics from technical analysis and MetaStock. So you should pair those together. It is a huge toolbox. It is something that we've been working on since the 80s. There is a reason it's been rated #1 for 27 years in a row. And so the better you understand how to use those tools, the more you can get out of them. 800-882-3040, metastock.com/sales chat. You can also, of course, get our Summit Action Package, which includes all of the add-ons from all of the great speakers that we've had today. It includes that Unleash the Power of MetaStock, 2 years of Stocks and Commodities magazine, and you can get that special 3-for-1 with MetaStock as well. All this stuff today, if you just bought them separately, it would be like $4,991. If you buy them here today, $1,895 is the price that you'll pay. Again, everything except for the subscriptions, the Learn MetaStock and the MetaStock subscriptions have a money-back guarantee. So you get to evaluate them, see how well they work. 800-882-3040 or metastock.com/sales chat. So I actually looked at the time. I could have showed you the scan. I thought I wouldn't have time, but that's all right. Produce Pros are available right now, MetaStock. Oh, I think he meant to say product professionals are available right now, not produce professionals are available right now. So anyway, the number for that is 800-882-3040 or metastock.com/sales chat.
Well, Jeff,
I would
I'm
encourage
sure they
you.
could answer a lot of questions about lettuce or carrots, cilantro. I know Dave Derricott knows a lot about cilantro. Yes, that is Product Pro. I beg your pardon.
I was like, what does Produce Pro mean? Anyway, if I was to tease you too hard, I mean kettle, pot calling the kettle black. glass houses, stuff like that. I do want to, we do have just a minute more. I just as a personal thing, I've been using MetaStock for like 24 years in a row now. I love it. I wouldn't trade without it. Yet last year I had my best year ever. I do think it's something that will be helpful for you in your trading. Give it a go. 800-882-3040 or metastock.com/summit deal. So while we're at it, I'm going to talk a little bit about our sponsor, Stocks and Commodities Magazine. They do a great job of actually supporting us. They've supported us for a number of years. It's a great magazine. If you register, if you've already registered, you'll get a free issue as long as you opted to get it. If you're watching us on YouTube right now, you can go up and just elect to get a free magazine. Just go to metastock.com/traders-summit, and Greg is going to put that in the YouTube chat for us today. Actually, it's right at the top. So just look at the top of the chat right there, click on it, and fill out the registration form. And you too can be the proud owner of a new Stocks and Commodities magazine. So in any case, our next speaker today is a guy by the name of Oscar Carboni. Oscar lives in Las Vegas, Nevada. He teaches people how to trade. He used to be a floor trader. He is one of the best presenters that we have come and speak. We love kind of the work that he does when it comes to drawing tools and drawing studies. And I would say he's always entertaining. He does such a great job. We always invite him because we absolutely love how well he does in terms of talking about the markets. I always am kind of taking notes. Oscar, let's go ahead and get you on here, buddy. How you doing?
Jeff, can you hear me, sir?
I can hear you. I can also see you.
Oh, good. So everything's working right away. Love it.
I'm interested to see what you think about the Dow going up and the NASDAQ going down today. Let me go ahead and make you the presenter.
Very well. All right, I'll show my screen. And let me just remove or move some things around so I can see what I'm doing here. Right.
I'm reading your notes. I'm already laughing.
That is going to be our theme today.
I'm going to get out of the way. Oscar, you do such a great job. I'm gonna get out of the way. I'm gonna let you go.
Well then, welcome traders from across the globe. Thank you for tuning in, and a special round of applause to MetaStock and all the presenters before me. MetaStock, thank you so much. I've been using your software since I'm 18. I've tried everything on the street. This is the software to use. Sit back and relax, traders. I promise I've got nothing to sell you in this presentation. I will offer you nothing. I will offer you a free trading room. If you'd like to join me, literally you can find me by going here to livewithoscar.com. It is absolutely free. If you click log in or register, you'll end up here. And if you click chat live with Oscar, you'll be in a live trading room with me. That trading room basically looks just like this, and there are traders lined up, can ask questions. I'm usually on camera and microphone. No credit cards are required, nothing of that nature. So come join me when you get a chance. Don't be afraid, kids. We'll do some cool stuff together. So again, welcome. And this segment is going to be called Oscar Appeals to the Fed. Please stop printing plucking dollars now. Of course, we can't use vanity, but you get what I'm saying, right? I'm going to show you a presentation. I've actually done some videos towards the Fed, pleading with them months ago. Stop printing dollars. It is wrecking our markets. Not that it's wrecking them. It's creating asset bubbles that will produce a big problem for us. And printing dollars right now is just the wrong thing to do. It was the right thing to do just recently. It's become the wrong thing to do. Now, I'm going to explain all of that to you in this presentation, but you'll have to humor me. You'll have to literally sit through a few moments of a video. This is a video that I did for the Fed, or at least for my Omniacs. Excuse me, let me stop that for a moment. This video was done for my Omniacs, pointed towards the Fed. Asking the Fed 3 months ago, listen, please stop printing dollars. Look at what you're doing to our assets. If you don't mind, because I am calling this Please Stop Printing Dollars Part 2, you've actually got to watch Part 1 to see where we've been, to know where we're going. If you wouldn't mind, please humor me through this video. I'll try to speed through a little bit of it. I want you to see what I showed the Fed, what I showed my Omniacs, where we were a few months ago, and then I'm going to take you down a little journey today of where we are now and what all of that means. So take a look at this video and humor me and watch it, please. We'll go from there. These are my usual nightly videos. I do one of these almost every evening to tell traders what's going to happen the next day. This is from 3 months ago.
Good morning, good afternoon, good evening, traders from across the globe. Thank you so much for being my 2,229th edition of Short-Term Trading Live with us, Carboni. This video will be for short-term trading, for Wednesday after Thursday, and for longer-term view. So pay attention to what I'm going to show you. As we know, before we get started, very risky. This is,
We'll jump past the risk.
To be lost in case before I get there, let me just remind you of a couple of quick things. Please come on weekly MetaStock. Then on Saturday, so please know that. Sign up for the Meta, and then
I'm just fast forwarding slightly, kids, to the important stuff.
You know, for yourself. Let's get moving.
There it is.
You ready? So let's do the short term. Omni has guided us. Omni has guided us, I should say. Omni guides us probably, but has guided us probably with a red arrow last week to a neutral arrow up to Wednesday, and then it turned green for Thursday.
This is the short term for 3 months ago. This has nothing to do with the long term. I want you to see. Just give it a moment.
S&P and Russell, and up we should go for trading on Thursday. Join me at Lost when I'll show you some of those trades. Now, before I get into what I'm about to show you, and this is really interesting, I think you'll like this. Remember something. When you're going to trade, put a stop in first, and then say this to yourself over and over again.
I forgot about this part.
For many years and many other Omniacs as well. Say this to yourselves over and over again. Put the stop in, then go like this. But you might need a mirror in front of your face. Say this to yourselves. Ready? Stop, in, which means emotions are out. Make sure you stick to that, traders, and let's get moving. So, where are we? I've got an appeal to the Fed and the Treasury Department. Please stop printing dollars. Please stop printing dollars. Please stop printing these fucking dollars. Fed, let me show you why. Back in 2008 through 2010, maybe 2009.
Sorry, kids.
2010. In my videos, and as any of my video fans that's still with me since then, and in my trading room, I was pleading with the Fed and with the Treasury Department. Please print dollars. The system is broken. We need dollars printed. This is 2008-9. And people thought I was crazy, and I understand why. Back in 1971-72, there was the Bretton Woods Treaty. Remember, Nixon took us off the gold standard. And here's what happened. What we used to have is dollars here on a scale, gold here. If they printed a dollar, they mined or an ounce of gold or an ounce worth of gold, put it in a vault, printed another dollar, they mined more gold. Kept the scales in balance. What happened with Bretton Woods after Nixon got us off the gold standard, and that was a great thing, they decided to take gold off the scale, move dollars over here, put bonds and credit and mortgages over here. Now, when we issue that credit, it is backed by dollars, and here's what we didn't do. Anybody who's ever been a trader since the 1970s through 2008 era knew this: never print money. It's really bad. Does everyone remember that? Anybody who traded through the 80s, 90s, 2000s, do you remember never print money? That used to be correct. It created immediate inflation. Well, that changed. And we hadn't printed money since 71, 72, except for little interventions, and the system broke. And I was pleading in my videos, print money, and they did print money. And as soon as they started printing money, the system started to correct itself in March of 2009. That wasn't the only reason, but that was a major factor. Now, it's okay to have printed money ever since then, but no one knew how much money we would actually have to print before the system's back to equilibrium. Well, I'm here to tell you, Fed, Treasury, Treasury, listen to me. I'm 39 years deep. You printed enough. Stop printing the dollars. I will show this to you in charts in just a couple of moments. You have to listen to me. Stop printing these damn dollars. We have printed enough.
Now I'm going to fast forward to the chart segment. I'll pass the first two charts because they're for short term. And let's go to the long term stuff. Here's my presentation for the Fed.
Printing dollars, Treasury and Fed. Look at the beating the dollars had so far, and it is at a spot where now it can drop much further because it just had a relief rally. So this is a baby head and shoulders, and down we will continue because that's continuation head and shoulders. Down we go. So dollars being printed, too many have been printed. This was all great. Now it's starting to show up in the system that too much has been printed. Please eat my word, Fed. I am telling you. Look at this. Crude oil, because we're printing dollars to the moon, Alice. This affects every single company. This affects everybody on this planet, in this country. Big, big slap in the wallet when crude goes higher for all of us, right? Every product needs to be moved. You buy it on the internet, it needs crude to move it, gasoline, you name it. Energy, we need that, and it's a big piece of our inflation, right? Look at crude because of dollar. Look at home heating oil prices. Look at the copper. It's regaining its title. You know there's copper in everything from the cell phones you're on right now to the car you're in. Building, it's in everything. I am telling you, it's insane to have this rally like this and keep printing dollars. This is no good. Look at lumber. You know, everybody's running out to buy houses with these low interest rates, but the price of houses will keep soaring with the price of raw materials like copper and lumber skyrocketing. Stop printing dollars. Look at soy meal. You might think soy meal is nothing. You know what it's used for? It is in plastics, it's in cars, it's in tires, it's in all kinds of things. So another industrial use. Look at the amazing runs on these industrial use markets. Look at corn. We use corn everywhere. It's feed for the animals. We eat. It's food for us. Corn everywhere. Look at that. It takes a lot, by the way. A lot of crude and energy to move the heavy corn around. Whether it goes by train or you name it, it takes energy. Coffee. Look at that. That's starting to go. Look at the big run it's starting to go in. Sugar. Look at this. There's sugar. Who doesn't use sugar? These are things that are going to create inflation. Look at the price of cotton. Look at the labels on your body right now, people. How much cotton are you wearing at the moment? This is in everything, and it is skyrocketing. Stop printing dollars. Look at lean hogs. It's gone through the roof. I am telling you, Fed, we've printed enough. Or Treasury, stop printing dollars. All of this happening while T-bonds are dropping. That means interest rates are going higher. Remember this chart? I showed you that the whole time we had this big massive market rally, real estate's rallying, and everything's great, cheap money, because as bonds go up in price, the bond market, interest rates go down. Well, for over a year now, we're in a bear market in bonds, which is a bull market in interest rates. This is the money printing has started to affect everything. Do not print any more of these. Stop printing these.
All right, so I wanted you to see that, which segues us to where we are now. Please stop printing these dollars, part 2. Now, there's no one at the Fed listening to me, right? But you never know who's out there listening. So I do these videos. I try to at least alert my omniacs to let them know, and somebody in the government. 39 years deep of paying attention, I kind of see what's going on. And I try to present it in a way where you will see it as well. So where are we now? I'm appealing to the Fed a second time. Please stop printing dollars. You know, they've printed $3 trillion since that last video. $3 trillion since the last video. So where are we? Here's the US dollar. It's even lower now than it was. Dollar printing is causing massive asset bubbles everywhere. We need the Fed to stop printing dollars. So here's your dollar index chart, right? And we know that this is a very risky game, trading stocks, commodities, futures, ETFs, options, you name it. In fact, today, we were long the Russell 2000, and we were stopped out. There's risk in this game. Even a 39-year pro like me comes up with trades that get stopped out. So know the risks, and please put your stops in. However, it's even more risk of the country for the country if the Fed, or I should say the Treasury, continues to print dollars like this. And let me show you why. This dollar dropping from all the way back here, you see it dropping, dropping, dropping. It has little rallies, but then when it comes down, it makes lower lows than the previous low, which is the important thing. So you had a drop, then a rally, but the low becomes higher, or I should say lower than the previous low. The next low, this one here, is lower than the previous low. This low is lower than that low, and so on. So the next low should be even lower than this low. Now, that's not great. It doesn't kill a country, but it's not great to have that happening for years on end like we've seen here while they're printing. So what does that mean? We're looking at the first chart, right? Let's go look at a few things here. While they print dollars like that, it makes things like copper just go crazy. I showed this to you when copper was down here, kids. That last video you just seen, this was the price of copper when I did that video. They have printed dollars, as I warned would happen. Look at the massive rallies if they continue. Now, copper is in everything, everything. Phones, computers, you name it, cars, electric cars, it's everywhere. It's in the houses that we're trying to buy that are going through the roof. So as you can see, this is getting expensive. Printing dollars is not working out. That's just copper. There's a few different markets I want to take you through today. Another view at copper, longer term view, just to show you how long this has been going on for. Look at this. This is just non-stop. This is the price of, this is involved in everything that we're going to pay for, basically, right? They need copper in the machines to make the shampoo, which is going to go up in price because of inflation, because of these because of the low end of dollars and the continued printing. So you've got Dr. Copper just exploding, and now it's even in a smarter channel towards the upside. So right off the bat, you can see printing dollars is not helping the American population, that's for sure, because we're paying these insane prices for products, and it's only getting worse. Well, let's look at what else printing dollars has made go up. Here's your heating oil. This is what it cost you all winter long to heat your home. Remember, when I first showed this stuff to you guys, the prices were down here. We were in Feb. Look at the price movement higher since that last video where I was yelling at the Fed then. We've had this much inflation in our markets that we use for everyday living. Heating oil, everybody needs that. Even in the desert, we put the heat on. I kid you not. In Vegas, the heat comes on here as well in the winter. So heating oil, everybody needs that. Look at the price of that moving higher. How about this? Every morning, how about an inflation reminder? Every morning when you wake up and have a cup of coffee, look at the price of coffee. Look at this extended run. So, all right, if you say to yourself, well, I'm not looking to buy a house, I don't have to worry about copper. Do you drink coffee in the morning? Do you go to the store and buy anything at all? These prices are moving higher. That is because inflation is starting to get jacked up because the Treasury continues to print dollars and our administration continues to just give them out to people in the country. You know, when you have to raise interest rates, which all of this is leading to, it's going to hurt a lot, but we'll get there. So, coffee. Every morning when you wake up, you're paying more for your coffee than you paid the day before. Let's see what else is out there. Look at the price of sugar. Sugar is used everywhere across this planet. It's in everything, and look at how long this steady rally has gone on for. You know how long it's gone on for, right? About as long as the dollar's been going down. And the more they give out money to the U.S., I don't care if they give it out to people, corporations, banks, you name it, the more they give out, the more they have to print, the worse the spiral of dollar moves lower, the quicker the inflationary markets move higher. We really need the Fed to stop printing dollars. So the price of sugar literally has moved from 10 cents to $17.49 in a short period of time, almost doubled in price. I assure you, so are the prices on the market when you buy things with sugar in them. But there's plenty more. Lean hogs, look at the price of that. Please stop printing these, as I said, plucking dollars, people. The Fed, talk to the Treasury, speak to each other. Look at what you're doing. This inflation will not end well If every product that we have to go out and purchase skyrockets in price, it's just not going to end well. So lean hogs, the price through the roof since February. This is Feb down here. Look, this is February. This is the begin. This is, in fact, right here is February. Look, bam, look at how far inflationary markets, things that we need to eat and use every day, are moving higher because they keep selling, or I should say, they keep printing and then giving away US dollars. A little bit of help is a good thing. This kind of help, no good. Asset bubbles everywhere. If you've gone out to the store, have you noticed the price of things? Just you start to look at certain items and you go, when on earth did the price go that high for one of these? I'm starting to see that when I go out. It's because of these charts you're looking at. So let's see what else we have out there. And then, of course, if we have time, I'll open this to questions and answers when we're done looking at the array of charts I'd like to show you. Lumber and many other markets are now seeing an historic rise in price. This is because lumber and other products are priced in dollars. If dollars continue to go down, this will not continue to stop. Now, I don't know what to say when you're paying $1,600 per board length of lumber, with 3 months ago you paid $250 or $250 for it. You know what I mean? What do you say to people when they go to buy that property from you? So you can see that this is starting to become a serious event for us. It's no longer just markets moving higher, and that's okay. It's not okay anymore. This is going to start to knock our markets down eventually because they're going to have to raise interest rates. So, of course, as you know, lumber is everywhere, right? Where are we not using lumber? Look at the price of this right now. Wow, it's out of control. Then you have something like aluminum. Look at the aluminum market. Aluminum, it's used, as you can see here, cans, foils, kitchen utensils, window frames, beer kegs if you're in college, airplane parts, the auto industry, building, you name it. It's in everything. So the Fed says there's no inflation. This is the third video I'm doing to tell the Fed. So one of us is wrong, one of us is blind, the other one isn't. I'm not sure that that's me. The Fed told me I'm blind. I'm not sure that it's me. You tell me at the end of this presentation if we're the blind ones or not. But I see inflation in all the markets that we basically count on to create products in this country and live our normal lives around the world, not just here. So if they don't stop printing these dollars soon enough, this is just going to get out of control. So that's aluminum. You know aluminum's in anything and everything you can think of, right? So if you watch the prices move higher and you compare them to dollars, you'll see they're almost exactly opposite of one another. Dollars are the reason right now. What else is out there going crazy? Let's go with right here. Oh, yeah, we haven't looked at this guy yet, have we? Look at corn. Look at the price of corn. This is just insane now. See how much, you see how too much dollar printing creates inflation? Is this not insane what we're seeing here? These charts, even though if you got long them, you made some money, that's a great thing. For the average person in this country that aren't long these commodities, you know, this is detrimental to them. This is detrimental to everybody. So the price of corn now has got to be over $1, $1 a quarter an ear, maybe $1.50 per ear. I think there were 5 for $1 once upon a time when I went shopping not too long ago. So what does that mean? And of course, that's part of auto industry because we use a lot of corn for ethanol. And then there's a lot of movement of that heavy corn using other crude products to move the corn around. All of this is being buoyed and jacked up right now by the overprinting of dollars. And it doesn't look like it's going to stop anytime soon because, believe it or not, our administration right now, the Biden administration, is looking to do another massive, massive drop of money on the country. I think they've overdone it already. I told you that 3 months ago. I think it's been overdone. So now you've got things like corn out of control in price. wheat, barley, you name it. We'll go look at a few more of those. Look at the wheat market. Asset bubbles are everywhere. Look at the wheat market. This is just not healthy for us anymore, kids. So again, if you're a wheat trader and you long wheat, yeah, it's healthy for you. But if you are Wonder Bread and you need wheat to make your product, this is not healthy because you've got to pass that to the consumer. That price moving up, either the company eats that price and loses money, or they pass it to the consumer, which is called inflation, which is what's going on right now. So this is really, you doing right now? Okay, just watch them. Come in. Oh, you can't. I'm on film. I was inviting my son, but I don't think he's ready to be on film with us. If you get a chance, come in and watch. There's some good stuff going on. So asset bubbles everywhere. Wheat is just one of the many. They are literally all over the place. And we're going to look at a few more. So we've looked at some metals. We've looked at some industrials. We've looked at the grains or a few grains. We'll look at a few more. You can see it's everywhere. It's not limited any longer to just a few places. Let's see, we'll go with 12. Now, I think anyone in the world cares about oats except for maybe horses, and look at the massive rally in oats. So if markets were moving higher due to supply and demand and not inflation, something like oats wouldn't be going anywhere right now. You know what I'm saying? Oats would not be taking the ride with the rest of the commodities. So that you can tell is simply inflationary. That's what's going on here. And it's everything. Everywhere I look, we've got inflationary markets. But right now, the figures on inflation, according to our government, are nil. We don't have any. There's no inflation. So something's going on here that looks like inflation. I'll let you guys decide. I'll let you traders decide for yourselves. By the way, you can always join me in my free live trading room at livewithoscar.com. As I mentioned, there are no credit cards required. I just sit and spend my life in a trading room, watching markets, going over markets, producing trades, and you can join me and we can look at charts like this together as well. So let's see what else we have lined up. We just did oats, right? We did corn, oats. Did we get to the soybeans yet? No, I don't think we did soybeans, did we? Let's take a look at soybeans. Oh, my goodness. Soybeans, you know, it's used in everything from plastics to tires and food, whether they use the soybean or the soy meal, which is the crush of soybeans. It starts with soybeans. It's used in the industry everywhere and in food everywhere, and it's part of the vegetarian craze because it's tofu. It's in everything. And look at the massive rally we've had to endure in soybeans for this, I don't know how long. So remember when I was putting out the video, those videos I showed you in the beginning of this session, the market was a third of the price it's at now. I mean, they've exploded the last 3 months. So you've got soybeans now absolutely on the inflationary front, and some great trades, by the way. We're not speaking of trading right now. We're just looking at a larger picture so that we wonder what's going to happen with interest rates in the future. I think this is the picture that will tell us where interest rates are going to go. So that's soybeans, and look at soy meal, which is part of the soybean crush and used in industry everywhere. Bean oil. This is soybean oil. Meal oil, same thing. So you see soybeans, you've seen soybean oil. Once again, used in industry, used in cooking, used in all kinds of things. If they do not slow down on printing these dollars, this will not slow down. And the price that we pay at the cash register will just continue to go up. The problem with that is the dollar is still going down. So if your money's going down and the price of your product is going up at the same time, it's a double whammy. You're getting hit twice. You see what I'm saying? It's starting to now become a problem for us. It was okay. We could live through it for a while, but now, as I mentioned 3 months ago, when I wish they would have stopped, this is becoming a problem. So that's your soybean oil. And that is number what? 9. Let's go to chart number 10, which I think we've already looked at. We looked at corn. We looked at wheat. Let's move out now to some other things that are really interesting, like Bitcoin. You realize that dollar printing is creating this huge rise in crypto, right? Because if you look at the dollar chart, well, the dollar chart is going this way, and the crypto chart is going the other way. So that basically tells you that too many dollars are buoying up crypto assets now, which, hey, if you're a crypto trader, God bless, right? But these are just more bubbles being created by overprinting our US dollar. And boy, oh boy, is that happening way too fast. They're throwing it around into way too many places. And boy, we're running into trouble here. Again, you might not feel it yet, but you will if this continues in the next few weeks. It's just going to snowball into a big event. And you can see the way the markets were acting today in the last few days. Even now, markets are starting to get a little jittery, seeing this inflation just coming at us like a brick wall at full speed, which is, people are worried here. I am myself. But we're traders. We'll trade out of it. But what about the people who are not traders? So let's see what else we have. Ethereum. Almost all crypto boats have been lifted via the falling dollar. Look at Ethereum. Now, supposed to not be moving in this direction. You know why? Because the dollar is supposed to be king. Everybody's supposed to want that US dollar. But if you recall, if anyone was trading before 2009, you'll recognize when crypto was born. Does anybody out there remember when crypto was born and what created the crypto to come out to begin with? Little refresher course here. We reached the point around 2008 into 2009 that dollars were being destroyed. Europe was talking about using petrodollars or maybe using the yuan to back currency. You had India, the Taj Mahal Museum in India, told the US, we're not accepting dollars anymore for entrance fee to our museum. We don't want dollars, we want euro. Dollar was getting trashed. 2007, 8, 9. The reason for that was the Fed was trashing the dollar on purpose. However, if you recall, the dollar looked terrible. We talked about getting rid of it, maybe petrodollars, as I mentioned, maybe China dollars, and Bitcoin was born. And Bitcoin did really well until that dollar started to heal and the market started to heal. And then Bitcoin went all the way back down to the abyss, remember? Well, look at what's happening now. The Bitcoin rally and the Ethereum rally has lasted almost as long as the dollar dropping. So they were born when the dollar looked like it was going to fall apart and there'd be no more US dollar to back the world's currency. Bitcoin and crypto came out of the woodwork. And they calmed down for a while, but look at how crypto has now gone crazy. A lot of it's based on our dollar. Believe it or not, it's what I'm showing you right now. It all fits. It's all interconnected. And the dollar being overprinted is making asset bubbles in things that, of course, you buy some Ethereum and Bitcoin and say, well, if the dollar keeps going down and it gets worthless, look at all the great stuff I own, gold, Bitcoin, you name it. And that's why people are buying gold right now. And that's why Ethereum's going. And that's why Bitcoin's had its run. The dollar's been moving down for too long. Help me out there, traders. Write letters to the Fed. Write letters to anyone, to the Treasury. Stop printing these dollars before you destroy this wonderful house of cards we've built. Go out and buy a house right now. Tell me if there's inflation or not. Go out and buy a house that used to be $300,000. Tell me what you're going to pay for it. So it's getting bad out there. And it's because they won't back off on giving away these dollars. So that was 14. Let's go to 15. Once again, dollar printing is causing massive asset bubbles. Stop printing the dollars. If they quit going down for a little while, things will level off very quickly. Commodities will come right back down. Stocks will level off a little bit, the ones that are overpriced due to the cheap dollar. It would just help everything. They would just stabilize it and stop printing so much. Now, I'm not saying the dollar's unstable. It's not by any means. The dollar's very stable. But the more they keep talking about giving more of it out, the world knows they have to print more to give more. And that's where the problem's coming in. It's a perception problem. Now, the perception is you've got to go into inflationary markets to avoid the spiraling dollar. So what else is out there? We are looking at 15. Now, Basically, all of this was leading to this one place. Like it or not, Fed, if you allow continued printing of the dollar, you will have to raise interest rates soon. They have no choice. Now, if you don't think rates have been going up anyway, when bonds go down, as I showed you in that video, rates go up. Well, which way has this market been going in general? Up or down? Everyone can see it's been going down, right? So if you've got a down market in bonds, you've got upward trajectory in bond rates, the interest rate. So being that bonds have been going down for so long, the interest rate has been ticking up for quite some time. Now, bonds had this little rally, but look what it got to, right back to the good old trend line that always stops the bond market from rallying. When the bond rallies, interest rates go down. When the bonds drop, interest rates go up. What usually happens when you get to that blue line? The drop comes. That means right about here, and an outside reversal day was put in. Drop should start to ensue, which slowly raises interest rates. Now, I think the Fed will have no choice but to acknowledge some of these things I've just shown you and reverse course at some point and have to raise rates sooner than they had planned on. And I think that's smart, to be honest. It might scare everyone if they just came out and raised rates unexpectedly. And I don't expect them to do that because they've already spoke about not raising rates. But if they just came out and raised rates, it would slow everything that you just seen down. It'd make the bond markets go up a little. And real estate might at least cool off a little because it's getting to a point that the house that you owned on Tuesday is worth more on Thursday. You know what I mean? That's, the last time I seen that was 1987, right before the savings and loans debacle. We had houses where if you got into a house contract, didn't actually sign to buy it, and you could take that contract and find another buyer, you could make $20,000 between the moment you signed it and another buyer without even buying the home. 1987, I used to see that. And then the savings and loans sort of meltdown took place. Well, I am seeing that again right now in real estate. It's getting to the point that if you don't sell it, if you don't sell the real estate, it goes up in value so quick you wish you didn't. On the other side of it, if you didn't buy it, it moves up so fast in a month's period that you wish you would have bought it. So that's definitely a little too much, a little too fast, very inflationary due to this dollar just hammering on the downside, the overprinting, and now bond rates are starting to go up, and everything else that you've seen is starting to move so much higher that it's going to get very expensive to buy anything in the store soon. Let's look at the T-notes, because I know I took a look at those earlier. Look at T-notes. Same sort of thing. If they don't stop printing these dollars, they will be raising rates. As it shows you right here, same here, Fed will be forced to raise rates soon if the dollar printing continues. You can see it in the way the markets trade against each other, looking at charts. And of course, again, we looked at a couple of metals that are in everything out there. How much? Look at iron and steel. What do you think iron and steel is that not in everything? Of course it is, right? Now look at this insane rally we've had in iron and steel. Look at this, is a live bar as of today, right here, or as of Friday. That's a real bar. It has broken out. It just will not stop. It's in cars, aircraft industry, building, you name it, right? It's in everything. So if this is what's going on, and it's basically based on this, printing too much of them, the obvious answer is to stop printing these dollars, in my opinion, because you've got no choice but to raise rates unless you cool off on printing dollars. It's one or the other. So raising rates, you know, if you raise rates too much, look, the upper class can afford the rate hike and the tax hike. The middle class gets poorer, and the poorer get way poorer. So you're separating, making more poor, less middle class, and the upper class can handle it. That's why we don't need them to continue printing these dollars. We will be the ones that will feel it. Us middle class will feel it. So this is what I wanted to show you as far as a presentation, looking at dollar printing, what the Treasury and the Fed is doing, and all of those markets and where they're going. So I would now open this up to questions and answers because I saw a few questions going through my chat room. Jeff, do you happen to have questions where traders would like to speak about certain markets that have come through during this last half an hour?
Yeah. One of the questions we had was from Helen. She wanted to know if there's a recommended platform for trading commodities on.
So a recommended platform, I'll tell you what, trading commodities, let me ask you a question. Is this for trading commodities or charting commodities? Charting commodities, you already have your answer. That'd be MetaStock.
She means trading.
Okay.
Because of course.
I'll tell you what I use. I use a product called T4. It's the company that gives that product to me is Dorman Trading out of Chicago. I think it's the fastest order filler, the least confusing, the best trading program I've ever used since electronics started. And I've used many. So it's called T4, and you can get that at Dorman. If you wanted to find out more about that, contact me. I'll give you someone's number, and you guys can speak directly to one another.
All right. Greg wants to know if you think that the Fed should stop printing dollars.
No, I think that they haven't printed enough yet.
I got the impression that maybe it might be time.
I was trying to appeal to them months ago. Here we are again. I don't know what it's going to be.
I testify to the fact that he was talking about how we might be kind of getting to an end. And that was months ago. That was before Dan went to Disneyland.
In fact, 3 weeks ago, I did a MetaStock presentation about inflation, sort of this same topic. I'm staying on this topic because that is what's happening. This is top day. It's before our eyes. Can't lose track of the big picture here. This is the big picture. So it's what I wanted to show you today, the big picture, not the small, what are we going to do tomorrow type of analysis.
Dan would like you to look at SLX.
SLX. It should just come up all by itself. And let's apply a template. Wow. Very nice stock. Well, I've actually watched this before, but it used to go the other way for many years. It's a steel index, right? Is this a steel index?
Yes, it is.
So I remember when this used to go the other way for so many years, we all stopped watching it. I'm so glad to see it doing this. Now, this bodes really well with the steel market, what you've seen, right? So I would think this is a great ETF to follow the steel market with. I think it looks fantastic here. I don't see any reason why you wouldn't want to buy the dips in this market. And if they continue to print dollars, this looks almost exactly opposite of a dollar chart. So I say this is a very nice one. SLX, while they're printing dollars, goodbye. It's a good market.
Brother Truth on YouTube wants to know if you have any thoughts on trading options on futures.
You know, here's what I would try to tell you to do with options on futures. Luckily, that I go so far back in the industry that when options were first created, one of the first trading pits to ever have them was on the COMEX or the Sugar Coffee Cocoa, where I work. Those pits were the first to ever have an option. What I learned when options were first born is that you should only use an option as an insurance premium against an already winning position. That's the way to use an option. So what does that mean? That means, let's say you got lucky and you bought SLX right here, and it rallied all the way to here. At that point, you can either sell calls against it or buy puts as protection so that if it goes down, you do not lose the money that you've already made, but you don't make any money on the way down. That is what I would tell you to use an option for. Every other use of that option is speculating on something that was never meant to be speculated on. It was born to be an insurance premium against an already established winning position. So if you use them that way, you use them correctly.
Ron asks, is Russell headed down this week?
The Russ, huh? So with Russell, and let's just drop something else on this. We can see what the streets averages are looking like. Russell doesn't have today included, right? So if you include today's bar in Russell, it basically is a red bar down to somewhere around here. We had a big drop today. This won't update until the end of the day. It's an end of day platform. This is what the Russell chart looks like. What I can tell you is it's becoming a very bumpy ride up here for the Russell. In fact, you know, I don't feel like getting too much into the illustration, but what you really have is a test of what started out as a head and shoulders up here. It started this way. We've had a head test, and now it's just sort of meandering around, not telling me 1,000% for sure if this is going to pay off or not, but it's there. That's the head test. It did not pass the head test. It failed at the head test, and we're starting to work our way lower. Now, I'm not going to call any downside yet until the Omni, which is Oscar's market navigational indicator, my system. When the Omni tells me to call the downside, I will. That could be as quickly as this evening. But I'm not going to start calling the downside yet. But I showed this to traders in the last few weeks in my videos that something's brewing here. NASDAQ as well. Let's see where that takes us. I will tell you this. I'm expecting to find an Omni that's going to want me to sell rallies tonight. But I don't know that that's the truth till I run the Omni analysis. If you come back to me this evening at 6 p.m. Eastern, I'll be able to tell you whether or not we're selling or buying Russell today.
Paul wants to know if you'll look at Bitcoin for him.
Of course. Bitcoin. So Bitcoin on the daily, I think it's doing well. Now, this isn't an average I normally use on Bitcoin. If I remember right, Bitcoin's got this weird 20-bar average thing that it seems to like. If I remember right. And if you can get back above the 20, let's see what this one is, actually. Yeah, okay, let's look at the 20. I think the 20 is good on this one. Right, if you can get back above that 20, I think the buyers will come back in. Because if I did a continuous, what you'd find on this average is Bitcoin spent most of its life above this average. A little dip under, spends its time above the average. Just recently, we've been under it. I want to see us get a little higher. But I do actually like buying dips in Bitcoin lately. I'll love buying dips if we can settle above that 20-bar moving average. But overall, if they keep printing dollars, you better believe Bitcoin's going higher. And we do have, by the way, targets in Bitcoin. Targets were given out several months ago. It's either going this way or we have a secondary target, which is this one. But we expect this one first. I'm on record ever since I put the two targets out. This is what I expect, but you never know. I mean, this is always a possibility down here. I don't see it. I see us hitting 80,200 2 months from now.
All right. Bro Truth wants to know, what do you think is the biggest impact of rising interest rates? Would it be the effect on the credit markets, et cetera?
Yes. Well, you know where, so it gets really intricate. Good question. Let me just pull up our stock market to show you that. Let's pull up E-mini S&P. There's a reason for that. See this market? This market is built on companies that issue credit, corporate bonds. So most major companies, JP Morgan, Goldman, you name it, they offer zillions of dollars of bonds each month that are usually come due 1 month or 3 months from now. And they've got to offer an interest rate slightly higher than the government is offering so that entities would bother to buy your corporate bond over a government corporate bond. So why not buy a government corporate bond if they're going to be the same price as your corporate bonds, right? So a government issued bond is safer. So you pay more interest to get them to buy those. Well, if interest rates go up a little, corporations have to raise their interest on the money that they're borrowing to run their company. Now get this, when they get that money, they've got to pay back. They're paying more for interest today to pay back cheaper interest in the past. It's really bad for them. So as interest moves higher, it affects all of the stock companies that issue debt. You get that, right? They've got to issue more and more debt, which means they're paying more money on the money they're borrowing to run their operations than they paid the day before. So that's inflationary for them. Rising interest rates will stop it. Let's say you've got a situation where a homeowner is about to buy a property. And based on the amount of equity to income ratio and debt ratio, how much money they have in the bank, and the mortgage rate right now, the interest rate, they can just afford that house. If interest rates go up just a little, one of two things are going to happen. Either the buyer has to come up with more money out of his pocket, which he probably can't afford, or the seller has to lower his price, or there's no transaction being had. It affects everything everywhere. Everything everywhere. So higher rates would affect just about every industry you can think of, certainly the stock market. Now, the day they start raising rates will not hurt the stock market. Here's a lesson for you traders out there. When they start raising rates, you might get a hiccup down, right? First thing down, oh my goodness, they're raising rates and the market will drop. But raising rates will make the dollar move higher. Rising dollar and rising rates makes the other countries around the world plow into this country, buy our dollars to buy our stocks. So here's what happens. When they start to raise rates, remember this, you get a nosedive effect quickly, turnaround effect in the market, and then the dollar and the market will go up together for months on end till rates get too expensive. Then the party's over. So when rates first start to go up, remember that. You'll have a knee-jerk reaction, but that won't be the beginning of the end. You'll continue higher for a long time with the dollar because now higher rates make people want to buy the dollar and they want to buy stocks with that dollar. So in the beginning, knee-jerk reaction, dollar and stocks go up together.
All right. Slick Pete wants to know if you look at Tesla.
Slick Pete's been around since like 2009. Hi, buddy. Nice to see you. Tesla. That's not Tesla. That's no Tesla I've ever seen. Is it a .o, by the way?
I think it's .k, if I'm not mistaken. No, it's .o.
That'll work.
That's it.
That'll work. So, what I've basically told people for the last few weeks in Tesla, or I should say last 2 weeks, is that I've actually had no opinion of it. And here's why. When we get back to this trend line, I might have an opinion because it's kind of bounced off of it many times. This average means nothing, by the way. It's not the Tesla average. It's bounced off of it many times. At the same time, it's also building what's kind of a classic tired pattern up here. Tired meaning I could eke out another head and shoulders for you if you want to see it. In fact, being that you asked the question, they're all over the place, kids. They're starting to show up everywhere. And we're getting ready to raise interest rates. And, there's a lot of reason to think that these head and shoulders that are showing up everywhere have a meaning. So I don't really like it until I see what happens if we hold that blue line. But the more charts we pull up, the more you will see this head and shoulders does exist. And a head and shoulders, by the way, for traders that might not know, let's do caps. This is the left shoulder. Up here would be considered the head. All right, so it's sort of like a person standing there, head, left shoulder, right shoulder. It's basically supposed to produce a down move. So, of course, learning about this in books over my career, I studied it enough to realize that it's not quite that simple. There is something that I've added into this, the Oscarism known as the head test. Generally, after you put in the right shoulder, you get a head test. And if you fail to get above the head, then you can basically confirm it was a head and shoulders, and down you go. So I've added the head test into a head and shoulders formation. It's the second market that came up that had a head and shoulders right before your eyes and a head test that failed. And it's becoming a theme all over the place. So again, I'd be a buyer of dips if it dipped a lot, or start selling rallies if we see that the market's starting to bend over. For now, don't let me scare everybody. We are in a big booming bull market in the stock market itself. And until they raise interest rates, I don't expect that to end, but it's not going to go straight up, especially with all this inflation in front of us. Nothing's going to go straight up with all this inflation. Maybe the commodities will, but not the stock market. Anything else that I can help you out with?
Yeah, I think we can squeeze in maybe one or two more.
Sure.
Neil wants to know if AUD USD with dollar index versus Australia dollar, do you see a chance of war with China?
So the dollar Aussie, more interesting is the dollar Canadian. Has anyone been watching that? So the dollar Aussie, I have not a lot of play there lately. We can pull up the Australian, right? So it's been sort of flat, right? The Australian dollar, it's been in a flat since, I don't know, the beginning of this year, maybe towards the end of last year. Not much, sideways movement. But look at this Canadian dollar. That's a difference, huh? This Canadian dollar is just enjoying every bit of lumber moving higher. That's where it's getting its gusto from. But you also have US dollar moving lower. The reason why I wanted to move from Australian to this was the difference is the Australian dollar is flat while the US dollar is doing what it's doing, but not the Canadian dollar. This guy is really starting to take off now. Caught my attention about 2 weeks ago. I said, what on earth is this Canadian doing? And it's been going up ever since. So the Canadian dollar is your best bet right now with other currencies, if you ask me.
All right. Dan wants to look at PYPL, PayPal.
PayPal. Does anyone know who started PayPal? My wife taught me this yesterday. Elon Musk. Would you even thought that he started that?
No.
One of the things. He was part of it. I kid you not. And look at his history. Look at Wikipedia. Who would have ever thought he started that? This isn't what you just asked me for.
A PYPL dot. I think it's O. Yeah, .o.
That's PayPal. So let's let's flip to a template we can understand. Let's see what average this is. Nobody likes that 50 anymore, huh? If you remember the last few weeks ago, I was showing you a seminar where the world just went nuts on the 50-bar average. We didn't know why. Now it looks like the 100 moved up. That's a 100-bar average. So seems to be if you hold this, you can get long this PayPal market because it seems to hold it every time. Now, this is simple, of course. I'm not showing you the Omni. I'm not running any sophisticated analysis. I'm just doing basically abstract analysis. But if you didn't know anything about charts at all, wouldn't this be a good spot to buy PayPal? I would. You know what I'm saying? I would be a buyer down here unless it started breaking that average. So I think PayPal looks good. PayPal, remember this. PayPal, by the way. Oh, we don't want to do that. We want to do this. PayPal started taking crypto, Bitcoin to be exact. It's trying to steal some of Bitcoin's thunder because now it accepts Bitcoin. And it's allowing trading in Bitcoin, and they're starting to pull Ethereum in, I believe, as well. So PayPal looks good to me. It handles transactions all over the planet. Technically, it looks fantastic. And if you like Bitcoin, you're probably going to like PayPal.
All right, one more. And then I think we have to go. J-O.
What is it?
J-O.
R?
Coffee. J-O.
Coffee. That's KC, isn't it? KC. N1 is coffee.
Okay, let's do look at coffee.
Is that what you asked?
He was asking for a JO, which is a coffee ETF.
Oh, so JO. So it's, let's see if we can pull it. JO, is there a .o maybe?
Nope, just JO.
JO. Get rid of the caps. Don't see it in the list, do you?
Click on starts with.
Starts with. All right.
It came straight up for me. Let's look at coffee instead. Oh, there you go. There it is. There it is.
Hey, we'll figure it out any way we have to. That was simple. So, wow, that looks as good as the coffee market does. In fact, it looks even better. It's moving faster than the coffee market is. I think this is great. I've never heard of it, to be honest. The only thing today that caught me by surprise, I've never heard of this. JO is a coffee ETF, huh?
Mm-hmm.
So let's take a look at it.
I've never looked at it either. Yeah, but I like the symbol. It makes sense.
Yeah, it's sure better than KC, which makes no sense. So right off the bat, you got a beautiful channel building here, right? Let's just make it a little smarter. Nice channel building here. We'll see if it's parallel or not. So not quite a parallel channel yet. I mean, parallel would have to be touching 3 bars down here, like something like that, right? So it's not quite parallel. Looks pretty good to me. I think that basically what you'd want to do, short coffee, short this, as long as the both of them, see, coffee is the future. If coffee drops first, you got to get out of this because the future is the future. It shows you what's coming first, usually before the stock starts to go down. So 2 things I'll tell you about this one right here. Keep an eye on what used to be a double top here, right? You don't want to get under that ever again. And if the coffee market continues higher, JO looks great. If you start to see 3, 4 down days of coffee, you may want to get out of this because it'll be slower than the coffee market. It'll move behind it.
All right, so let's talk a little bit about livewithoscar.com.
All right, so livewithoscar.com is basically the place where I spend almost all of my life, day and night. Again, if you get to the site, when you first get there, it looks like this. You can open a free membership. You just click log in, and if, of course, I'm logged in, or you click register, and we ask for nothing. No credit cards, no nonsense at all. Your name, email address, username, and you work your way in. And then find me in my trading room, which is the very next page that you'll come to. Step 1, step 2, step 3 is enter the trading room. And in there, you can spend your life with me like most of my other traders do. We sit in this trading room and basically spend our lives together. This is me with an overhead camera waving at you right now. Generally, I've got a camera pointed right at me. Now, we have customer support, Dano at livewithoscar.com. He just put his name in right there. He'll do customer support for you. You contact me anytime you need to. I don't even need to give you my email address. If you can't find me, you're not looking. I mean, I'm on the internet 24 hours a day. I am extremely accessible. So go to livewithoscar.com and find me there. We also, by the way, at the site, I basically give out trading recommendations to my traders every day. On this side, it shows them what we'd like to do, if we're going to buy or sell. Down below is generally a chart to show you my reasoning behind it. And then here, as the market moves, I start sending updates one at a time to tell traders what to do. Those updates come in something that looks like this, which is really helpful to you. You'll receive this. It makes noise. It'll wake you up in the middle of the night. It'll tell you exactly what I want you to do. If you close it by accident, let's say you're in the middle of a sleeping stupor and you reach over and you hit the wrong button and you close that, everything I send out in one of those boxes that pops up called the flash update shows up here on the site immediately. So the second that bell rings, it's here as well. And I use this to help encompass my traders with what I hope is all the information they need to get through these markets successfully. So again, there's nothing here to offer you that you would purchase except for if you're brave enough to come out to Las Vegas. There's a difference. I actually teach this method of the Omni, which tells us exactly where to get in and out of markets each day. I teach this here in Las Vegas. It's a 4-day session called Omni Camp, and only 3 people ever get invited. If you'd like to come out to Omni Camp, go to Omni Boot Camp and fill out an application. You know, requires a lot for you to end up out here, I will tell you. You can go to Omni Boot Camp, fill out the application. I'll receive it. What happens is I receive a lot of applications, and I don't call a lot of them back because I don't want to hear from these people, because if you don't have the right qualifications, you don't make it out here. So it's very exclusive. Fill out your application. I will call you back no matter what at livewithoscar.com or omnibootcamp.com. If you want to come out and learn from me in my home office, it's 4 days, 5 nights in Las Vegas. Contact me and I'll tell you all about that. But it's exclusive. It's for smaller crowds, 3 at a time. And you've got to be really serious about trading if you want to come out and learn how to get this right. But I'll fix you if you want to come out. That's entirely up to you. Jeff, I can't thank you enough for letting me present today. I love looking at charts. You know that's my favorite thing to do in the whole world.
We love having you. Great job today. I really appreciate and I'm looking forward to seeing you in the next group of Omni Camp customers, or the next Omni Campers, I should say.
I'd love to have some of these traders come out for Omni Camp. Please fill out your applications. Again, thank you, MetaStock. Love your program. Love everything about you guys. And
thanks,
I will
Oscar.
see everybody at livewithoscar.com.
Such a great job. Thank you, Oscar.
My pleasure.
All right. Go ahead and kind of get everything kind of re-situated here. I hope you guys enjoy. He does such a great job. We love having him out here. And the first thing I'm going to do is we're going to go ahead and kind of quickly transition over to Barry Burns. But first, I'm going to talk a little bit about our, you might have heard about our sponsor this morning or this afternoon or sometime today, Stocks and Commodities Magazine. Great magazine. They've been publishing it since 1982. Hope you signed up for a free copy when you registered for the summit. If you haven't registered for the summit, like you're watching on YouTube right now, feel free to join us. Go to metastock.com/tradersummit. It's hyperlinked on the top of the YouTube chat. If you already are in the GoToWebinar room instead, don't worry, you're already registered. So, but I do want to thank them. They do a great job of being partners and creating a great magazine every month. So for us, I want you to remember that we are offering that special extended trial at metastock.com/tradersummit 3-for-1. You can also get in touch with us at 800-882-3040 or metastock.com/summit chat. We do have this package that's been discounted more than 50% today that includes Steve Bigalow, Vince Vora's Victory System, the Patterns for Profit System, Barry Burns' Top Dog Toolkit, a subscription to learn MetaStock for 3 months, and Unleash the Power of MetaStock. All of that's normally $4,991. Here today, we're going to give you a discount of $1,895. Well, actually, we're going to give you a price of $1,895, which is more than a 50% discount. We're going to give you a money-back guarantee on everything except for the subscription to learnmetastock.com. So you have a chance to play with it, make sure everything works well for you, and give it a go. At least there's a reason it's been rated #1 for so many years in a row. 800-882-3040. metastock.com/sales chat. Our next presenter is Dr. Barry Burns. Dr. Burns has been a longtime partner of MetaStock, just like most of the people that are speaking today. Barry does such a great job. What he's going to talk about today is taking your trades to court. So I think maybe going forward, we'll start talking to him or introducing him as Judge Barry Burns. But for now, let's go ahead and bring you on here, Barry. How are you doing?
All right, my main man, Jeff, I am doing well. Let me bring up my camera, hopefully, successfully. Let's see, share my camera. All right, let's see if that's going to work for us. Hey, I'm there.
Right, we see you.
Hi, me.
And we see your PowerPoint as well. So,
oh, you see both. Awesome.
Yeah, everything's coming through. I'll get out of the way. I'm looking forward to it, Barry.
All right, thank you, Jeff. Well, welcome everyone. That was a great presentation by Oscar, by the way. That was really, really good. I love that guy. So, really, what a great event. So many different speakers, all of them excellent. I want to thank Jeff, MetaStock, and Stocks and Commodities Magazine for putting all of this together. And also, by the way, I've been a subscriber of technical analysis of Stocks and Commodities Magazine for, I don't even know how long, decades, I think. It's been so long. Just love it. Look forward to getting it every single month. And that's something I look forward to. And yeah, you should get it too. It's fantastic. Absolutely top quality. So that's why I'm part of this group. I just love to be with good people and providing so much value. So anyway, let me get started on what I have to share with you today. And as you can see there on the slide, trade timing strategies for entries and exits. So when you think about trading, I mean, really, it's kind of all about what? One thing. Where do I get in? Where do I get out? And so that's what we're going to talk about today. Got I'm going to share with you some very specifics too, so you might want to take some notes or screen captures, whatever you can, because we're going to get into some real nitty-gritty details. I will show you exactly where I enter on all my trades. I use the exact same strategy. I do use a modified indicator that you can use on pretty much any trading platform. And so I will look at big meta patterns, head and shoulders, double tops, channels, triangles, things like that. But then when I'm going to actually get into a trade, Then I use this modified indicator, which I'll show you, and you can set up on your charts. Nothing to buy from me here today. In fact, I've got nothing to sell you, so I'll just give you that disclaimer right away. And but I use the same tool, whatever pattern I'm trading. Again, trend trades, trend reversal trades, reversion of the mean trades. It's always the same trigger that I use, and it's very, very specific, very precise. So let's get this party started. So, well, Jeff gave me a little bit of an introduction there, but I am the author. I'm Barry Burns, first of all. I'm the owner and founder of Top Dog Trading. I wrote the book Trend Trading for Dummies, published by Wiley & Sons. I'm sure you're familiar with the Dummy series of books. Got some Readers' Choice Awards from Technical Analysis of Stocks and Commodities magazine. Very proud of that. Also helped some other authors writing with their books, being interviewed, being a participant in some of those. Spoke at the CME, of course, MetaStock, New York's Exchange, on and on it goes. Let's not talk about me. Let's talk about you. Oh, I know you've seen these disclaimers before through this multi-speaker event. That's very important that as people come and go throughout the event, you see this before every single presentation. Now, I'm not going to read every word. I'm sure you don't want me to, but I do want to just say this. People tend to become disclaimer blind instead of ad blind. Disclaimer blind, because they think, oh, these disclaimers are just legalese and it's boring. And I want to challenge you to shift your mindset on that a little bit and think of these legal disclaimers as education, because that's really what they are. This is where your education should begin, and you should go back to it over and over. The regulators have actually done us a great favor by telling us, hey, here's what doesn't work. Here's where people are getting into problems. So as we've researched, we've studied, we've learned why most traders aren't making money. Here are some of the reasons why. So understand that this is really, really for your benefit to help you stop losing so much money if you are. And if you're making money, well, it's still good to go back and look at to help prevent mistakes that, you know, we always have to keep working on all of the time. Okay, so you know what? We're live. I can't see everybody. I can only see those in GoToWebinar, and I believe we're on YouTube as well, and the Lord knows what else. But if you would, let's make it a little interactive. Okay, since we're live, let's take advantage of that. So you see a question there, what are your most common trading problems, struggles, or frustrations? So go ahead and type those in. I'm going to bring up my questions box here so I can see what all y'all are saying. And let's see if we can customize this presentation a little bit for you. Knowing, obviously, I've got a preset PowerPoint here, but if you type in what challenges you have, then as I'm going through the presentation, I'll try to focus on those. In other words, if I'm covering something in the slide that none of you said is a problem, I'll just go through that real quick. If there's something that you say is a problem and I come across a slide that discusses that, then I'll slow it down and we'll talk about that more in detail so I can be of most value to you today. All right, let's see. Oh my goodness, okie dokie, my thing just went crazy. Okay, now I can see. All right, so here we go. Neil, patience. Yes. Yes, that is so good, Neil. I would actually say that of all the qualities that a profitable trader needs, it's patience. In fact, I have a slogan. I think I made it up, but I've been around this industry for so long, talked to so many people, I don't know if I heard this somewhere else or not 20 years ago. But the slogan is this: professionals outpatient amateurs. That is, by the way, one of the, I would say, for many, many people, including myself, one of the top qualities that traders need that they're lacking. And I think it's also expectations that people think there's more high probability trades every day in the market than there actually are, or every week. And you got to be patient. Wow, you nailed it. Good one, brother. Paul says stop loss strategy. Oh, that's easy. Can definitely help you with that. That's a no-brainer for me. Position size, again. But by the way, very important, not dismissing that. I'm just saying that's an easy one for me to address. Paul, position size, yes, that's very important. That has to do with money management. Again, that's just working out the math. Can totally help you with that. It's not hard. It's just having a mathematical formula in place that's responsible, that lowers your drawdowns and keeps your equity curve going up over the long run. In fact, position size and stop loss, they kind of go together. I'm going to just say this real quick because these are such great great comments and such important issues. Not only do I have a stop loss on a trade, I have a stop loss for every day when I day trade, stop loss for every week, stop loss for every month, every quarter, and every year. And those stop losses get tighter. So not only on one trade, but it gets tighter over time. So it's kind of like when you see a trade go up, you're making a lot of money, and the further it goes, you tighten up that stop loss so you don't give so much money back. I do that as well over the course of an entire year. So excellent. Jerry, yes, taking profits too early. That's another common one that I hear. So that's actually not one I hear as much. Usually people bring that up when they're kind of doing well in their journey. They're making some money, but they just see as they look back that they could have made more. So that's on the way to having good problems. That's not a bad problem. It's a problem that does have to be solved, but it indicates that must be making some money. So that's great. Okay, well, thank you very much for that. So here are by the way, I did a survey on this a couple years ago, and I update it every year. And I sent out survey to thousands and thousands of traders, and here are the most common answers that came in. People would say, well, I enter the market. So let's say you go long, and then I get stopped out. And then as soon as I get stopped out, well, then the market goes back in the original direction of my trade. So I got in at the exact wrong time. So that's one common one. Getting out of big moves too soon, so not making the huge profits. That's what Jerry just talked about. Like getting stopped out too often, not knowing the best place to exit a market, trading a trend that doesn't follow through. These are the top 5. So I share this with you because I want you to know that if you're having these problems, it's nothing unique about you. You're not a uniquely bad trader. This is common. Everybody experiences these things. There's nothing wrong with you. This is stuff that we all have to go through and solve. But the good news is, the flip side of it is, we've solved these problems. There are solutions, and can certainly share them with you. My methodology, as Jeff briefly mentioned in passing, is about measuring energies in the market. Now, what do I mean by energies? I'm talking about the energy of money, the energy of money flow, the energy of money moving through the market, the buying and the selling. Now, I use 5 different energies, so I'm just going to give them to you here real quick. Number 1, the first energy I look at is the trend. So that means the direction. But it means more than just direction. Did you know that? The direction of a market move, up or down, is not enough to define trend. Trend is actually defined as the extended general direction. So that's a quote from Webster's Dictionary, by the way. So, and this is also important for trading, not just to be, on point with English language. No, for trading, it's important that we define trend that way, because when you define a trend system, we're looking for a big reward and a small risk. So therefore, we want big directional moves for it to be defined as a trend. So that's the first thing I look at. Second thing I look at is momentum, strength of that trend. Is this trend strong or is this trend weak? Strong trends are what you want, weak trends are what you don't want. So not all trends are created equal. Just trading a trend in and of itself is not enough to make you money. Third one is cycles. So now that we've got a strong trend, a good directional trend, looking like a long-term move, now we say, okay, I've got a setup I want to take, good risk-reward ratio, but when exactly do I enter? When? It's a timing question. It's interesting to me, it's kind of baffling actually, that so many people do all kinds of things with price, support resistance, and indicators that are based on price, and that's all great, obviously, got to look at price. So, but that's a given. And that's only one part of the two-dimensional object we call a chart. It has 2 axes, price and time. So if you leave out the time part of the axis, you are literally leaving out 50% of the information on a chart. Well, we talk in trading about having probability scenarios. How can you have a probability scenario that favors you when you're leaving out 50% of the information? Crazy. Now, if you read a lot of the older books, they talked a lot about timing, a lot about cycles. And I still see it periodically today, but I just don't see it as much as I used to. I'm really big on that, and we're going to deep dive into that today and give you the tool that I use. Support resistance, of course, everybody in their parakeet uses support resistance, as they should. That's like a blockage of the energy of market going up or down. That's where we look for entries, exits, profit taking, etc. And then the fifth and final energy actually is the most important. I use it as a filter for my methodology to keep me out of otherwise good-looking trades. So I look at the higher time frame. So we're using multiple time frames, as a lot of traders do. But I'm not so interested in the trend of the long-term time frame. I'm more interested in the momentum of the longer-term time frame. So I want there to be bullish strength on both time frames concurrently. And that's my methodology. It's 5 steps. It's literally a checklist. Step 1, 2, 3, 4, 5. I take them in that order. That's all I need to do. Now, we do, of course, have to have instruments. So that's the idea, that's the concept, that's the theory. So instruments we need because we want to have a rule-based, objective, measurable way of measuring these energies that I talk about. Okay, so I don't use anything super fancy. I don't use any proprietary indicators, by the way. I just use common things that are in every charting platform out there. So for trends, moving average. For momentum, guess what? Momentum indicator, shocker. For cycles, I'll show you that oscillator that I use. So for resistance, usual suspects, previous swing highs and lows, floor trader pivots, that sort of thing. Fibonacci is good. And for my time intervals, I like to use a 1-to-3 ratio between the 2 time frames. Any further out in the ratio, like 1-to-5 or 1-to-10, the longer term chart is not keeping up, not giving you accurate, timely signals on the short term chart. So, as we said, we are trading to determine a probability scenario. We never have any certainties. When people ask me, well, how do you know that, whatever, fill in the blank, finish that sentence. I don't care what they say after that. Right away I know, they're off track. Because you never know. You never are going to know what the market will do this time on any one given trade. It's not what trading is about. None of us know the future. Well, God does, but God's not telling me what the future of the market's going to be. So all we can do is use a statistical probability formula. And here's how I do it. There's many ways of doing this, by the way. Definitely not saying this is the only way. I've got lots of friends who are traders who do all different methodologies, but they all have this in common. It does give them a mathematical, statistical probability. So my way of doing it is simply to ask, okay, I'm looking at an entry point. How many of those 5 energies of money flow are aligning right now? I mean, the moment I'm looking to take that trade, not an hour ago, not a week ago, this moment. Based on that, I give each trade a setup score of 1 to 5. The higher the score, the higher the probability. Pretty simple. And as Jeff mentioned also, it's kind of like taking each trade to court. I'm looking for a preponderance of the evidence from 5 independent witnesses. So again, I'm going to pause here because a lot of people get indicator crazy. And they just, the way that they try to learn to trade is they just put one indicator on a chart, see if that seems to work. Then another indicator chart seems to see if that one works, whatever that's supposed to mean. But where they fall short is they don't really, first of all, understand the indicator that they're putting on their chart. In other words, and indicators get a bad rap because people don't know how to read them or understand them. So indicators, in a sense, you could actually say, in a sense, indicators are never wrong. Okay, how's that for heresy? Indicators are never wrong because what they really are math functions. And so for the purpose that they were created, just that pure math function, it's never wrong. Math is not wrong. Now, when we extend that to, well, is that going to make you money trading? Then, of course, there's a little disconnect there. But you got to understand, this is the point. You can't just say, oh, well, the CCI is moving up, so I should go long. Or there's a divergence here on MACD, so I should go short. It's not that simple. Really important you understand not just what the lines are doing. Those lines are not the indicator. The lines are graphically mapping the mathematics of the indicator that's filled by data relative to a time frame. If you don't understand what that actually is meaning, what it's telling you about money flow, supply, demand, and balance, then you're never going to be able to trade an indicator effectively, right? It's not just following the direction of the indicator. Okay, so, and the other key point is when you do use multiple indicators and multiple time frames, they must be independent from each other. Why would I put, for example, we'll start with energy number one, trend. Why would I put 2 trend indicators on a chart? I can tell you why people do it. It's because they don't have confidence in it. And they shouldn't have too much confidence in it. That's actually a gut instinct that is accurate. But to have more than one trend indicator on your chart thinking, oh, that's going to make it more reliable that I've got a trend, that is not quite right. So pick one that you like, knowing that one indicator will not make you money. It's not a direct road to making money. It's not enough. So we look at that one, but then we use 4 other indicators that each measure a different aspect of money flow. Now, when all 4 of those align, because they're uncorrelated to each other, now we have a probability scenario. A certainty? No. But a probability scenario? Yes. Preponderance of the evidence. Okay, so a lot of words, a lot of concepts, but I think it's very important. This is what I see people messing up on, is not really even understanding what they're trading. They just throw stuff on charts and look at the lines and think that that's enough. It's not. Understand what you're trading. Trading for money, you're trading for your retirement, you're trading for your kids' college education, trading for your grandkids, your health care, all these very important things. And so you better deep dive and understand the logic behind everything you do, whether it's an indicator, a candlestick pattern, moving average, whatever it is, understand the logic behind it. The professionals do. We do. So you better too. All right. Has to go toward expectation. So here's what the 5 energy method looks like. Let me, let's see. Yeah, that's okay. Now, let me see if I can pull up. There we go. Get a little drawing tool here. We'll use a little spotlight. There we go. All right, make it a little easier for you to identify where I'm pointing on the chart. So here we have a 10-minute chart on the left. We've got a 30-minute chart on the right. Okay, Starbucks. So there's your 1-to-3 ratio between the 2 time frames. So I trade the shorter term time frame. That's where I'm looking for my setups. This is a first retrace in the trend setup. So if that red line there is the 50-period simple moving average. That's it, right? Direction. What measures direction? Moving averages. All right. So I use that. And why do I use 50 instead of, here's another common thing I get. Well, why don't you use like a 30? It's faster. Or a 20. It's faster. You don't want it faster. Remember, trend is the extended general direction. So we don't want short-term moving averages to measure trend. Trend, we want a long-term moving average. Will it be a slower or lagging from price? Of course. Of course. But we're not using it as a leading indicator. We're using it as a long-term trend indication, not fact, but indication. So, and by the way, how do you know you have a long-term trend until after it's over? You don't. Okay. So it's on there. I use it simply because, why don't I use other moving averages? Simply because the 50 SMA is one of the most commonly used moving average. Probably the 50 and the 200 are the most common. And the SMAs, not the EMAs. And therefore, simply self-fulfilling prophecy, mass psychology. The masses are looking at them, and it's as simple as that. I have people who've questioned me on that too and said, yeah, well, it's just a self-fulfilling prophecy. So what do you think makes markets move up and down? You think there's some magical, I don't know, ancient Phoenician numerology at work here in the markets? No. These are people. These are computers. These are algos. These are quants. It's the masses who decide what the market's going to do. Where do the masses come in and buy? Where do they sell? Where do they take profits? So yes, I'm trading that self-fulfilling prophecy of what most people are going to be doing at any given time, and everybody and their dribbles watching the 50 SMA, especially on the daily chart and the weekly and the monthly. I would agree there can be an argument made not so much for intraday, but there's no real consistency that I've seen on intraday charts. So I just have my charts look exactly the same on every single time frame, and that way my brain gets used to the pattern recognition of the setup, so the structure of the chart. So after a lot of reps, I get used to that. I see the same patterns over and over. As you know, my method is a 5-step system. At this point, I don't even have to count to 5 anymore. People who get my course, they get a 5-step checklist at the end of everything. Well, pretty soon, after you do it over and over and over and over and over, you don't even have to use the checklist. You just get instant pattern recognition, look at the chart. Yep, that's it. Okay, so let's go through it one by one right now for everybody here. So trend is up. We've got our first wave high, first wave low, 1, 2. By the way, these are not Elliott waves. Okay, I have nothing against Elliott wave. I've got friends who trade Elliott wave, make money. But for me, I like, well, these are called berry waves, for lack of a better term. So I designed my own wave count method so that it's not so subjective and it doesn't recount. So you can get more than 5 waves with berry waves because it's literally plotting how many waves the market moves. So it helps us to determine when we're into a long extended trend and fulfill that, that slogan we all know, the trend is your friend until the end. Well, how do you decide when it's toward the end, when it's extended? And berry waves will tell you that. So whereas with Elliott wave, you got to go back and kind of force a structure, a 5-wave structure on the markets. And that's okay. Again, very valid. I know how to do that. I did it for years, made money with it. But just, for me, I like this way a little better. Okay, so this is early in a new trend. First retrace in the trend is what we call this trade, and it's wave 2. So we're starting a new trend. Energy number 1, new trend. Good. Early in a new trend, not late in an old trend. Number 2, momentum, stronger weak. There's your momentum indicator. It's coming up. So we've got strength. So 1, uptrend, early in the new uptrend. 2, strength. 3, cycle. This is the cycle indicator that we use. It's modified stochastic. I'll deep dive into that for you a moment. The key to it, though, is this little pattern on K, the black lines there. This little pattern right there, that's called a mini divergence. And that's what gives us a high probability cycle low, that we're not likely to get stopped out below this low here. That's why we can enter. In fact, I would enter right above the high of this green bar. And my protective stop, since that question was asked, my protective stop would go right below the low of that green bar. So I'm risking the range of that green bar. That's it. That's how tiny my risk is on that trade. Okay, so we got the support of the 50 MA. There's number 4 and number 5. Momentum on the higher time frame. Here's our 30-minute chart, 1-to-3 ratio, and that is going up. We've also got a concurrent cycle low here. Also got the support of the 50 MA here. Beautiful trade. And 3, ABC complex retrace, and wave 5. Okay, so that's our reward, and that's our risk. And that's what it looks like on a chart. Oops, won't let me switch without undoing the spotlight. Okay, so I got to take that little drawing tool over there. Okay, so now let's talk about this, what I like to call my cycle indicator. Right? Here we go. Let's get this set up for you on your charts. I'm going to show it to you on MetaStock, but basically it's just a stochastic indicator, good old-fashioned stochastic indicator. But we are going to modify it. So here are the modifications. As you can see, %K, we changed the time period to 5. Now, most trading platforms default that to 14. We're not going to use 14 for our purposes. Nothing wrong with 14, but we're going to use this differently than the way George Lane, who created the indicator, used it. So for our purposes, we want to measure, and by the way, stochastic is also a momentum indicator, but we want to measure just over a shorter period of time to find the nail swing highs and swing lows. Slowing is a moving average of it, and we want to make that 2. And then %D, we're going to do 3 time periods, and again, the method of the moving average will be simple. So go ahead, take a second, write that down if you want, take a screen capture, whatever you want to do, feel free. I give it to you, and then I'm going to show you how we trade it. So after we make these modifications, oh, yeah, by the way, if your different trading platforms might have different names for this. So if in your list of indicators, you have one that's called stochastic full or full stochastic, then that's the one you want to use. If you don't have that, no problem. Then use slow stochastic. Sometimes they switch the words in a different order. Stochastic slow. right? Those are the only two. So you don't want to use, there's so many variations of stochastic, but those are the only two that work for the purposes that I'm going to show you here in a minute. So not stochastic RSI, not double stochastic, not stochastic momentum index. What else? Not fast stochastic. Yeah, none of the others. Okay, just those two. And if you have both, like I think some of them out there might have both, then you only want to use the full stochastic if you have both in your list. All right, now we're going to draw horizontal lines on the subgraph, and you can see them. They're pretty simple: 20, 50, and 80. Okay. Not rocket surgery. So those are the levels that I use. You might have it defaulted, again, your trading platform might default it to 30 and 70, for example. I see that pretty common. We're not going to use it at 30 and 70 for our purposes. And we do want that midline as well. Okay, so again, got to keep saying this because I see people do this all the time. And they will say, oh, okay, I'll take this various teaching, this little indicator here in the pattern that he shows us, and I'm going to see if it works. Well, I'm going to just tell you right up front, be totally transparent. By itself, this indicator is not going to make you money. It's part of a trading system. And a trading system or methodology includes, well, in my case, all 5 of those energies. And by the way, it includes more than that. It includes money management, it includes risk management, it also includes mind management. It includes all those. You need all of them. But we can't get to all of them until we have the parts. And so today, I'm showing you one part. All right, so we only trade cycles in the direction of the trend, early in the trend, not late in the trend. Only trade cycles that have momentum. We want strength coming off of that. In other words, big demand coming off of the lows. And also trade only when the fractal energy is lined. And again, that's momentum on the higher time frame. So, so here we go. Here's the term I'm going to use for the pattern today on the indicator. We're looking to create second chance indicator patterns. So what are these cycle patterns? Well, we got these, what I call second chance indicator patterns. And what they indicate, remember, stochastic is a momentum indicator. And so a second chance pattern is measuring money flow shifting in momentum at a cycle high or cycle low. That's why we put in a cycle high or cycle low, is because momentum is shifting. The money is moving from the strong hands to the weak hands or vice versa. So we got mini divergences. That's what we're going to talk about today. There's also 5 other second chance patterns. So mini divergences, they pop up quite a bit. But again, there's 5 others. I use all 6 of them. Again, don't have time to go through all of them today. But I will tell you this. This is one of the best things I've ever come up with. It works so well that I don't really get stopped out that much. I really don't. When I get one of these patterns and everything else is aligned, I usually, even if I have a trade that isn't successful, it's either a very small loss or just a break even. So that's why it's powerful. That's why it's powerful. But again, it has to be used in context. So let's talk about context. So how to trade cycles accurately. Here's the problem. We have to talk about problems before. And this used to happen to me also. So, okay, 50 EMA is downward, a downtrend. This black line, that's the 15 EMA, by the way. I think somebody asked that. So 15 exponential moving average. So what used to happen to me all the time was I trade downtrend, retrace here. Okay, there's our stochastic. Looks pretty good. Goes to the top of the range. There's your 80 line. K crosses below D, and I would go short. And it would go down a smidge, and then it would go back up, and I'd be stopped out. And then it'd go back down, and then we had our big trend. Well, my mentor at the CME, he said, in fact, the first day that I worked with him, the Chicago Mercantile Exchange, he said, Barry, retailers are often right, but at the wrong time. And I knew exactly what it meant because that was me. He was, talking to me. And so the direction is right here, but it's at the wrong time. This was the right time to take the trade. So you'd run the risk of either getting stopped out or the market moving against you dramatically and get fear as you're watching that, wondering how far should I let this go. Also, your risk here is very small, but your reward is bigger than it is here. So you gotta wait for these ideal times. So let me show you the stochastic momentum shift pattern here. Little mini divergences. So notice, now we use an uptrend. 50 EMA singling up. We retrace to the 15 EMA. We get a little lower low on price, just a little bit. And now look at KK as the blue line here. We get a higher low, very clear higher low. Right? I call these mini divergences. It's just one of the 6 second chance patterns we get on this modified stochastic indicator to nail entries. And that's what we're looking for. Momentum comes down. Now price comes down just a little bit, just barely a couple pixels below that bar. But on momentum, we see the mathematical formula saying, oh, no, there's a shift now of supply and demand. Can't really see it very well on price. All we have there, in fact, let's get this active again, a little narrow range bar. This is not like an engulfing pattern or any big dramatic hammer or anything to have a great candlestick entry. And so what I do here, just to be very specific, I wait for K to angle back up, look for the bar right above that. Now enter above the high of that bar. My protective stop goes below the low of that bar. See how little my risk is? That's it. My rule for stops, my general rule for stops, that's my specific rule, right there, always the same. My entries are always the same based on this. My stops, my protective stops are always the same. 1 penny paper tick below cycle low, and that's how I define a cycle low. And this is how I keep my risk small, let my winners run. Also, the reason that it works so well is because, again, momentum strength has come into the market. And so this is why I don't get stepped out too often on my initial entry. And of course, we add trailing stops and so forth. But this just pushes it out, catapults it out. And when I get real narrow range bars like that, oh, love it. Why? Because that means my risk is even smaller. Okay, so let's see. We got that. Good. Now, that's a trend trade. Like I say, this can work for different. I use the same entry for all, or entry technique, I should say, for all types of setups. So here's trend reversal. All right, so now the trend is your friend until the end. It's no longer a friend. It's been going down for a long time. Just keeping my eye on the time here. So now we're saying, oh, we're extended in a downtrend. Trend's no longer my friend. So if the trend's no longer your friend, that doesn't mean you don't trade necessarily. You may still get a counter trend trade. Now the odds are that the trend will reverse or at least stop. So that's what we're looking for here. Counter trend trade, lower low on price, higher low on K. There's your momentum shift. This time we do get a big wide range bar. So I put my entry right above that. I do put in hard stops, buy stops, by the way, and then just wait for it to get filled right on the market. I don't chase the market, make the market come to me. I tell the market I'm getting in here or nowhere. That's it. Here or nowhere. Okay, so boom, and again, potential stop goes right below the low of that bar. Takes a little time to go up, and finally, oh, look at that, new trend to the upside. Trend reversal trades are the best risk-reward ratio trades there are in the world because you're getting in before a confirmed trend. Remember, the 50 MA, yeah, it's slow, yeah, it's lagging. So trend reversal trades get you in before a confirmed trend. And this is how we do it. Oh, started almost broke out in song. This is how we do it. And so low risk and then higher reward because even before the trend is confirmed, you're in, and then you stay in when that trend is confirmed. Now, I will say this, they are not super high win-loss ratio trades because just because a trend ends does not mean it's necessarily going to turn around and start a new trend in the opposite direction. Markets aren't constantly trending up, down, up, down, up, down. Quite often they'll take a break and just go sideways in between trends. But even if it does that, still don't lose money. That might just be a small winner. And then I just wait for the next one, the next one, the next one until they get a big reversal trade. Alrighty, let's see here if there's anything else I wanted to say about that. Let's look at some questions here. Oh, that person left. Okay. So they're asking about the Pakistani market. I don't know the Pakistani market, so I'm sorry. I can't answer it because I don't know. I've never traded the Pakistani market. Let's see here. Okay, good. By the way, if you're asking questions on YouTube, I apologize. I can't see those questions, so I'm not ignoring you. I just don't have the visibility. So let's see. Looking that one. I might want to go back. No, okay, good. So here we were in consolidation. So here we had an uptrend, and then the trend went away, but it didn't reverse right away. And so it consolidated for a while. And again, we can look for momentum shifts even inside of consolidation to start a new trend before that new trend is confirmed. So same thing here. Higher high on price. Looks like it's starting to move up. It is moving up a little bit, but not on strength. Moving up on weakness. Look, lower high on K, the blue line. So therefore we say it's moving up. Trend is up on weakness. It's a weak trend. If you trade a weak trend, you will most likely lose money. And so we get this early signal, momentum shift, comes down a bit, and then all of a sudden, kablambo. Wow, there's your big win. By the way, kablambo is officially recognized by the, I don't know, International Global Technical Analysis Association of Fictional Terms. So that's a great trade. Again, where's my entry? My entry is 1 penny below that break. Now, people often say, don't you need a red bar, or in this case, a black bar to go short? No, nope, I don't. This is more reliable to me. This is just moving up. These are very narrow range bars still. So whether it's red or green or white or black, isn't really that significant. The open and the close are really close to each other, narrow range bar. So therefore, I can just, I'll enter on this bar, just to be clear, putting my sell stop below this bar. So it gets filled on that bar. And then my stop, it goes below the high of that wick right there. So yes, it goes above the high of the wick, not just the real body. Okay. All right. Now, let me go back one more. This is what did the wrong thing. Good thing you don't have to be a PowerPoint professional in order to do this. In fact, let me go back a couple. No, that's okay. Okay, anyway, if you remember, I don't have to go back to the numbers. We changed K to the value of 5, right? K to a value of 5. And the reason we did that was because there's divergences out there that people teach. And, they can be good, they can be fine. But I'm not looking for normal divergences. Normal divergences would be between swing highs, like between there and there. That's not what I'm doing here. I'm not saying it's not good. I'm just saying that's not the purpose of this particular tool. The purpose of this particular tool is to find a momentum shift in 5 bars. 1, 2, 3, 4, 5. See how mathematical that is within 5 bars? And that's why we changed K to a period. In fact, if you look at your parameters on your indicator, you usually say length or period. And that's telling you mathematically it's looking back 5 bars. So that's what we want. That's why we want to use the 5 instead of the 14, because we just want to look for it within a single swing low or a single swing high. Okay? Where's a swing high? Yeah, single swing high. Again, 5 bars. 1, 2, 3, 4, 5. And so that's why we changed it to 5. It's not arbitrary. It's mathematical. Right? And I put in 5, you put in 5. That's like a calculator. You put in 2 plus 2. I put in 2 plus 2. We're both going to get 4, 99.999% repeating of the time. And the only time we don't is if the battery is low. So that's what is great about indicators, is that if you use them correctly, and you understand the mathematics behind them, you now have a rule-based mathematical measurement of money flow. And you take some of those that are measuring different aspects of money flow, trend, cycles, momentum, etc., from different angles. Now you've got a high probability to trade where all of them align and are mathematically measured. So that's the key. Okay, so let's talk about summarizing everything here, and then I got one more thing to show you, and then I'll turn it over to Jeff, and he's got something to show you as well. So the summary of high probability trading is we're just waiting for the alignment of those 5 energies. And here's my whole trading sentence, or my whole trading system in one sentence. So I'll give you a second to write that down if you'd like. One sentence. You want to keep everything as simple as possible, but no simpler. It's a quote from Einstein. I don't think he was a day trader, but it does apply to trading in my mind at least. So we got to keep things simple because we don't want mental overwhelm. If you get mental overwhelm or overload, then it is hard to make decisions. It slows you down in your trading, creates uncertainty, and uncertainty creates fear, and you can't trade effectively from a position of fear. So we need things to be simple, but we also need a little bit of complexity just to make it statistically significant. Like I say, just trading in the direction of any moving average, whatever it is, not going to make you money. Okay, it's one indication, one piece of evidence. So there's my sentence. I'll read it. Trend. You can even add early in a new trend. It's number 1. That is strong. Number 2, that's your momentum. The right time, as far as cycle indicator comes in, with support at your back, support or resistance levels, and then finally confirmed by the bigger scale. That's momentum on the longer term time frame. Of the 5 energies, the first 4 we look for on the shorter term time frame. That's what we call our setup. We get all 4 of those aligned with a pattern like head and shoulders, trend reversal, triangle, wedge, whatever patterns you like to trade, saucer. Okay, we get all 4 of those aligned. Great. We've got a great setup on our chart. But we need a filter. Okay, we need a breaker switch, so to say. And that is when we go to the next higher time frame and we look at momentum, not trend. Because if you look at trend on the longer time frame, trend's already a lagging indicator, and now it's on a 3 times slower chart. So it's even more lagging. So it doesn't help me much. I want to know momentum on the longer term time frame. That's what makes the markets really haul patootie, is momentum, strength. And it's all about supply demand. If there's more demand than supply, price goes up. I want to see that on 2 different time frames, and then go in that direction and that direction alone. And if, by the way, if there's not much momentum, even though all the other things look good, I'm not going to trade because there's no strength in the money flow. All right, so it's very robust and adaptable. This can work for, I don't know about the Pakistani market for sure, but any market I've ever traded, it works very well for. I will just say, I will give one caveat. I personally don't trade this with penny stocks, pig sheets, anything that doesn't have a lot of liquidity. I'm generally looking for a lot of liquidity, a lot of volume, because again, that's where the momentum comes in. We want professional players in the markets we trade because they're the ones who provide, the mega liquidity. And also they're smart money, so they trade in an orderly fashion, and you can help, doesn't prevent you, but it helps avoid choppy markets when you've got people who are actually trading systematically and not chaotic. So I've traded this and still do with stocks, commodities, options, currencies, futures. I do it on day trading and swing trading. I even do it with investing. I also incorporate fundamental analysis in my investing. But for day trading and swing trading, I only need these 5 energies. And it's just a matter of using different time frames. It's simple. It's objective. I mean, god darn, counting to 5. So I'm going to turn it over to, let's see, yeah, I got another minute here. I love to at least share a little bit of this, and then I'm going to turn it over to Jeff. So on MetaStock, they have done an amazing job in integrating the Top Dog trading system with their software. And I worked with them on this personally. So I worked with the programmers, impeccable people over there. It's just amazing. So here's what they did. They have custom programmed all this into MetaStock, every which way you could think of. So these wave counts, the berry waves, they got them on there. These will plot automatically if you get the MetaStock program with the Top Dog trading add-on. So you don't have to sit there and count or write on the chart to keep track. No, just automatically plots. It will automatically plot support resistance levels. You've got your volume down here, your trend, the indicator that we use plotted right there for you. Now, here's what's super cool. And there's much more that they've included into the charting part. But I wanted to also share with you this. So they have commentaries. This is not available anywhere else except in MetaStock. So you look at the commentary, and by the way, the commentary is where that blue dot is, right? This will show up on the hard right edge of the screen. So that blue dot, and you click on that, and it comes up, and it gives you all the details you need here. So what setup do we have? We have a wave 9 reversal to go short. That's an extended trend. So the trend is no longer a friend. It goes down. This one doesn't reverse right away. It just goes sideways. But we can still make some good money. Remember, entry just on the width of one bar right there. And down, down, down. That's still a good, what, 1 to 3 risk reward ratio? So it tells you the basic setup. We have a wave 9 with 50 SMA angling up. Percent D has been up to 45 or above. All the details here, which I didn't have time to cover today. And then the commentary setup again gives you the details. Confirmation gives you the details. Entry gives you the details. Protective stop, targets, all of it just spelled out right for you, right there. So, and Jeff's going to show you even more about the details that are provided. But my gosh, I've just got to say, I have been so impressed working with MetaStock and other programmers who are able to do this because, like I say, we haven't been able to do this on any other charting platform. MetaStock's the only one. So let's see what else I got here. Yeah, before I turn it over to Jeff, I wanted to give everybody something for free gift from Top Dog Trading. And by the way, there's my email address. If you want to write me and ask me any questions, just feel free to send me an email directly to me at barry@topdogtrading.com. I'm going to give you one of my favorite trade strategies called the rubber band trade. You can actually, well, I hope you can go make money with this. That's my intention. Can't guarantee anybody's going to make money, but I'm not going to charge it for you or charge you for it. I'm just going to give you this trade setup, which is one of my personal favorites. I still trade this every day. I see it. I scan for it all the time. Every single day I scan for this trade setup. It's called the rubber band trade. It's a reversion to the mean mathematical model. Notice everything I do is based on mathematical models. And so I'm going to give you it's got 5 videos in there in a little mini course called How Pros Trade Different Than Amateurs. It includes the setup. Everything you need to make money with it is included in there. Also, back to the cycle indicator. I only had so much time to talk about it today. I did a live webinar about a year ago where I went through the whole webinar was dedicated to that. So it's recorded now. I don't do it live anymore. But if you want even deeper details without having to pay anything, yeah, an hour-long recording of that webinar, feel free to do that. In fact, you get everything by just going here, topdogtrading.com/free. And you get that webinar about the indicator, you get the free course, you get the rubber band trade strategy, topdogtrading.com/free, and of course the price is, well, free. Okay, so hopefully I didn't take up too much of your time here, Jeff. I want to turn it over to you, my friend, and I know you have some things that you want to share as well.
Yeah, great job, Barry. Thank you. Oh, can you hear me?
I can.
Oh, okay. Great
Yes,
job.
I was just
Appreciate your coming in.
mesmerized by the soothiness of your voice, the soothiness. You know, my problem is, a lot of people don't know this about me, but English is not, well, English is my second language. But my problem,
I didn't know that.
Yeah, but the problem is I don't have a first language. So it's really difficult to communicate. Yeah, challenge every day of my life. It's a cross I have to bear. Yeah.
Well, thank you, Barry. I appreciate your time today. Great job, too, by the way. We appreciate it.
Thank you. My pleasure.
All right. Let's go ahead and kind of, yes, I do want to kind of talk about the Top Dog Trading Toolkit and the work that we put into kind of making it all work and all that kind of stuff. It looks great. I love kind of all the stuff that kind of Barry incorporates in the Top Dog Trading Toolkit. And I've got a chart up. I wanted to just point out that it's going to label and identify all of those waves. So, for example, right here, anytime you're in an uptrend, you get the 1, 2, 3, 4. These wave counts are dynamic. Here's a failed fifth wave, a failed fifth wave, and then you finally had your fifth wave set and your sixth wave. It's going to identify patterns for you. I do have the expert advisor in the commentary up. You'll notice that right here we had the first wave, and then you have right here there is an entry signal. If you look real close there, I'm going to move the commentary over there because I just want to talk a little bit about how this works. Right here, this is an entry signal called the first retrace in a trend. You're during your kind of the first choice of your trend, you wait for a bit of a pullback, and this will show up in your chart as long as the conditions are met. Okay, we had a question in YouTube about how you actually get what your initial exit strategies would be and that kind of stuff. And that's actually fully addressed in the commentary as well. I love the fact that the commentary is really, really specific about these things. So right here, you see that we've got the first wave retrace in the trend. Your initial entry should be 144 and your initial stop would be 139. So you're going to give yourself about a 5-point stop loss there. For your targets, the first cycle high, watch where it coincides with the resistance level, the second cycle high, and a trailing stop of your choice. Now, in addition to that, one of the things that we incorporated in with this commentary is we had put so much commentary into the program that we actually ran into a limit. And so we actually did something fairly unique about that. We took a lot of the language and the text that we wanted to put into this commentary, and we put them in HTML files. So it says for full analysis of this signal, please click the link below. I'm going to go ahead and click on that. And what that's going to do is it's going to open up a full definition for all of these patterns in Chrome. So right here, you can see what the setup is, what the confirmation is, how they're calculating the entries and the initial stops, where the target should be, a bunch of information about increasing your probability for success, and any additional commentary that has to go with that. And that's true for all of the signals, whether it's like your first retrace in the long, your second retrace in the long, the rubber band trade, any of those actual signals are going to have that kind of that full definition commentary to them. Also, all of them, if we go over to the second signal right here, the second retrace in a long, you're going to have the initial stop, the targets, and again, a full analysis of the signal that you can kind of drill into. Does a very, very good job. And I like the fact that we put so much in there that we hit a program limit. I like the solution that we came with to be able to still provide all of that information. It was really, I thought, a creative solution to kind of doing it. So in a nutshell, the Top Dog Trading Toolkit is going to use various 5 energy method, trend, momentum, cycles, support and resistance, and scale. All of those are kind of built into the software and the manuals, and it's going to find all of the patterns, whether you're looking at new trend patterns, momentum patterns, trades for when the trend has been in a trend for a long time. There's some reversion to the mean patterns and some triangle pattern trades. So this add-on is only $4.99. Here at the summit today, it's $399. We also will include a free trial to MetaStock if you need one. You can get that by giving us a call at 800-882-3040, or you can chat online with us at metastock.com/saleschat. It is also the last add-on that's included in our Summit Action Pack. So we've had some great speakers today. You know, Steve Bigelow's Candle Profit System 2.0 is going to be in here. Vince Vora's Victory System is going to be in here. The Patterns for Profit by Rick Sadler. Barry Burns' Top Dog Toolkit. The 3 months of Learn MetaStock. Your Unleash the Power of MetaStock. 2 years of Stocks and Commodities. All that's going to be kind of put into this package. It's normally $5,000, but if you buy it today, it'll be $1,895. And you can do that. You can give us a call at 800-882-3040. You can chat online with us at metastock.com/saleschat. You can also sign up online at metastock.com/summitdeal. Again, this is a great collection of products that are being offered here today. Most of them are backed by our money back guarantee, so you can try them out. If they don't work for you, if they don't help you, become a better trader or find more successful trades, you can get a refund for everything except for the any subscription products. In this case, the $99 Learn MetaStock 3-month subscription. So I'd encourage you to give it a try. I absolutely wouldn't trade without MetaStock. 800-882-3040 or metastock.com/summit deal. 1 second. Okay. All right. There we go. And with that, we will say thanks to Stocks and Commodities Magazine for sponsoring today's event. They do such a great job, and we really appreciate their support. And they do. They really help us get the event out there. They have a great magazine, and they'll give you 2 free years if you do that summit package. If you just want a free issue, go to metastock.com/traders-summit, traders-summit, and sign up for a free issue right there. So there you go. Timonian says, thanks, Barry. I should actually open up the questions for YouTube just in case we have any coming in. Doesn't look like it. Let's see, what time are we? We're doing really good on time, actually. So let me go ahead. We're going to introduce to our keynote speaker today, Hema Reddy. Hema does a great job. She's going to be talking to us about her favorite indicator and how we've kind of put it together for MetaStock. She does a really, really good job. We've invited her a lot because we really like her. So Hema, how are you doing today?
Hey, I'm good, Jeff. How are you doing?
I'm good. Let me go ahead and send you the controls here. Let's
Wonderful.
see. There you go.
Yeah.
We've had a great day.
This sounds like it.
We haven't had, and I'm not even going to say that we haven't had any technical difficulties out loud because, you know.
Why you got to go and do that, Jeff? We were smooth rolling into this. That's okay. That's okay. I am going to bring us home. And yes, hopefully smooth sailing. So
yeah, I have a feeling we're going to be just fine. We can already see your screen. You sound amazing to me.
Great.
So
awesome. Well, I'm taking a look at, okay, thanks, Jeff. I'll take it away from here. Awesome. Well, like Jeff said, I've been here with the MetaStock group a couple times, and always great to be back. So I'm just trying to get my little question box in place so that I can see all your lovely names and imagine the faces behind them, I guess. So first, I want to make sure I know where you guys are dialing in from, what you trade. Either one of those questions are up for grabs now. Because as you can see here, I'm going to dive into Not Your Mama's Momentum, how to profit in any market at any time frame. And by typing in where you are dialing in from, what you trade, also helps me know that I'm coming through loud and clear. So I think I've got the chat working here. I'll see if anybody's dialing in, and we're going to get started. Okay. I'm just scrolling down. All right. So how to trade momentum. You get a sneak peek behind the one Jedi indicator that helps me accurately predict turns and large moves in any market on any time frame. So let me ask you, have you ever wondered what it would be like to have an expert analyst in your back pocket? Have you ever wondered what it would be like to finally trade with confidence? Have you ever wondered what it would be like to finally make enough with trading that you could live the life you deserve? Would you like me to share an easy way to amplify the power of an indicator that's in every single trading system out there? Would you like me to share an easy pattern that allows me to predict trends and price and momentum for you? Would you like me to share an easy way to trade futures, stocks, and options? All right, how many of you want to get as much as possible out of our time together? All right, I see we've got Marcel trading FX. We've got Con from Toronto. Awesome. Okay, I want that for you too. For most of you here with me today, this is going to be a long-term relationship. Once I show you how simple this is, once I show you how easy it is to consistently extract money from the markets, once I show you how fast your business and life can grow, you'll want to hang out with me for a lifetime. Now, in a moment, you're about to discover how to make money with futures, stocks, and options, even if you suck at picking them yourself. You're about to discover how to capitalize off making trades at the best prices and the best times. In a moment, you're about to discover how to catch market turns and ride the price waves up and down in only minutes a day. Would you like me to show you that? All right, awesome. I promise that by the end of our time today, you'll know everything you need to pick the best trade, when to enter, and when to exit in only minutes a day. Would that be okay if I pull back that curtain for you? Great, because here's the problem. Many traders are making it way too complicated. Many traders are getting hammered by the trends because you haven't found a consistent way to produce profits by yourself. And it's not your fault. They make it complicated. As you listen to me now, know my intention is to help you fix that problem because you're ready to take action now. Notice, I'm going to be absolutely upfront and transparent with you today. I'm going to show you current case studies and figures today. As you all know, trading involves risk, and it's your responsibility to evaluate any information, opinion, advice, or other content contained within my presentation. Your results are up to you. I can't predict them. I'm not going to predict them. Anyone who says they can, guys, is lying to you. I don't know your trading plan, your account size, or markets. I can only show you what's working for myself and others. Your success is up to you. So who am I and why listen to me, right? Well, if you haven't been following me for a while, here's a mercifully short introduction. I'm Hema Reddy, and I'm originally from New York, the hotbed of the markets. And I started out at age 16 learning futures trading from my dad, a successful trader in the Gann style of trading. In fact, my dad was so far ahead of his time that he got a chunk of Amazon stocks right at the beginning. Then I became a certified CMT working as an analyst at Piper Jaffray before going it on my own to help traders directly. And over the past 20 years, between my professional analysis on Wall Street and my international publications and my proprietary analysis and education, I've helped hundreds of thousands of individuals create a sound plan for their financial future. Now, I'm an international speaker presenting to institutional portfolio managers and analysts, as well as individual traders. And I've been blessed to appear in the Wall Street Journal, Barron's, Bloomberg, Reuters, The Street, Benzinga, and all the media alphabet. I'm also the author of The Trading Methods of W.D. Gann. So how did I get here? Well, that's quite a story. Is it okay if I take a few minutes and tell you my story? It'll go by like that. Okay, so here we go. Now I'm a successful trader and educator, but it hasn't always been like this. Years ago, life seemed great, all right? I was in the center of the action as an analyst with Piper Jaffray and making them a ton of money. Starting work at 5 a.m., working late, and burning out quickly. Is anyone else a corporate cog making someone else rich? I know, right? I thought there must be more to life. I mean, the money was good, but I never got to see my family. You know what I mean, right? I started becoming a ghost in my own life. I'll never forget the moment the bottom dropped out of my world, when my beloved dad and mentor died suddenly. At first, it felt like my whole world was crashing in. I had to leave my job and tend to financial and legal family matters. But then I realized that this was my ray of light, my hope to get out of the corporate grind, and I seized it with both hands. You see, while I was apprenticing with my dad to learn the markets, I had started a futures report that I called my Skinny on the Mini. It started out as just another exercise, but soon my dad started making money with it and relying on my little report. And then I shared it with other traders too, and they were benefiting. But all of that stopped when I joined the corporate world. Conflicts of interest, am I right? And all those years, those traders hounded me to get the report back. So when I had to leave my job and take over my dad's accounts to trade for my mom's future, I realized that it was time to bring back the Skinny on the Mini and reclaim my life. So I sent out the call to my former subscribers, and they said yes. They would love to get back my report that ROI'd on average 7 times out of 10. They couldn't wait to leave the hard work to me again. The result? I had time to trade my dad's and my accounts again. I started maximizing the trading methods of W.D. Gann and became the leading expert on Gann. I started teaching others the hard-earned secrets that I had learned from my late father. And in a moment, I'm going to share those very secrets with you. Because what I've discovered is that trading equals freedom. Trading equals what? Right, freedom. Type a Y for me in the chat, guys, if you're seeking freedom, time freedom, money freedom, location freedom, right? I mean, there's only so much time in each day. And when I found the system, I got my time back and my family back, and that's freedom. Clearly, that's what we all want, right? Freedom. Wouldn't that be amazing? But clearly, there are challenges. Okay, many traders lose money because they don't have a proven system. Trading often feels complicated and overwhelming. Often it can be confusing, right? Well, they made it confusing and complicated because you don't have a simple proven system, because what I'm about to share wasn't available until now. And now that it is, you've got to have your 4 zones RSI coverage system. And you'll immediately notice how much easier it is to make money trading future stocks and options. And I'll show you that a little later. So what's different about the 4 zones RSI coverage system? The 4 zones RSI coverage system gives you my Jedi indicator and system that helps you accurately predict turns and large moves in any market on any time frame. But more on that in a bit. First, we're going to dive right in. So trading momentum can be easy, but first you need to understand how it works. So we're going to head to a Formula One car racing track that will have you understanding momentum in no time. So let's put ourselves in the driver's seat here, all right? You're at the starting line of the track, you rev up your engine and you go. You pick up speed really quickly or accelerate on the straight runs of the track. You see a turn coming up and you prepare accordingly, right? You ease off the gas to slow down or decelerate, even if it's just a little bit. So you can have more control as the car whips to the other side of the turn. Then after you make the turn and the road straightens out again, you hit the accelerator once more. Are you getting the idea of how you'd accelerate and decelerate on this track? Type a Y, guys, in the chat if you are. Okay, awesome, because then that means you know exactly how price momentum works. It's that simple. So see that helicopter up in the left-hand side here? Let's jump in the pilot's seat and look down on the track. Once you do that, this is what the racetrack looks like, right? We're getting a bird's eye view of it. Now you see the racetrack becomes price as you see it on your stock charts. And momentum is generally plotted on the bottom as a subchart. Making sense? All right, so when price is trending higher, you've got upward momentum that's improving. Now that upward momentum generally begins to slow down and peak before price does, making momentum a leading indicator. Now during falling prices, there's generally falling momentum that's becoming a more and more powerful force to the downside. But when a price bottom is approaching, you usually see momentum bottom first. Therefore, momentum indicators can warn you about hidden strength or weakness, giving you a heads up, especially when it comes to potential market turns. Making sense, guys? Are you getting this? All right, awesome. And now we're going to dive into the indicator. But first, let me share with you results from our trading family. Hema, I value your insights. Your momentum indicator is an integral part of what I put together. I believe I'm ready to go from paper to live trading, said Jim. So now that we've made momentum easy to understand, in a moment, I'm going to show you how you can make money trading momentum. But first, you guys want the Jedi secret, the Jedi twist that I use? All right, cool, because I'm going to let you peek behind the scenes of my trading and show you how momentum moves through markets that you know using my special Jedi indicator. And that is called the RSI Power Zones. And you can use it on any market in any time frame. So take a look at these two columns here, right? On the left, we have a variety of markets, active markets, okay? They're liquid, they have participation. So you've got your indices that could be the E-mini S&P, which happens to be my baby, the NASDAQ, or maybe the Dow. Stocks could include FANG or other tech or other sectors and industries as well. ETFs, I have a lot of coaching students that trade the SPY. FX is your currencies. Bonds is your 10-year, your 30-year, or anything smaller. And commodities is wheat and gold and everything else. So tell me, what market and what time frame combination do you trade? What's the setup that you're generally looking at up on your charts? For me, it's the E-mini S&P 500 on the 3-minute chart. All right, you guys sharing with me what combinations of market and time frame you trade? It's good for you to know that I'm speaking your language here, right? Because I'm really going to show you how the power zones work on a variety of markets and time frames. All right, awesome. So let's look at how the RSI power zones work on a market that you all will be familiar with, whether you trade it or not. And let's look at it on a long time frame. Okay. So it's a commodity on a monthly time frame. So that's oil. We're going to look at the symbol CL on a continuous contract chart. Several years of history plus a snapshot of it today, all right? So we have these 4 zones on the RSI that I need you to be aware of. This is what's making up the power zones. So the 2 lower red lines make the RSI bear support power zone. The 2 lower green lines make the bull support power zone. The 2 upper red lines make the bear resistance power zone. And the 2 upper green lines make the bull resistance power zone. Now, looking at all of these zones, we're going to look at the history of price action versus what happened in momentum with the power zones, all right? So back several years ago, we had this run up in price that took us to these crazy new highs above $200 a barrel. And that strong advance higher was accompanied by the RSI power zones on oil rising from the bull support to the bull resistance power zone. Okay, this is what was evident on the monthly time frame. And knowing the full use of RSI power zones would help you navigate that move. Well, then there was this sudden sharp fall, and it took out previous lows in price. And when that happened in price, the RSI power zones fell to the lower bear support power zone. Now, I was an analyst in Wall Street watching and analyzing oil and many other markets at this time. And I told my clients, I don't think this is a one and done fall here. I think oil is going to be in trouble for some time. And that's exactly what unfolded. Now, just because the market doesn't keep sailing down doesn't mean that it won't continue in that direction. And here, what happened was a multi-year pause, a sideways range. Do you ever get yourself caught up in markets that are in sideways ranges, whether they're just a few days, few hours, or many weeks? Well, the thing is that here, with this oil range that developed, notice that the yellow highlights are marking every single price high that formed and how they coincided with a peak in the consolidation, tied in with the bear resistance zone. The two upper red lines were capping the momentum action. So this was another clue as to the future direction of the breakout. And again, after falling to $100 a barrel at that time, people thought, there's no way it's going to fall lower. But it did have room to go lower, and I was prepared for that. Now, here's what happened. We had another drop, quite substantial, into the first yellow line, and then a second low, with both of these accompanied by the RSI pushing down into the bear support power zone and continuing to pressure there. This made it easy to maintain a selling mentality instead of getting excited every time some random level got oversold, whatever that means. So from here, was there a recovery? Absolutely. But even the recovery on its first attempt higher saw the price cap when the RSI hit the bear resistance power zone. So where does this bring us today? May 10th, 2021. So where you see this line and this chart ending at the yellow, guys, that's where I'm picking up here in this gray line, okay? This is what's unfolded since then. Do you see how that cap in the bear resistance power zone at the gray vertical line led to the next downfall in oil? Being aware of not only the power zone, but also the setups in the RSI helped you be better prepared for it. Now we've been recovering higher, and currently things are looking promising for oil to continue higher to recent multi-year highs. So this is the RSI power zones as applied to a commodity that we all watch. We all know, whether we trade it or we just see it at the gas tank, right? And we're using the monthly time frame because of the importance of its history. So can you see how looking at the RSI power zones on oil might have helped you better navigate trades in oil or markets related to it? Right? Type a Y in the chat if you guys are seeing this. And now let's take another look in here, okay? Now let's look at another popular market, an ETF on a weekly chart. Here we've got the 4 power zones again. And here we have every candlestick representing 1 week of price action. Now notice, there was sideways action on the S&P for like 2 years, right? Just going directly to one side. Then price broke above the dash line and pulled back. Now when it pulled back to that exact time there on the yellow vertical line, you would have been ready for that only if you were using RSI power zones, but not if you were just looking at the traditional RSI approach. You would have totally missed this. And from here, from the yellow vertical line, there was this surge higher, huge advance. And that whole advance saw the RSI continue to improve, ultimately reaching and extending beyond the bull resistance power zone. So the movement from one green zone to the other helped you stay looking at the long side, looking at the buy moves in the strong advance. Now from there was this really sharp fall, this sharp drop. In 2 weeks, we took out like the past 10 weeks of price action. But all that happened in the RSI power zones is that it went from the bull resistance power zone down to the bull support power zone, basically relieving itself of those overbought conditions. It's like a pause in the race, all right? When a marathon runner stops to get a cup of water from a bystander, right, or a fan on the side, they're not out of the race, they're just replenishing. That's what this was here. So when I was riding the skinny on the mini at this time, and everyone was kind of freaked out by this price decline, I said, hey, this is just a sign that we're going to go sideways for a few months, and the uptrend is likely to resume. And that's what happened. Sideways tradable moves showed on the daily and intraday charts, all within the weekly chart of the SPY, just kind of relieving itself of those overbought conditions, moving from the upper green zone to the lower green zone. From there, there was a break higher, and it coincided with the RSI power zones resuming higher once again, lifting out of that bull support power zone, those two lower green lines. And these relationships between price and the RSI power zones are evident in a variety of markets and timeframes, which we're going to continue to see here today. So where is the SPY as of today? Coming back to this chart, what happened in between? Well, look at where this chart ends, and that's where I pick up here in this gray vertical line. Okay, everything after the gray vertical line, guys, is after the charts we were just looking at of the SPY. So notice a few things. We had really crazy volatile action these past few years, right? This move lower, then this advance higher, then this other move lower. Using the RSI power zones would have helped you better navigate all of this because it's making more use of the playing field, if you will. And with the most recent action on the RSI power zones, here we are in a weekly chart, but a couple weeks ago on the daily chart, there was a setup that indicated to me that we were going to have further upside. And even though the market was at a pause, it was going to break higher. So you can use not only the action between the zones, but setups that form as well. And I'll talk more about setups in a moment. Can you see how looking at the RSI power zones on the SPY the past few years might have helped you better navigate your trades in the SPY or the markets related to it? Type a Y in the chat, guys, if you see that. Okay, great. Now you've gotten to know the RSI power zones. Let's take it to the next level. Now we're going to dive into the trade setups. But first, let me share with you more results from our trading family. Susie shared, my first month using RSI power zones was also my best trading month so far. All right, by now you're getting it. So we're going to dive into my proprietary 3-step approach to using RSI power zones to finding great trade setups. I'm going to show you actual setups that I use and share with my trading family. So here it is, all right? These 3 steps, you're going to want to jot them down, guys. Using RSI power zones to identify trade setups. Step 1, review the chart and assess the price trend. Now you might be thinking, hold up, Hema. This whole time you've been going on about momentum. Why are you talking about price as step 1? Because, guys, price is king. Price is the source of data from which momentum is derived. And we will benefit more from trading momentum if we are very clear on what the price trend is. So when you make this assessment, and I'll show you how in a moment, you'll have 3 choices you end up with, right? Uptrend, downtrend, or sideways. And yes, sideways is a type of trend. You can be prepared for the next directional move if you know how to monitor the momentum of the sideways action that's happening now. Okay, everybody with me? You got step 1? Awesome. Step 2, evaluate the RSI power zones reading. Now, this is specifically looking at the RSI value relative to the 4 zones. Okay, each zone has a distinctive upper and lower border, and there are 4 total zones, as you've seen. There is some white space in between those zones, and I call that no man's land, where RSI is just hanging out. They are not the most actionable parts of the zones, and you're going to see that in our examples coming up. All right, step 3, determine the presence of an entry signal between price and momentum. And usually the best signal comes from when momentum and price are not connecting or jiving together. That's usually an opportunity that we can take advantage of for profit. So you've got your 3 steps to using RSI power zones to identifying trade setups. And I'm going to repeat these steps, so you're going to have them down pat by the end of our training. Now, the best way for you to learn is by using examples that are actual and real. And you know, something I really pride myself on is that I practice what I preach in the analysis that I share. So traders in the HEMA Ready tribe, they get updates from me. My members get even more detailed updates. And every single example we're going to look at here, I called out 2 of my members as it was happening. Okay, I didn't just have it like tucked away in my back pocket and to pull out as a beautiful textbook example someday. Anybody can do that. I'm showing you actual calls I made at the time that they were tradable. So I want you to type a Y in the chat so I know that you see the value of what you're about to implement here. But that's a big deal, that these are actual calls I made that were publicly shared. All right, awesome. So let's come back to our combinations of markets and timeframes, right? And mix it up again. Let's look at a stock on a daily time frame. Do we have any stock traders here? Type a Y in the chat or type what stocks you trade. Here's a chart of Netflix on the FANG complex. And again, we have these 3 steps that I introduced you to that we're going to walk through. So step 1 is to review the chart and assess the price trend. Notice that on the back of this chart, so for a daily chart, I recommend looking at least 6 months of history. You can see there was this high. Then the market traded down to this low. And I'm looking at the more major moves. Traded up to this high with a gap in the way. Down to this low, then came up to this high. Now it's sitting at what potentially could be a new low. So is this an uptrend, a downtrend, or sideways? That's right, it's an uptrend. Now this is specifically an uptrend with a corrective pullback in motion, meaning it is moving against the trend, but it looks like it wants to turn higher. Step 2, we evaluate the RSI power zones reading. Well, we look at where the RSI power zones are relative to the zone, looking at where the RSI value is relative to the zone. And here you can see it's between the 2 lower green lines, which by now you may know is the bull support power zone. Great. What's the step 3? Step 3, determine the presence of an entry signal between price and momentum. Now, the setup that was occurring between price and momentum unfolded and led to the following move. Taking us from the 271.22 low to the 423.21 high, creating a 56% move higher. And remember, I called this out to the tribe as it was happening. Now, I have a whole training that dives into RSI power zones for true mastery, and I'll show you the signal in session 2, because I can't teach you everything you need to know within an hour, okay? It would do you a disservice, and it would shoot you in the retirement. Yes, I said shoot you in the retirement. Money isn't just money, guys. It's the blood, sweat, and tears that it took you to make it, and you cannot afford to lose any of it. I'm here to help you maximize it. And of course, I can't teach you everything I've learned in 20 plus years in an hour. So warning, don't do this at home without help. After all, that's what brought you here today. If you could do this without help, you wouldn't be here. So in a moment, I'm going to show you what you've been missing, and then we can look at how I can teach you more in depth. Making sense? Are you getting this? Type a Y in the chat, guys, if you understand, because we're going to dive into another one of your favorites. But first, I have to know you're still with me. All right, let's take a look at another stock on the daily time frame. Rinse and repeat. Step 1, review the chart and assess the price trend. Here's a high, here's a low. Higher high, higher low. Higher high, higher low. This time, you guys tell me, is this an uptrend, downtrend, or sideways? And remember, we are assessing the trend first before looking at momentum, because momentum is derived from price. And you usually fare the best if you trade knowing the clear direction of price. Now, this is a lot like the Netflix chart previous, so that should have given you a clue. So yeah, we are an uptrend in price with, again, a corrective pullback in motion. Okay, it's just a pause, and it looks like it wants to resume higher, but we can't know for sure yet. Step 2, evaluate the RSI power zones reading. Where is the RSI here? Well, it is in the bull support power zone and rising. Now, here's the thing. For the determination of entry signal between price and momentum, guys, I was reviewing this live with my students in a monthly group coaching live, and we saw this setup together. Now, this is a really cool thing where you can use price and momentum to actually calculate a target for the market. So the target we calculated on April 10th in a review session was 39.13, an upside target. And then the market unfolded from there. And here's how it went. You can see that the market traded from the 26.60 low that was established on April 4th up to 39.13 on June 5th. And it continued higher from there. This was just the meeting of that minimum upside target, again, calculated from price and momentum, creating a 47% move higher. Again, I have a whole training that dives into all 4 of the RSI power zones, and I'll give you that setup in the system. I'm just showing you here what you didn't know that you didn't know, that trading can be simple when you follow the expert. Making sense, guys? Are you getting this? All right, sweet. Let's take a look at a different combination here. Commodity on a daily chart. Do we have any FX traders? This is a Swiss franc, FX. All right, awesome. So let's do it again. Step 1, review the chart and assess the price trend. Well, here's a little different. Based on the price action I've given you, there's this extreme high, a move down to this low, rally, lower low, lower high, lower low, lower high, lower low. So what's the trend in this situation, guys? Again, your choice is being uptrend, downtrend, and sideways. Right. This one is different, right, than the last two. This is a downtrend, a series of lower highs and lower lows in price. And here we are at the, sort of execution of the downtrend. There's not that much of a bounce happening. So it's a pretty weak market when you look at price alone. Next step is to bring in momentum. Step 2, evaluate the RSI power zones reading. So what do we see happening here? Well, the RSI is sort of rising up. It's technically in between zones, but if we look back at it over the 6 months or so that I give you in this chart, what do you see? It moved from the upper red zones to the lower red zones. It moved from the bear resistance power zone to the bear support power zone. This ties in with the downtrend that's in place, all right? Step 3, determine the presence of an entry signal between price and momentum. Now this time, the setup that occurred would have warned you that this downtrend is getting ready to end. So if you had any short positions on, you could start to protect your profits, lock that in. And if you hadn't gotten short yet, but were thinking now was the time, knowing how to manage this setup would have warned you to not do that. Sometimes knowing when not to trade, guys, when not to put a trade on, is just as important as knowing when to put a trade on, okay? Because you got to preserve your capital. That's the name of the game. So what unfolded from here was this huge move, and it had this low down at 0.9186, taking it up to 1.0050. Now in FX land, there's a little bit of calculating you need to do to figure out what that is in dollar terms, right? Because it actually depends on the actual exchange rate and everything else at the time. And at the time of this move, when this was happening, trading just one contract, the size of this move was $8,600. I'm talking about the size of the move, guys, not the size of your trade. But what if your trade was even 50% of that? What if it was 60%? What if it was 75%? It's all about being ready for the turn so you can maximize your profit. I'm very excited to be sharing this with you today because I'm really passionate about the work I do to provide traders with the best analysis and education to trade the market so you can take control of your financial freedom and live the life you and your family deserve. By now, you know that power zones on the RSI can really boost your trading. Because whether you're new to studying momentum or if you've been doing it for years, this approach can really help you extract more profits from the markets and be more consistent. And consistent profits is what it's about, right? Making sense? Type a Y in the chat, guys, if you want more consistent profits. I should see a Y being typed in from everyone who's here. All right, awesome. That's the result our trading family loves to see too. Like David, I installed the RSI Power Zones indicator, and it's just amazing how accurate it is on all markets. It actually gives advance warning before the price moves. So let me ask you, did I provide value for you today? Did you learn? Are you ready for more? All right, then it's time to master RSI Power Zones. So far, you've heard about how I've come to really benefit from using the RSI Power Zones. Here's what more of my students have to say. I was very impressed with the education HEMA provided that came with my indicator. HEMA's RSI Power Zones indicator has become the standard in all of my charts, said Rob. Norman shared, a day after learning one of HEMA's RSI Power Zones trend continuation entry signals, I tested it out on a 5-minute chart of Tesla. With this one trade, I made over triple digits, covering the cost of her newest course. I got your RSI Power Zones training, and the next morning when the market opened, I found UNH as a short candidate, using the weekly chart. By the time I sold a position, it nearly paid for the whole course. Thank you for sharing your knowledge and keeping your content reasonably priced, said Aaron. So will you be our next success story? Making sense? Are you getting this? How simple it can be to trade when you have help? Great. So imagine and picture this. You're finally able to turn your trading around and make money with trading and live the lifestyle you've always wanted, giving back to your community the ways you've always wanted to. Sounds great, right? Spending all the time you want with your kids and grandkids. Great. So here's what I've got for you. This system that can give you all this is the 4 Zones RSI coverage system. Before I give you this opportunity, let me show you the features and benefits using the system will give you. Rapid results. You can learn to use the system in as fast as 60 minutes and you'll be up and running. It's perfect for any account size, $5,000 or $10,000 or $100,000 or $1 million or more, you can trade this. You pinpoint your trades faster so it takes less time. Get more profit because it's perfect to add to whatever you're doing right now. Perfect for beginners, so easy that anyone can do it. Perfect for experts to diversify their accounts because the 4 Zones RSI coverage system gives you all this. But first, who is this not for? This is not for those who are trying to get rich quick. Right? Like anything worthwhile in life, trading takes consistent work to get consistent returns. So if you're here to play the slot machines, this is not for you. So who is this for? This is for those who are ready to analyze the markets like the expert to optimize and boost their trading. This is for those who want to diversify what they're already doing for additional profits. This is for those who are ready to step up and take action for their own financial freedom. Since you're still sitting here with me, you're taking the time to learn to boost your trading, you're ready to take action now because it's time to remember what you forgot to remember. You can let it be easy. Now, in my 4 Zones RSI coverage system, I give you my 20 years experience on a silver platter, and it's 100% focused on step-by-step systems, instantly accessible, starting with video tutorials, where I take you by the hand and I move you through the 8 phases of a trade. So you have a complete system to your approach so that you minimize mistakes. I give you my top RSI Power Zones trading signals from years of study and observation, with various real-world examples across multiple markets and timeframes. I walk you through the best entries, exits, and protective stop strategies so you can extract the most profit from the market using RSI Power Zones, and much, much more. Now, to make it even easier, you'll also have cheat sheets that you can download and print out and keep right by your trading desk. You know, back when I was in middle school, I remember I would learn something in a math class on a Monday, and by Thursday have a pop quiz. And I had one teacher who was awesome. He was all about our learning, and so he would let us bring in these cheat sheets that had formulas and terminology and more, so we can ace the test and learn faster. That's what I want you to be able to do. I want you to take these easy to read grids and step-by-step cheat sheets and be able to apply them to your trading. Okay, they'll be all filled out and you can keep them by your trading desk. It'll move you faster on your path to boosting your trading account with what you learn in the course. Awesome. Now you're going to love this one, okay? This is the very thing everyone's always pestering me to get, but I had to have it specially coded for you. So I'm also including the RSI Power Zones indicator on a variety of platforms, including MetaStock. You can download the indicator for as many platforms as you like, to as many machines as you like, as many times as you like, forever. I've had many traders email in and offer me hundreds of dollars just for these indicators alone, and I'm giving them to you here as part of the complete system. Now, I've included everything to set you up for success. The only thing you could possibly still need is for me to take you by the hand personally and help you. Actually, would you like that? Would that help you if I hopped on the computer with you and showed you live how it's done and answered your questions right there on the spot? All right, great. Well then, I'll give you everything, including me. Monthly group coaching for life. Once a month, you'll get together with me online personally, and we'll spend an hour together, and I'll personally walk you through the markets, doing analysis with open Q&A to help you become the trader that you want to be. Now, you can see I've built in everything you need to boost your trading with the RSI Power Zones. Now, here's the thing, all right? It's 2021, and the world has changed a lot just in the past year, right? And while the 4 Zones RSI coverage system is designed to teach you how to fish for RSI setups, when I give you the fish now and then, it does aid your learning. So you're going to love this brand new bonus that I'm revealing here for the first time. As a bonus, I'm giving you my new case studies, quick case studies. These are hot, timely, actionable updates on the RSI Power Zones activity, highlighting trade setups that I'm seeing instantly in multiple markets, hot off the press. And these will be added to your portal, and you'll get an email notification with every update. Okay. This is me pointing out what markets are actually actionable right now and the exact RSI Power Zone setup with a picture and explanation and everything that you can take to your trading once you have an understanding of the tools and methods in the course. Pretty awesome, right? So the 4 zones RSI coverage system with the on-demand video tutorials where I take you by the hand on how to best trade with the RSI power zones is valued at $1,997. The cheat sheets that you can use as a daily trading guide to learn the system faster and more easily are valued at $197. Monthly group coaching live. This is priceless, but if I had to put a price on it, this is easily $797 just for the first couple months because I easily charge $500 an hour for my one-on-one coaching. But you get me for life. The RSI Power Zones indicator, available for the most popular trading platforms with free updates for life, is valued at $497. Plus, you have the bonus of the quick case studies giving you hot, timely, actionable updates on RSI Power Zones activity across markets. So this brings the total to $3,488 and it's worth every penny. Now let me ask you, if all the system did for you is help you to trade an additional market this week, would it be worth it? Yes. If all the system did for you is help you finally make money trading with momentum, would it be worth it? Absolutely. If all the system did for you is help you make so much money with trading that you can quit your job, travel the world, and live the lifestyle you deserve, would it be worth the investment? Of course. The total value of this system is $3,488. And because I want to make an investment in your future, because I want you to see a return on your investment fast, for a limited time, I'm making this system available for one low, easy investment of $297. And you can get started now by heading to hemaready.com/metastock. And I'll make it even easier for you. When you visit hemaready.com/metastock and invest in this system today, I'm going to give you all this because I want to see you finally succeed in your trading, all right? So I'm giving you our personal 100% satisfaction buyback guarantee. So take action now, use the complete package for 90 days, and wear the tires off the system. If you aren't 100% satisfied with your investment, then I'll give you your money back as my gift to you. I want you to be 150% satisfied with the 4 zones RSI coverage system. And after all, my clients tend to stick around a long time and become my friends too. So follow the whole system. Okay, I want you to get out there and treat it like a rental car. Put it through its paces. Drive all over the country. Wear the tires off of it. And if you don't feel you've gotten far more than your investment, then I'll hop on the phone with you personally, work with you. And what I really want is for you to be totally satisfied. And that's what we guarantee. If that still hasn't happened, then I'll give you your money back. Simple as that. Again, the total value of the system is over $3,488. And I'm bonusing in the quick case studies to boost your trading faster. And for a limited time, I'm giving it to you for the simple, easy investment of $297. So go ahead and take action now. You can visit the page and sign up, and let me show you exactly what will happen when you join us. You'll immediately get a login access email with details to enter the RSI Power Zone System portal at my educational portal. All the training you need is right here, where you can get to it easily and get started right away, right here. You see that? And you'll get the Zoom link invite to our first live monthly group coaching as soon as it happens. Actually, it's ready for this Wednesday. So you'll be getting that this week. And also this other cool content, it's undisclosed bonuses, and you're going to love it. Okay, we love to over-deliver. So take action now because this offer is only available for a limited time and only for this MetaStock Online Trader Summit. So go ahead and visit hemaready.com/metastock to take advantage of this limited time offer and get my entire system for just $297. All right, I'm happy to entertain any questions you guys have. I think I have several minutes here, and maybe Jeff can let me know if there's questions coming in from other areas as well.
I will. I would be happy to. Kevin or Jay wants to know what number of days do you use for your RSI calculations?
So all of the settings are in the system, and it's best that you go in there and study it. I teach exactly what settings I'm using and why, and they're also synced to all the indicators in there. So he can get that in the system.
Okay. Other than that, Kevin said yes, yes, yes to all of the questions he just asked.
Okay, great. Awesome. Yeah, so this is something that I've been using for a very long time and just keep finding more awesomeness in this indicator. In fact, something you guys will see in there for whenever you're ready for it. Just this past month, actually just last week, I for the first time taught the advanced RSI Power Zones course to some of my students who had been using the indicator for some time. And I just keep being able to find really awesome, reliable setups from it, being able to use it in all types of market conditions, even making reliable calls for you, for myself during this pandemic year. If that's not a test, I don't know what is. And I've got the best guarantee in the industry here. Get to use it for 90 days. And if you're not happy, just let us know. So James is asking in the chat here, what platform can you use it for? Yeah, you can use it for NinjaTrader. So I'm here hosted by Jeff and MetaStock. So I will let you go to the sign up page to see the list of the other platforms that we use it on. Yes, yeah. So Thinkorswim, NinjaTrader, some of the other popular ones. But again, I want to respect the host here and keep the focus on the MetaStock.
Hey, I created the programming for MetaStock. Just, so it's top notch.
Yes, that was about maybe a few months ago or a year ago, I think now. It's been a little while, so.
Time is slippery like that, right?
Right. I see a question. I use Renko bars. Will this work on that? Yeah, so as long as you're plotting price bars based on time, Sanjay, that's the most important thing. So regular candlesticks, open, high, low, close bars, and anything where you have a steady interval of time, you can use the RSI Power Zones. So again, Jess, I'll let you know if there's, or you can let me know if there's any other questions off on the side. Or
we are not getting too many questions in YouTube.
Okay. All right. Well,
but there are a couple comments about how you did a great job.
All right. Well, I appreciate that. Thank you.
And it's only $2.97. So HEMAready.com/MetaStock. Give it a go. HEMA does a great job, and that's why we keep bringing you back.
Well, I appreciate it, and it's great to be here. So hope if you.
Here, couple questions.
Yes, $297 for lifetime. So $297 for lifetime means you invest this and you're set, James. That's it. So that includes monthly group coaching for life, like every single month with me. And the next one is this Wednesday, May 12th, after market close, 4:30 p.m. Eastern. It's in a Zoom. You'll get an invite. And the quick case studies are something I just started doing in January because the pandemic made me realize you guys need even more education support, and it's turned out great. And so that's a bonus that you're getting that hasn't changed the investment. So for FX, it's not separate settings. It's the same indicator, and you can use it no matter what you're plotting, guys. As long as it's price with time intervals. So days, 3-minute, weekly, monthly, doesn't matter. As long as they're evenly timed bars, everything I'm teaching in RSI Power Zones will work. So yes, you can go to the page to look at all the other platforms I have it for. Again, I am a guest of MetaStock. I will talk about MetaStock. And you know what? I really need Jeff to get my training up to speed so that I can come back and start using MetaStock to go live with you guys. Jeff, you think you can do that for me?
Oh, absolutely.
Right.
Spend more time with you? You bet. Good luck with that name, but do you give trading signal report on currencies?
So I'm going to call you Tam because I don't want to butcher the rest. So Tam is the first 3 letters of your name. I do not give short-term analysis on FX because that's not my primary trading market. I have a separate service where I give quarterly, like long-term forecasts, kind of like Gann-style forecasts on the FX markets. And so you can write in any other questions you guys may come up with to my team at support@hemaready.com. And they're awesome, Anna and everybody else, and they'll be happy to assist. But my baby that I trade, that I love, that I analyze is the E-mini S&P 500 futures. I also do the NASDAQ futures a few times a week because a lot of traders trade both of those. And I put out stock picks every week. So that's like the research part of what I do. That's every single week. Then I do quarterly long-term analysis on 20 top markets, and everything else is education that you can do at your own pace and, move through the various trifecta, I call it: price, time, and momentum. That's it. That's what's in my arsenal and does well for me and my traders.
Tam, I want to, if you don't mind, I'm very curious, Tam, if you'll let us know where you're from. I'd like to know. Here's another question about futures. Did you get that one?
Oh, yeah. So, Serena, yes, absolutely. You can use the RSI zones on futures. So, like I said, I have the skinny on the mini that I talked about early on, guys. I still write it, okay? And I still write it in the same way I used to when I started making it for my dad, and it's carried out. It's a very straightforward format, but highly effective. And if you're interested in my futures research and my stock picks, that's my skinny on the market service. And when you sign up for the 4 Zones RSI coverage system, you get a very special once time only, even better access price to the skinny. That's what we call it in-house, the skinny, okay? But yeah, absolutely the RSI power zones work on futures. That's where I discovered half my setups was on the E-mini S&P 500 charts. So Tam's from Nigeria. There we go. That's where this cool name comes from. Okay, awesome.
Thank you for sharing that with us, Tam. I was really curious. All right, Hema. Thank you. Right. So that's hemaready.com/metastock is where you can. Oh, there's another question that comes in.
Yes.
Go ahead.
Okay, great. So Carla, great question. So her question is there a recommended amount of capital you should start with to use the system? So the best answer to almost any trading question is, it depends. I know, boring, but true, okay? So Carla, I don't know what you're trying to trade out of the gate. It depends on what you're trading, and it depends on what country you're located in. It depends on the rules around speculative investing, which is what we're all doing here. So I don't have a blanket answer for you, but if you write into my support team with a little more information, they can at least get you started in the right direction with where you can start with my education. That's the safest answer that I can give you that will send you still in a good direction. Cool.
All right. I was wondering if another question was going to sneak in. Keep a great job today.
I am the anchor, right? I'm the relay anchor bringing it home. So,
absolutely.
So I'll stay here for my 8 minutes if you guys have the questions, and unless you Jeff got something to wrap them up with, which is fine. You can just take it back whenever you're ready to. So, guys, all the settings are in the system. Trust me, you would like the education with the settings, because I have had traders who would try to backtrack and figure this out for themselves. They get burned in their trading because they didn't come and just learn. $297 for life. That's for life. You can come get this and not get anything else in my educational arsenal, and that's fine. And if you ROI on this, I'll be extremely happy. So give it a chance. It's still got a money back guarantee, 90 days, 3 months to use it, and go from there. But it won't always stay this special. It won't always stay this way because my tribe is growing and my offerings are changing. So definitely take advantage of it sooner than later.
Gabby's like, is the $297 a one-time payment? Yeah, one time for life.
Yeah, that's it. So I have this thing where, because I am not, running data and I'm not like offering a software or something like that. I give you the indicators, you set them up. There's no maintenance after that. It's all done. If there's an update to the indicator, we'll do that for you. I have a bunch of programmers. I have Jeff at MetaStock, and we'll take care of it and make sure it's updated in the portal, guys. But I have moved away from subscriptions and auto renewals and all that. It's just, I used to be in your seat. Remember, I used to learn when I was with my dad. I would go with him to the expos and go with him to the seminars and find that we would get really excited about something, sign up for it, and then we'd like forget about it and then find all these charges on our card. You can refund and deal with all that headache, but I don't operate that way now. I might change it in the future. This is just a test. But since last year, I've decided one payment, that's it. You get what you get. And if you ROI on it, if you make your money back and then some, I know that you'll want to come and learn more from me. So no subscription here. That's it. $297, you're set. I know it's hard to believe. That's why we get that question a few times. All right. Well, Jeff, I'll let you guide the way here since you can see all the other interwebs. Okay. No, you're fine.
Yeah. Only Greg could hear me through the wall. I wasn't talking loud
Okay.
enough. Thanks, Hema. I appreciate it. Great job today, and we appreciate you coming in and hitting a home run for us.
All right. Well, thank you. Thanks for having me. Take care, everyone, and I look forward to seeing you on the inside and catch you soon. Bye-bye.
All right. Thank you, Hema. All right. Very good. I want to thank all of the speakers that came today. Hema, of course, always does a really good job. I think everybody did a really good job today, and I certainly appreciate that. Appreciate your coming. I hope you learned something today. For those of you that were here all day, I hope you learned something. Even those that came for a little bit, I guess I hope you learned something too. But I appreciate it. These things are a lot of fun for me. I hope you enjoyed it as much as I did. So I do want to kind of talk one last time about our Summit Action Pack. It's going to include all of the products that were talked about today: Cattle Profit System 2, Vince Vora's Victory System, Rick Sadler's Patterns for Profits, the Barry Burns Top Dog Toolkit. You're going to get 3 months of the Learn MetaStock program, Unleash the Power of MetaStock, and 2 years of Stocks and Commodities, all as part of this special package. And this is a package of some of our most popular products. I mean, CPS and Vora Victory have been huge, and so have all of them. But this is a great collection of indicators and softwares for MetaStock. The discount is more than 50%. I was able to work out the math so that we got it under $2,000, $1,895 today. You can take advantage of that at metastock.com/summit deal. You can give us a call at 800-882-3040, and you can visit us online at metastock.com/saleskchat via our sales chat. The last thing I'm going to remind you is that we do offer all of these, except for the Learn MetaStock $99 subscription with a money-back guarantee. So you can try them all out, see which ones work for you, and keep them if they're helpful for you. And I'd recommend you do that. MetaStock itself, we will offer you, as part of this, a buy one, get 3 months for the price of one, basically, on that. It's a software that's been rated number 1 in its price category for 27 years straight. And there's a reason for that. There's a reason that we've had such a consistent long-term user base. And I want you to try it. I want you to become part of the MetaStock family, and I hope you enjoy it. So give us a call, 800-882-3040. You can chat online with us at metastock.com/saleskchat if you have questions that we weren't able to answer at any point today. Thank you for coming today. I hope it was helpful. Stay healthy, and we'll see you at the next one.